against all possible types of attacks that can come in with AI, and also make sure that their AI can be adopted securely. And that's the mission of Proofpoint as a company. So we're certainly seeing strong momentum globally in our business, as well as in parts of the world like India, where we had almost no business 2 years ago.
Yeah, I mean, so almost no business 2 years ago. And the truth is, Proofpoint, it's a name in this game. You could have set up a center of excellence anywhere. So why India and why now?
India is actually a very interesting market. India
To the world
has
like India, where
emerged
we
to
had
be,
almost no business 2 years ago.
not the first
Yeah,
adopter, but certainly an early adopter of technology, including AI. A lot of businesses have been digitized, and the scale of Indian businesses across major industries like banking or in public sector or IT services is not small. It's complex, and so as someone who serves large enterprises, we get a good flavor of early adopters that are dealing with technologies. And all of a sudden, because of mythos and just in general AI, the cybersecurity awareness and priority has become pretty high in India over the course of last 6 to 12 months. It's now a boardroom topic. It's among the business leadership thinking about how this cybersecurity is not a technology problem, it's a business risk. And so we saw a combination of what we see in terms of market momentum, changes, new compliance requirements, along with just amazing talent availability. This is a great place for us to expand and build a purpose-built center, which will be building new models to detect intent and behavior. Because this AI, when you adopt it in the enterprise, it sort of acts like humans, right? It is a non-deterministic technology. It will do certain things when you ask it to do, but you can't predict what it will do. So you need some kind of almost AI-based models that's controlling the intent and the behavior and putting the right guardrails on these AI agents. And that's what our new lab is supposed to do. We already do some of that in our innovation and products that we deliver, but we think that the pace at which this AI technologies are innovating, we're going to need a couple of hundred people that are dedicated to solving it. And we thought Hyderabad, with the right talent and proximity to the customers, would be a great place to set up that center.
yeah, absolutely. And we can get into talking a little bit more about why talent is so important a little bit down the line. But I first want to talk about some of the studies that Proofpoint has done and what they have found out about the cybersecurity risk in India more specifically. And I was quite alarmed by one little bit of data, which was, it's a more than 50%, that since AI implementation, Indian companies are being attacked way more frequently than before and having to head off these attacks. But actually having people who are trained to deal with it, and in some cases, even where it's factored into the corporate policy of how it's contained, people are actually not sticking to the rules. So it's kind of a challenge to win hearts and minds and say it is actually so important. In fact, it's imperative that we adopt these measures. How do you get beyond, making people realize they cannot take this technology for granted?
Yeah, because I think the thing is, at this point in time, as consumers, our expectations are becoming dictated by interfaces that are determined by, provided by more generative chat-like experiences where everything is presented to us in form of recommendation with easy sort of intelligent conversations. Business applications traditionally have had more simplistic click and follow workflows. That's kind of how the business applications have been built. And so as those business applications are transitioning, new interfaces are coming in, which consumers and end users, all of us as users of technologies, we expect. So as a result, every enterprise is getting a flavor of AI into their enterprise. Okay, and that's where every enterprise sees it. They talk to their business partners that are providing technologies, and they say, look, our roadmaps are all about enabling these new experiences that are going to make your workforce more productive and enable new use cases, which every business wants to get. But then very soon, their confidence level in terms of how these new systems, when they come in, and really are they going to protect it, goes down. Why? Because they haven't thought about this, whether the AI that's coming in, A, is sanctioned. Are people using really the sanctioned AI, and what AI is doing? Because AI acts like a human in some extent. It's artificial intelligence. And so it acts like almost an insider that poses a risk to business data and information. So is your data and information protected? Do you have the right degree of access? Do you have the right degree of control over, coming back to what I mentioned, intent of what these AI is going to do? And that's where the lack of confidence lies. But the good news is that the AI technology is happening, and as the awareness of the fact that this needs to be solved goes up to the boardroom and the business leadership, the cybersecurity teams, in my conversations while being in India last 48 hours or so, clearly shows that they're aware of the problem and they want to go invest in it. And now they're starting to get the right degree of support from business leadership in boardrooms.
Yeah, absolutely. There must be, I would imagine, a real sovereign push to make sure that India is a protected environment when it comes to AI. What are those conversations looking at, and sort of how much support are you getting from regional or central government in actually making all of this happen? Because of course, to set up a center of excellence, that is a big deal, it's a big job, and it does take local and sort of, countrywide commitment.
100%. These when we are serving largest possible banks and public sector enterprises, they have their regulatory commitments to make sure that the information stays, in certain cases, in sovereign boundaries of the nation, like in India. And in other cases, it has to be in the four walls of their own enterprises, and that whatever way they define their four walls, whether it's in their own data centers or sometimes if they have their own instances of cloud, you do it that way. Now, what Proofpoint has enabled is to provide the required sovereign controls and the required, what I call, secure enclaves that enterprises and public sector can build so that their data never ever leaves them, and they're still benefiting from all the sophistication of this intent-based model protection. That's the uniqueness of our technology that we bring to the market. So you get the benefit of data in your sovereign as well as in your enterprise control, but you still are belonging to a network to some extent of other enterprise customers globally, benefiting from how each one sees as risks, where our models continue to update based on that intelligence for all of our customers. That's the uniqueness and a little bit of a secret sauce of our technology.
The secret sauce. Sumit, I think what's really interesting is that this center of excellence, it isn't just for India. At least that's the impression that I get from sort of reading through the notes about it. This is something that wants to set an agenda for the world. And I think what is interesting about that is, I'm just sort of thinking of the metaphor of the financial technology industry. There was a lot of talk about how regulators had to catch up with what the implementation of fintech actually meant for consumers. And we're seeing that time lag as well between the development of AI solutions or AI-centered solutions, the impact that has had in terms of cybersecurity, and then how you actually protect consumers. So even though you want to be a global center of excellence, I think it's really interesting that as private companies are pushing ahead on this, but they need to work hand in hand with governments as well. So how does that work, and how is that going to work? Because it has to be a coordinated effort, surely.
100%. So our local presence in India, you're 100% right. When we're building the models, the proximity to the customers, which have requirements that are very similar to global requirements, feed into the technology and innovation that serves global customers. But it doesn't end there. For example, yesterday we announced close partnership with the public government, which provides TPTPA, which is the new privacy requirements in India. We understood those. We understood how those work. And now we have technology and solutions working closely with public sector as well as our customers that now have to provide, compliance with that regulation to make sure our solution just provides that level of support. So we are very closely assessing how the new regulatory environment is moving and where needed, helping provide input and making sure that as those regulations come in, our customers, we can be the partners so that they can truly use our technology to comply with them.
Yeah, Sumit, I said earlier that we would talk about the talent. So you mentioned yourself, that Hyderabad is such a hotbed for that. You're going to have, you've already talked about how you're going to allocate the first 100 people, what they're going to be looking at. But I'll be honest, when I was reading about this Center of Excellence and I saw the number of 200, I thought, is that enough? So is this just the beginning? You know, what are your projections? How big do you think this could get, first of all? But also, again, you know, there is a strong emphasis from central government in India about addressing a youth employment crisis. How do you keep on providing jobs for millions of Indians? I am assuming that part of your strategy works hand in hand with this.
It does. It does. You're 100% right. This is just the starting point. You know, cybersecurity has always, it's been one of those industries where there has always been shortage of talent. The amount of just information at this point in time, sophistication, and the amount of information that today in any enterprise you can get from various cybersecurity products and systems that they're running is immense, okay? And there is all kinds of engineering efforts that goes in making sense of out of all of that information and somehow detect an incident that all of a sudden needs to be investigated, okay? That's the life of a cybersecurity professional working for an enterprise. And it's probably the most, to some extent, thankless and highly fatiguing role. It's actually one of the roles which has been talked about, and one of the profession that's been talked about as having, you know, the most kind of mental stress that comes with continuously assessing this data, finding needles in the haystack in a job that potentially, you know, and then when you find it, you just 24/7 investigating it. So we think that the AI helps in it. To some extent, AI is going to make some of those finding the stuff in an AI agentic way easier, faster. So that doesn't mean that there is going to be reduction in job. AI simply is going to become a force multiplier for cybersecurity workforce, number one. I think that's here, and it's coming and changing rapidly. But secondly, right now, what we have seen with different OpenAI news that we saw, or Anthropic news that we saw in terms of how these frontier models are penetrating enterprises, you need to engineer your overall system, how your coding is done, and how your entire enterprise is secure, which what I call shift left. Rather than just looking at a bunch of things in the cybersecurity noise of alerts, you're engineering and hardening your system to protect. And that will require a plethora of new skills. And I think an AI native workforce that understands how AI works, the youth that's coming in will be better positioned to serve those roles.
Okay, we'll leave it there. I hope there will still be work for the rest of us, Sumit. I know that you have a very, very busy trip in India, so thank you for joining us from Mumbai. We really appreciate it.
Well, thanks for having me.
Sumit Dhawan there from Proofpoint. Still on AI, CNBC's Andrew Ross Sorkin speaks with SB Energy CEO about a massive new energy deal aimed at powering the future of AI. Have a listen.
We're a power-first, community-focused infrastructure company. We're backed by SoftBank, OpenAI, now NVIDIA. We build big projects, big infrastructure like this. We first start with power. We want to focus on power, partner with utilities, partner with communities, make sure rates don't go up, protect ratepayers, protect resources like water, and then invest in communities. So we want our campuses to be a cornerstone of the community. We're going to be there for decades, and that's what we do.
So explain the economics of, for example, this plant, that's this data center, and what it's going to cost to build, how you think about the chips in it. We keep talking about the chips are collateralizing part of this, what the depreciation schedule is for these things. I mean, I think that's a sort of a big part of what you think of the longer term implications of this ecosystem.
Yeah, so our role in the project is really the developer. So we're securing the land, we're doing the power solution, and we're going to build the shells, the turnkey data centers. We're not working to bring in the compute hardware, the chip and system. That'll be OpenAI. In this case, NVIDIA has secured exclusivity on the site, so it'll be the full NVIDIA suite of products. But our role is, if you think about maybe a $500 billion project, our role is 30 to 40% of that, and then the compute hardware comes in after. So if you take the news yesterday, NVIDIA is working with us on our piece of it. So that's the scope of the announcement. They're securing the exclusivity for the rest of their hardware, but this isn't them financing the chips.
Do you think, though, of the idea of NVIDIA financing even part of your piece of it as a net. I mean, could you find financing? I guess the better question is, could you find financing elsewhere?
So we ran a competitive process for the site. It's a really unique site. It's one of the most unique sites in the world to be at this scale, to have this amount of community support, to have a power solution that is firm. So we ran a competitive process, had lots of interest, and the winning bid was a bid between OpenAI and NVIDIA. It was a joint bid. OpenAI is paying the lease then. So our lease is a 20-year lease with OpenAI. They're paying their own way. They're our customer. And we're really excited to support them with something like this. What we've seen increasingly is compute is really the critical constraint in the industry. Companies like OpenAI, more compute allows them to have more intelligence, which yields more products, which yields more revenue. And that's what we're doing.
Do you have any concern about their ability to pay over the next 20 years?
So if you look at the frontier models like AI, like Anthropic, we're seeing tremendous revenue growth, tremendous customer adoption. And again, compute is really that scarce resource, and that's what we do as a company.
Okay, the market is open in Mumbai. We're going to have a look at that. We're going to be back in just a couple of minutes.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box streaming on CNBC+.
Edge just opened up in Europe with a French government cooperation agreement as well. How significant is that deal for Edge and for Abu Dhabi?
Europe is where the next budgets are. We would like to contribute to the security of Europe. We feel that we have a value. We feel that Europe have recognized this value by accepting us into Europe. These are facts. We have a very nice footprint in Europe, and this would have not been possible if the UAE wasn't accepted in Europe as a partner, knowing and trustworthy with NATO and the way we firewall things. Plus, you need another player in Europe. Even the big players today, we're working with them. There is always these collaborations, but they only start when you put your ego aside. There is always someone better than you. And you need to be on this learning curve forever.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
What happened today?
The market had to resort to defense.
We've got a developing story out of Washington.
What's moving in real time?
What did the numbers tell you, pro or con?
Be ready for tomorrow after the bell.
There's a wait and see about a lot of things for tomorrow, Mike.
Completely.
Melissa Lee, Mike Santoli. Closing Bell Overtime. CNBC.
Indian markets are coming online. Let's just take a look at those opening numbers. So we are seeing some selling pressure out of the gate around the 24,115 level or so. But take a note of the rupee, 95.7350. We've got the dollar gaining on the rupee, and once again, and we've been seeing this consistently over the last 4 days or so, traders telling Reuters that the central bank is likely selling dollars to limit rupee weakness. But these are reports from traders to Reuters, worth noting that. Okay, in India's IPO news, Temasek-backed Milky Mist surging approximately 30% in its Indian market debut yesterday, reaching a valuation of nearly $1.5 billion. The dairy giant opened at a hefty premium after raising $163 million in its initial public offering. Investors are betting on growing demand for the company's high-margin dairy products as it expands beyond southern India. So let's look at how the stock is performing. There you go, up more than 9%. Quite the adverse of what we're seeing in terms of the general market sentiment. Now, still on India, an unprecedented move, the annual general meeting of Tata Sons, has been adjourned for the first time in its 180-year history due to a lack of a quorum. TV18 reporter Rachna Dhanranjani was at Bombay House in Mumbai for the meeting.
Well, the 108th annual general meeting of India's largest conglomerate has been adjourned, and not for lack of attendance. The chairman of Tata Sons was in the room in Mumbai at the group's headquarters at Bombay House. Joining online, the chairman of the trusts that own most of the company and the chief executives of Tata Motors, Tata Steel, Tata Power, Tata Consumer, Indian Hotels. Almost everyone who matters in the group was present, and they still could not do business because of a single missing nomination. Tata Sons is the holding company behind Tata Consultancy Services, Jaguar Land Rover owner Tata Motors, Tata Steel and Air India. And about 2/3 of it belongs to a set of philanthropic trusts. And the company's own constitution says a shareholder meeting is only valid if the two of the biggest of those trusts jointly send a representative, that is Sir Ratan Tata Trust and Sir Dorabji Tata Trust. But they could not, because since May, Sir Ratan Tata Trust has been barred from holding board meetings by Maharashtra's State Charity Commissioner, pending an inquiry into who validly sits on its board. Repeated attempts at relief have gone nowhere, as we've been reporting for the past couple of days. So the annual accounts, the dividend and the chairman's pay are all now stranded, along with chairman's reappointment as a director. So what happens from here? Well, Tata Sons will notify a date for the next meeting. In the meantime, the group is expected to ask India's company registrar for more time. That is what our sources are indicating, and that could be up to 3 months. In the meantime, the charity regulator hears the trust matter on the 8th of September, which would be before the 3 months end. Running behind all of it, Chairman Natarajan Chandrasekharan leaves from his post in February 2027 as his second term at the company comes to an end. Now, the committee that has to find a successor needs 3 nominations from those same 2 trusts. So it's not just this meeting and 1 nomination and the stranded agenda, but the process of choosing the next chairman of the salt to software conglomerate is hanging in the balance too.
TV18's Rachna Dhanranjani, who was at that adjourned meeting. Meanwhile, Amazon India's marketplace arm reports its first operating profit in 13 years. The company reporting a profit of $20.5 million for the fiscal year 2026. Total revenue for the e-commerce giant in India crossing $4.2 billion, while operating cash flow surged to more than $886 million. That is all the time we have for you on Inside India today. A day when Asian markets are falling generally and across the board, only the Hang Seng eking out a gain, and India markets also opening the session in negative territory. Stay with us on CNBC.
Halftime Report, weekdays streaming on CNBC Plus.
As the Asia trading day begins, join me for Squawk Box Asia. We're live across the region, covering what you need to know from here and around the world that would shape the business day. Join me for Squawk Box Asia, only on CNBC.
I personally risked everything to make Hyrox happen for me. For whatever reason, I went all in, literally, and I didn't have a plan B.
Moritz Forster had already reached the top of his sport. Olympic gold in Beijing, Olympic gold again in London, then bronze in Rio. But after he left field hockey, he was searching for something most athletes never get back, a second arena. The idea became Hyrox, a standardized indoor fitness race built for the millions of people who train in gyms but did not have a sport of their own.
In 2026, we currently sold 1 million tickets, and with roughly another 500, 600,000 to be sold till the end of the year. And we're operating 34 countries.
The format is simple and unforgiving. The same race, the same order, anywhere in the world.
If we would change the format, it would just not be Hyrox anymore.
I love the story. I love the drama that is business. A great interview is when you can get the subject to tell you something that you never expected, that you never imagined. My ambition is to help the viewer connect the dots, to understand the context so that we, all of us, can actually make our own judgments. Oh, I love what I do. I can't imagine doing anything else.
Good morning, welcome to Access Middle East. I'm Dan Murphy in Abu Dhabi. Straight to your top stories this hour. Breaking overnight, the UAE suspends all trade and financial ties with Iran after Tehran launched 2 ballistic missiles towards the Emirates, triggering emergency phone alerts to residents here. Plus, President Trump declares Hormuz new U.S. territory. Analysis straight ahead. Also today, oil prices edging higher, Brent back towards 91 USD. Global bond yields trading at multi-decade highs, pressuring Wall Street and Asia stocks. And beyond the barrel, Aramco forming a joint venture with Saudi Arabia's mining company Ma'aden in a bid to tap the kingdom's vast mineral industry and diversify its economy away from oil. It's just past 8 a.m. here in Abu Dhabi. Good morning. We'll kick it off with a live look of how Asia is trading this session. As I mentioned, rising bond yields pressuring Wall Street, offering a weak lead and certainly keeping a lid on any equity gains across the region today. You can see here the Hang Seng is the only outperformer, better by 0.24%, but heavy losses today filtering through on the Kospi, down by 5.6%. The Nikkei 225 also 2.6% weaker. Oil prices continuing to rise this morning, though. Both benchmarks up around 4% so far this week and currently holding near 4-week highs. Brent crude flirting with $92 a barrel this morning. 91.67 is the level, up by 0.7. WTI at 85.61 also up by around 0.8%. President Trump says the Strait of Hormuz is open. In a post on Truth Social overnight, he says the waterway is open and operating and that all water mines have been removed or detonated. He adds the US naval blockade of Iran remains in full force. But US Central Command has not echoed that claim. Asked by CNBC to confirm that the strait has been demined, CENTCOM referred us to the White House. Meanwhile, President Trump also posting an image declaring the strait a new US territory overnight. In the Oval Office on Monday, he called that a great idea, saying, quote, we control it with the blockade. Experts say that would violate international law. And the diplomacy is gone. President Trump also now saying there are no talks or conversations going on or scheduled with the Islamic Republic of Iran. That reverses his own position from 2 weeks ago when he accused Iran of denying talks that were underway. It follows his decision to rule out extending the 60-day ceasefire, which expired on Monday. Meanwhile, Iran's Mohammad Ghalibaf breaking his recent silence, saying that the strait will remain closed until the US fulfills its side of their agreement.
Let me be clear. Until the United States fulfills its commitments under the agreement, including lifting the blockade, releasing frozen assets, lifting oil sanctions, ending threats and military operations on all fronts, and implementing the other conditions to which it committed, the Strait of Hormuz will not reopen.
Meanwhile, weeks of calm interrupted here in the UAE after the country came under an attempted Iranian missile attack overnight. The Ministry of Defense says air defenses detected 2 missiles launched from Iran towards the country. The first fell outside of UAE territorial waters. The second fell inside them. The Ministry of Defense says Iran was targeting maritime navigation. For its part, Iran's foreign ministry denied any involvement, but the context matters here. Only last weekend, an ADNOC vessel was hit by a missile while transiting the Strait of Hormuz, an attack Abu Dhabi also blamed directly on Iran. And Abu Dhabi's response is economic and sweeping. The foreign ministry says that, quote, in light of regional escalations that undermine regional and international peace and security, all trade, commercial exchanges and financial transactions with Iran have been halted until further notice. That is significant. The UAE has been one of Iran's most important commercial partners for decades now. The decision also protects Dubai and Abu Dhabi's banking sectors from what could be secondary global sanctions, as reports suggest the White House is preparing an even bigger package of economic measures against Iran as soon as this week. Emirati state media also reports President Sheikh Mohammed bin Zayed received a call from President Trump on Tuesday. Reaction on the ground here has been strong. The prominent Emirati lawyer and writer Dr. Habib al-Mallah posting on X, calling it a direct blow to Iran's economic lifeline. Al-Mallah said the enemy knew of the UAE's military readiness and its security vigilance, and today it knows the weight of its economic decision. Iran's Foreign Minister Abbas Araghchi told State News that Tehran still wants a peace deal with its neighbors and a permanent end to the war.
Naturally, prioritizing neighbors also entails certain requirements. One of those requirements is eliminating any tension in relations with each of our neighbors. It also means expanding relations and creating new grounds and new capacities in these relations. That is why, alongside our neighborhood policy, we have also launched a policy of provincial diplomacy.
And of course, the rest of the Middle East and the GCC feeling the weight of continued uncertainty around the war and the Strait of Hormuz. Qatar says reopening the Strait of Hormuz could clear the way for a resumption of US-Iran talks as Doha pushes for a return to the ceasefire. Here's Qatar's foreign ministry spokesman.
The trajectory of events we would like to see in Qatar is an agreement on the opening of the Strait of Hormuz, which would coincide with the resumption of the ceasefire and the resumption of the talks. Are these parallel lines, converging or diverging? It's not very systematic on our end, but what I would say is that the agreement over the Strait of Hormuz would make it much easier for us to resume the talks between the United States and Iran.
Meanwhile, the Iran-aligned Houthis claiming another attack on Saudi Aramco's Jazan refinery. Aramco did not respond to CNBC's request for comment, but if confirmed, the drone strikes would be the Houthis' third attack on an Aramco refinery in 2 weeks. Well, let's kick off the live analysis this morning with Daniel Shapiro. He is a former US ambassador to Israel. Joining me live this morning, Ambassador, welcome into the program. Let's start with the UAE here. As you've just heard, 2 ballistic missiles launched from Iran, and Abu Dhabi has now halted all trade, commerce and financial transactions with Tehran. Just how significant is that development?
Good morning, Dan. It suggests we are in for a long slog. President Trump is trying to argue that the Strait of Hormuz is open for business, but it's not. The United States continues to blockade Iranian ports, and Iran continues to disrupt shipping, sometimes with the kinetic means, the missiles that you just referenced. It does appear that President Trump is perhaps shifting less to a military strategy of additional strikes against Iran, although maybe maintaining the blockade, and more to an economic strangulation strategy of tightening sanctions. And I suspect we'll hear more announcements out of Washington later this week. It's probably the case that the UAE announcement that it's going to suspend all of its financial transactions with Iran, and it's, of course, long been a trading partner, even in wartime, with Iran, suggests that the United States is lining up its partners in the region to support that strangulation approach and strategy. And I expect we may see more of that from other U.S. partners in concert with the U.S. But that doesn't mean this is going to end anytime soon. Iran has certainly shown its willingness to endure a lot of pain, and it also knows how to impose pain in the other direction as well.
Ambassador, let me pick up on that point you made about the UAE here. As you say, the UAE has really been one of Iran's most important commercial partners for many decades now. What does cutting that off actually cost Iran?
It's an important outlet for Iran, although probably less so in recent months during this war, but it has often been a point of transshipment of Iranian goods, and certainly the use of the UAE financial sector to conduct various transactions of different kinds. And the UAE has sometimes evaded sanctions and sometimes gotten waivers from sanctions to enable that. So if Iran loses that in its entirety, that will be an additional lever of pressure on the Iranian economy. But that economy is already under great pressure, of course. The U.S.-led blockade means very little is coming in and out of Iranian ports. Iran has to try to find other avenues to export the oil it does produce, and many products are not coming in. And we know that the Iranian economy is really under great stress. So it will add pressure, but I think it will take time. Always these measures take time to really bring their full weight of impact. And so again, with Iran knowing how to endure a lot of pain, with the regime really quite apathetic or even worse than that about the economic impact on the Iranian people, so long as they don't rise up in protest, it doesn't mean that this will bring Iran to its knees and completely surrender its current position, which is that it will control shipping through the Strait of Hormuz.
Right, and if the US is now seemingly pivoting to a new strategy of economic warfare, then what type of measures should we expect to be announced if the intent is to ultimately tighten the economic screws on Iran here? As you say, Ambassador, Iran has shown real resilience in recent years to that barrage of economic sanctions that it's faced, not just from the US, but from other international partners as well. What more can the US actually do?
It's a good question, Dan, because at some point you have used all the tools that have real impact. There can always be additional secondary sanctions that can be applied, and perhaps towards Chinese or Russian or other neighboring countries, firms that are still able to do some kind of business in Iran. There are tariffs, President Trump's favorite tool to apply against countries who are conducting any kind of trade with Iran. Again, a sort of a secondary tariff. And, you know, there are pressures that can build up over time for countries who want to avoid that kind of punishment by the United States and want to retain their access to the U.S. market and avoid being tariffed or sanctioned. But again, I wouldn't overstate how quickly that can bring about the change that it may be intended to try to bring toward. Usually these economic warfare strategies take months, maybe even years, to really feel their full impact. I recall working in the Obama administration, the sanctions that President Obama led to get multilateral sanctions, first through the United Nations, also additional sanctions with the EU, that eventually brought Iran to the negotiating table for what turned out to be the JCPOA, the Iran nuclear deal. But that was a 2, 3, 4-year project to impose such extreme costs on the Iranian economy that the regime finally showed more flexibility in those talks than they ever had before. So it could be a project of years, not a project of weeks or months, to achieve the desired result.
Ambassador, let's shift to the tone change that we've heard from the White House in the last 24 hours as well. There appears to be some view forming now that, maybe not a view, maybe a realization, in fact, that the United States is now in a situation in the region that is increasingly complex to untangle. President Trump saying on Truth Social that there are no talks and none scheduled. That's despite weeks, if not months, of the president saying, hey, Iran is begging for a deal. Was a diplomatic solution ever genuinely available here? And what do you make of what the president is now saying about the trajectory of this situation?
First of all, the president and his team are not on the same page. The same day that President Trump put on social media that there are no talks scheduled, maybe it was 24 hours after, Jared Kushner had said there were intense talks at all levels of the Iranian government. It seemed from that perspective that it was the United States leaning forward to see if a deal was still possible, at least with those elements of the Iranian system that wanted one. President Trump always likes to make it appear that the Iranians are the ones begging for a deal, but it actually doesn't appear to be the case. He has misjudged this effort really from the beginning. He thought it would take a few days after the experience of removing President Maduro from Venezuela for the regime to just crumble and the United States to be able to pick an alternative regime. He then said the campaign would take 4 weeks, 5 weeks, 6 weeks. That was until early April when the ceasefire came into place. Then an MOU was eventually reached several weeks later, and the MOU was basically stillborn. And here we are in almost month 6 of this conflict, and it's really no closer to a resolution. The president is resorting to kind of AI memes of the United States having ownership over the Strait of Hormuz, which is a ridiculous proposition. Meanwhile, the real control of what's actually happening in the Strait of Hormuz is determined by Iran's disruption of that shipping. Iran and Oman are negotiating, and that may be the best hope of finding some means of getting the strait back into normal transiting. But Iran will intend to try to derive revenue from that. It's now also insisting that the terms of the stillborn MOU, various sanctions relief and economic reconstruction funds be available to it. I don't really think that's likely to happen anytime soon. So we're in a stalemate. We're just in a stalemate. Economic pressure might build over time, but Iran will be able to hold on to that control of the strait. The United States will be able to maintain the blockade. And if Iran feels the pressure is building too much, either through military or economic means, it still has many tools available. You mentioned the Houthis earlier, disrupting shipping in the Red Sea. There are additional strikes that could be conducted where you're sitting on Gulf energy targets. There's, of course, drawing Israel back into the conflict. There are many ways Iran could take a crisis that seems to be at kind of a low boil and dial it up when it feels under pressure. And it may feel a real opportunity to do that as the United States gets closer to its midterm elections, feeling that they can really impose a significant cost and punishment on President Trump by driving up oil prices and therefore gas prices and other inflation in the United States, just as Americans are going to the polls.
Yeah, you really do get the sense that the Iranians still have some degree of leverage here. And just on the issue around the Strait of Hormuz as well, you flagged the president floated making the strait U.S. territory. Just setting aside the legality of that, what does an idea like that actually do to America's standing in this region, particularly in the same week that the president also threatened to bomb the S out of Oman because it was negotiating with the Iranians to reopen that waterway?
Well, it's just another way the United States is alienating the key partners that it needs, not just in the Middle East, really all over the world. Of course, the idea of the United States taking ownership of international waterways when it's been the United States that has been the guarantor of freedom of navigation in international waters for centuries is ridiculous. The AI slop that he used to express that also called it the Persian Gulf, something that American officials tend to avoid to not alienate their Arab partners in the region who prefer to call it the Arabian Gulf. We usually just call it the Gulf. But it's quite disrespectful to the countries of the region. It's never going to happen, of course. Making threats to bomb U.S. partners that help resupply the U.S. Navy, including ships that are really under great stress, like the USS Abraham Lincoln, which has been reported on, and that's Oman, is a crazy thing to do. It's the same period of time that the United States, of course, is withdrawing an aircraft carrier from the Indo-Pacific to replace the Lincoln, and so we won't have the kind of coverage of our to help protect our allies in that region. The same week, the United States and the president announced himself that he was curtailing or reducing the joint military exercises with South Korea, almost as a favor to Kim Jong-un, the dictator of North Korea. Over and over again, the president shows disrespect for partners, disrespect for allies, tries to drag them into wars that they didn't want, then holds them to some impossible to meet standard and threatens to punish them or bomb them if they don't come to the United States assistance. And on the flip side, he's often looking for ways to find favor with and make common cause with Vladimir Putin, with Xi Jinping, with Kim Jong-un. These are the autocrats that the president seems to be more interested in finding ways of doing deals with, at the same time that he shows all of this really unprecedented disrespect and lack of concern for the needs of our closest partners in Europe and in Asia and in the Middle East.
And of course, for our viewers as well, the global investment community also watching and wondering exactly which way this thing is going. Ambassador, before I let you go, can I get your reaction to another story we're tracking? To Syria here, we are learning that Israel struck an airbase about 45 miles from the Turkish border. Israel told Washington it was to stop a Turkish buildup there. The US envoy Tom Barrack also posting on X that this was an unnecessary escalation. You know this relationship. How serious is that public rebuke, and what do you think the Israelis are trying to achieve here?
It seems the Israelis are trying to establish that they don't favor and they want to avoid a situation where there is a significant Turkish military presence in Syria, or at least certain locations in Syria closer to Israel. And they have tried to advance, or actually the United States has tried to advance some negotiations and a security agreement between Israel and Syria that would perhaps address that issue. Those negotiations have stalled some time ago. Most of its activity in Syria is located much further south, closer to its border, but obviously it had the view that what it claims was a plan for a major Turkish deployment at this airbase across certain lines, and so it took matters into its own hands. Apparently, or at least it's reported, it gave Washington a heads up, but the statement by Ambassador Barrack strongly indicates that the United States doesn't favor that method to try to resolve these concerns. There may be legitimate concerns, but if Israel is going to take the view that any time any actor in the region makes a move they disfavor, that instead of using diplomacy, instead of partnering with the United States and partnering with other neighbors that seem to want to do deals, the Syrians have been quite open about their desire to reach a security arrangement with Israel, that they're just going to take matters into their own hands and conduct military strikes. That's a very destabilizing way of handling those situations. There's real risk of escalation. So I'm not surprised that Ambassador Barrack voiced that concern. I suspect it reflects a concern that goes even higher in the administration. And, you know, as Israel heads towards its election in October, and the president has to decide if he's going to be expressing favor or disfavor toward Prime Minister Netanyahu, this may have bearing on his views.
Right. Ambassador, we'll leave it there. Appreciate the conversation this morning. Good to see you. Looking forward to the next one. That's Daniel Shapiro there, the former US ambassador to Israel. Okay, that was your geopolitical hot take. On the other side of the break, we're bringing it back to the markets. Stay with us. You're live on CNBC. We're off, but we'll be returning in 2 minutes.
Abu Dhabi has now been branded as the capital of capital. There really are few places in the world where the concentration of sovereign wealth funds and smart investors.
It's a great place to work and live. I mean, living in Abu Dhabi, it's a very safe, secure city.
I love it so much, I don't think I'll ever leave.
Any company that's looking to grow and expand, really look at the Hub 71 Accelerator Program, the ADGM ecosystem. We couldn't have found a better home.
Everything is there for you to succeed here.
Be there for the opening bell.
Welcome to Squawk on the Street.
What's moving? The biggest guests, the market action.
Right here.
Squawk on the Street, CNBC.
NVIDIA working with some of the biggest names on Wall Street to secure financing for its customers.
These partnerships are going to pull together independent long-term capital
to fund AI infrastructure build-out.
You're starting to see asset-based financing against this infrastructure.
The first few years, there's no income. Once these are yield-based products, then it's easier to sell them in the public markets.
We need to make sure that we're broadening participation in AI.
Become a smarter investor with CNBC Pro. 24/7 access to market-moving news and interviews with 3 global live streams. Become a CNBC Pro. Go to cnbc.com/GoPro now.
Welcome back. Well, Hong Kong Exchanges and Clearing out with its earnings today. It posts record revenue for the first half of the year, up 19% to about $2.1 billion. Profit attributable to shareholders rose 24% to $1.3 billion. It says strong trading volumes and fundraising demands from tech and AI-related companies helped to make the number. For more on those results, CEO Bonnie Chan joining Squawk Box Asia tomorrow morning. Do not miss that conversation. Well, one stock bucking the Asia sell-off today. Check out shares of Chinese humanoid robotics maker Unitree, which soared as much as 600% in its Shanghai Star Market debut. You can see here the stock up 486% as we speak. We need to bring in our China reporter Elaine Yu on this for more. Elaine, walk us through the outperformance here. Obviously, the dancing robots pay.
Well, there's a lot of investor enthusiasm about that. A lot were betting on a big first day pop, and they did get that. This is now trading at 883 yuan a share, up from the issue price of 150.8 yuan. And this is the first humanoid maker to list in mainland China, and retail investors have been rushing in to get exposure. And these shares have been extraordinarily hard to get for retail investors, with the historically low lot winning rate on the Shanghai Star Market. And Unitree has seen real revenue growth, unlike many other early stage robotics companies. It posted a net profit in the first half, swinging from a net loss last year, and its adjusted profit, however, did fall 19% year on year as its spending on R&D and marketing increased. But institutional investors and skeptics say that beyond dancing and running and acrobatics, they haven't seen proof that their underlying tech can scale commercially, and analysts say that their return on investment will take time to prove that they'll indeed be able to give returns. And indeed, 74% of Unitree's humanoid revenue from most of last year were in research and education. So a lot of those robots are in labs, lobbies, and in demonstrations as well. Now, in the US, according to Adam Grosser of Up Partners, said that companies there are more focused on specific applications for robots. For example, if they're facing labor shortages or in environments that are hostile to humans. But China's edge is that, and Unitree's edge also is that it has that manufacturing scale and cost structure as well. And of course, there's geopolitics because the US has recently banned new humanoid robots. So in the future, beyond this big first day pop, we'll see how it navigates all these challenges. Dan?
Right, and where the growth is going to come from. Okay, interesting to watch, Elaine. Appreciate the update. Meanwhile, OpenAI says it saw tepid growth in the second quarter as losses deepened. According to a Wall Street Journal report, the AI startup told investors its Q2 revenue grew 18% quarter on quarter to $6.7 billion. Operating margins also sinking further, putting profitability for the ChatGPT maker further out of reach. We're off for another quick break on the program. Stay with us. We are back in 2.
One hour of added insight every morning doesn't just add up, it compounds. 1 extra hour every morning delivers exponential value and a pure investing advantage. That's the compounding edge. The all-new Morning Call.
I'm Morgan Brennan, and this is your morning call.
CNBC.
Listen to CNBC on the move with the CNBC app.
A check on how Europe is set to open the trading day.
Real-time market updates.
A lot of strong numbers this morning.
Listen wherever in the world you are. Download the CNBC app now.
Welcome back to the program. Okay, here is another look at what's happening with US equity futures here after the declines that we saw overnight. Major markets all called lower when trading gets back underway. The Nasdaq called down 52. The Nasdaq actually posting its worst day in weeks as some high-flying tech stocks came under pressure from rising yields. Long-term US Treasury yields still at multi-decade highs, the 30-year holding near 5.3% for the first time since 2007. A lot of concerns about swelling government debt and rising levels of borrowing among corporates to fund that massive AI build-out. Oil prices also edging back up, certainly not helping the inflation picture and the interest rate outlook either. And it's not just the US. In Japan, the benchmark 10-year JGB yield topping 3%. These are levels we haven't seen since the 1990s. In Europe, German and French yields also now at multi-decade highs. Well, Middle East markets closed mixed yesterday. Abu Dhabi's index leading gains up around 0.22%, while Qatar was the biggest loser, down around 0.5%. Saudi Arabia's oil giant Aramco and mining company Ma'aden have agreed to form a JV to accelerate the exploration and production of critical minerals in the kingdom. Ma'aden will own 51% of the joint venture, with Aramco holding the remaining 49% subject to regulatory approvals. The venture will operate across an area of about 182,000 square kilometers, equivalent to nearly 10% of Saudi Arabia's total land area. Meanwhile, President Trump says he has paused 50% tariffs on Canada for 3 days. In a post on Truth Social, he said that both countries have made a deal and that the Keystone XL pipeline may be, quote, awoken from the grave. It comes after several last-ditch efforts from Canada to negotiate a deal, including a phone call between Prime Minister Mark Carney and President Trump on Tuesday. The Canadian dollar looking like this right now. Meanwhile, two Chinese logistics giants have reportedly stopped sending their oil tankers through two key Middle East energy routes, the Strait of Hormuz and the Bab el-Mandeb. Sources telling Reuters that COSCO Shipping and China merchants have avoided both routes since late July and are instead collecting oil cargoes outside of the Gulf. Both companies had over 100 VLCCs in their fleets in total, which can carry about 2 million barrels of oil each, and shipping data shows that they accounted for around half of China's crude imports from the Middle East before the Iran war began. And Saudi Arabia is building up its ties with Australia. Japan's foreign minister is currently in the Middle East. He'll visit his counterparts in both Saudi Arabia and Oman over the course of his trip and is expected to discuss the Strait of Hormuz and normalization of shipping flows from the Middle East, whenever that might happen. He is also expected to assess what the region needs to build back its infrastructure after taking damage from the war. It's the first visit by the foreign minister since the start of the war at the end of February. It's all part of Saudi Arabia's broader push to deepen ties with the Asian region. Just last month, Saudi Cargo announced the launch of its first direct flight between Saudi Arabia and Australia, broadening Australia's access to a regional market for meat, produce, and agricultural commodities. Well, Sam Jashidi is here. He is president of the Australia-Saudi Business Chamber and joins us live this morning for some insights on this relationship, the broader trade flows, and exactly what's happening in this space. Welcome to the program, sir. Good to have you on today. I wanted to begin by getting your reaction to what you've just heard. Japan's foreign minister in Riyadh and Muscat this week. At a higher level, what is Asia actually looking for in the Gulf right now?
Thank you so much for having me. It's an absolute pleasure. I guess this is a new era of how Saudi Arabia is deepening its relationship with the Asia. Now, typically, Asia and Saudi Arabia have had a strong historical relationship, but the new era of Saudi 2030 vision is pretty much bringing global leaders and countries and bringing a much more deepening into the relationship of how they've typically been trading and investing in one another.
Right, and you know what's interesting as well, Sam, this also comes as we see Saudi Arabia's economy contracting last quarter. As you know full well, the region's at war. Shipping through the Gulf has of course been disrupted for several months now, with the Strait of Hormuz and the Bab el-Mandeb basically out of commission. Why do you think this is the moment that these countries, including Australia, want to be building trade routes through here?
I think in the current climate, with what the global trade and investment has been affected with the challenges that we have been witnessing for months at the moment, I think every country is now trying to outreach and broaden their horizons on how typically they've traded with one another and how they can open new gates and opportunities for each other. And this was for a fact that what we witnessed between Australia and Saudi Arabia. Australia and Saudi Arabia have had, a historical relationship, but they've never had a direct trade link between them. And just last month, for the first time, we saw a Saudi cargo airplane land in one of the airports in Australia. So this wasn't just about a plane landing into an airport. This was a beginning of a new era of relationships and how Australia trades with the Kingdom of Saudi Arabia and what the exporters from Australia can achieve, take leverage and advantage of the Saudi 2030 vision's government support, not only to be able to trade directly with the largest economical power in the GCC, but also using Saudi Arabia as a platform for further outreach to Asia, to Africa, and to Europe. So what we're going to witness, I think, more and more is how countries are going to concentrate more on deepening those trade relationships and find alternative ways to make sure that the trade follows.
Right, and so what's the actual opportunity for Australian businesses here? Obviously, agriculture and food security, the obvious one here. Saudi Arabia importing most of its food. Australia is a major exporter. Walk us through what areas of trade are growing the fastest and what's capturing the most amount of attention right now when it comes to trade ties between these two countries.
As you mentioned, Australia obviously has had an amazing name when it comes to agriculture. Australian meat is one of the highlights and prime exports of Australia, but we've seen a massive growth into pharmaceutical, technology, AI, and the mining industry. So where there are opportunities are, Saudi Arabia is now opening doors. There are a lot of government support and incentives for companies and investors to open up in Saudi Arabia for further distribution centers across, and the geographical advantage that they get by basing themselves here. So agricultural, seafood, pharmaceutical, mining technology, and AI, and also education. So we've seen, a couple of our largest universities in Australia have also announced that they'll be opening up campuses in the kingdom. So the traditional growth in the past has always been from the traditional commodities between oil industries and grain and food, but now that horizon has broadened up and is in fact has gone into multiple industries. And from my own personal experience for the last 4 years being the president of the council, I've seen an amount of increase between the investment that has been coming to Saudi from Australia, with companies setting up the regional headquarters or setting up the facilities in Saudi Arabia to take advantage of the giga projects and the growth that Saudi has had, but also at the same time basing themselves in a place that has a big ambitions to become one of the biggest global players and a hub for innovation and investments.
Right, and Sam, just on the investment side as well, I think you mentioned this, but nearly 9 billion Australian dollars has reportedly been earmarked by Saudi Arabia for Australia. Where is that capital likely to go?
See, so, traditional capitals are always destined for financial markets. So typically what we will see, probably infrastructure, logistic hubs, agriculture, that's where Australia is famous for, where, FDIs that are destined to come into the Australian market. So typically, historically, when we've seen FDIs out of the GCC region, they're usually within the agricultural, real estate and infrastructure portfolios. And I do believe that, Australia has one of, the best economies at the moment, even though the global challenges are affecting everybody. But what we have seen in Australia for the last 50 years, it is a very safe and a long-term investment country that has always had great returns for investors that are coming from all over the world.
And let's zoom out on the logistics story as well. As you mentioned, Saudi Arabia wants to be the Middle East's main logistics hub under Vision 2030. Of course, it has a lot of competition across the region, not just in UAE, but elsewhere as well. Other countries, of course, having a decades-long head start in the logistics space. Do you think Saudi Arabia can actually get there?
100%. I think Saudi Arabia has already proven. I think the vision came out in 2016 called 2030. So the expectation was, we will see a result until 2030, but we've pretty much have seen all the results so far. And Saudi Arabia has actually outdone what the vision was actually meant to be present. So right now, with the distribution hubs, the Saudi Riyadh Airways opening up its corridors across the world, I do believe that Saudi not only will get there, I'm confident the Saudi is already there.
And Sam, just before I let you go, we mentioned at the start of the conversation the impact of the conflict. Do you think it makes Australian and Asian businesses more cautious, or does it accelerate the search for alternative suppliers and routes in and out of this region?
No, look, the current conflicts haven't just affected GCC. It's a global conflict. We've seen it in Australia. We felt it in Australia. But I think investors are now actually willing to look where the opportunity and long-term growths are and how they can diversify their portfolios and how they can expand themselves. So we've seen much more inquiries coming through from the council's perspective. Delegations are flowing through, investor delegations are coming through. There are so many events that are already planned. And I think countries in Asia would have even much more added advantage because, they're much closer to the Saudi Arabian market. And if you look at China, India, Japan, South Korea, and the trade volumes that is already happening and the investment that is happening between these countries, the Asian countries, I think this is just what is the start of a new era. And I'm pretty sure that with the current conflict and challenges, there are much more great opportunities, and companies definitely looking to where they can kind of coordinate their growth routes.
Sam, we'll leave it there. Appreciate the conversation this morning. Thanks for checking in. Sam Jamshidi there from the Australia-Saudi Business Chamber. We'll speak again soon. And as the war continues to weigh on the travel and tourism industry, a new report lays out projections for what could come next and the path to normalization. Our travel and transport reporter Monica Petrelli joins us live now with more on what the report says about the state of play. Hey Mon, walk us through it.
Good morning, Dan. Yeah, so what comes next for the industry is highly dependent on what happens next in the Iran war. Of course, we don't have the answers on that second issue, but tourism economics attempting to put some numbers on the three most likely scenarios here. And first, we see if a ceasefire returns, and that would be one that assumes that the Strait of Hormuz opens. If that should occur, tourism economics says oil and jet fuel prices will continue to stay elevated for several months. Airfares too. Travelers will also continue to shift plans rather than cancel them, which is why arrivals globally will continue to grow, but around 6% rather than the 8% that was expected before the war began. Recovery time for the global travel industry would be about 12 months from that ceasefire. Now, if we should see hostilities return, here we would see a spike in oil prices and airfares as well. Those jet fuel shortage worries would return too. Inflation and airfare would jump, which would mean that some travelers would bow out. Under this scenario, this report estimates we would see international arrivals drop by about 1%, and then recovery for the global tourism industry would push to 2028. Now, under the third scenario, that's sort of the stalemate situation that we currently find ourselves in, one of sustained disruption. You might think that, well, this would be somewhere in the middle of those first two scenarios. Not the case, according to this report. Here, it says this situation would present the most significant challenge for the tourism industry worldwide. And that's because some of these shifts that are meant to be temporary would start to become permanent. And this would be everything from travel preferences to long-haul routes. Here, airfare and inflation would jump, but they would likely stay that way for several years. This situation has legs to it, which is why tourism economics thinks that should this continue for the rest of 26, global arrivals would drop by 3%, and then recovery for the tourism industry would push outwards even up to 2029. It's back to you.
Mon, really interesting insights there. And of course, these are global numbers, right? The Middle East would be impacted at a far greater level, correct?
Completely, Dan. So, if we just look at that last scenario, the one where the stalemate situation just perpetuating for the rest of this year and into next year, that assumes that a drop of 3% in arrivals this year. But if you separate out the rest of the world from the Middle East arrivals, it said, would drop by some 64%, while the rest of the world would still see some growth, just marginally, around 2%. But the reason why this report doesn't focus specifically on the Middle East itself, it's because it analyzes travel crisis overall. And in fact, it looked at around 85 different crises over the last 2 decades, showing that overall, the era of an isolated travel crisis really is ended, and that's just simply because of the interconnectedness of the world these days. That, yes, it depends on the scope and the magnitude in terms of recovery. However, multiple countries or regions likely affected, of course, none more so than the COVID pandemic. But one bright spot that I'll just leave you with, because the situation and the report is a bit dire, it does say that the response from the areas that are most greatly affected here, the Middle East, is key towards recovery, and that recovery levels overall have shortened from about 2 years ago and 20 years, about 20 years ago to now just 1 year. And communications there are key. This report specifically called out the way Asian nations dealt with SARS, saying that was an example of good communications, while it also said one that it maybe not as good is the Gambia, which saw its tourism industry destroyed following the Ebola epidemic, not an epidemic, but an outbreak some 10 years ago. The Gambia had 0 reported cases, but it still just fell victim to being in the proximity. So communications are key to combat both factual allegations, but also rumors, which also matter these days with the era of the internet. It's back to you, Dan.
Mon, thanks for the update. Appreciate it. Okay, let's push forward now and get you an update on what's happening with the price of diesel right now. It's been surging in recent days. The pump price of diesel hitting $5.47 a gallon on Tuesday, actually approaching an all-time high, which is $5.82. prices have risen about 8% just this month. And according to data seen by the Financial Times, the crack spread, which is the gap between the cost of diesel and crude oil, hit a record high just this week as well. Soaring prices driving up costs across the United States and elsewhere and putting more pressure on President Trump ahead of the midterm elections. Switching gears, in Australia's BHP says copper demand is booming due to the AI build-out. The company's new CEO, Brandon Craig, elaborating on that in an interview with CNBC. Take a listen.
If you have a look at the US, the investment that's going into artificial intelligence and data centers with the hyperscalers, that produces demand for copper. And what you can also see in the market is just the supply really struggling to keep up with the demand drivers. To put some numbers to that, we believe by 2050 the world is going to need a significant amount of more copper, around 50 million tons from 34 million tons today. That's a significant increase. Bringing that more to the near term, from today through to 2035, we expect the mining side of copper is going to have to bring 10 million tons of additional production into the market. Now, when you consider the mine we have in Escondida, which is the single largest copper mine in the world, produces only 1 million tons, you'll have to produce a new Escondida every year for 10 years to be able to keep up with the demand for copper. So the long-term prospects are really strong, and I think that's really behind why we are so committed to investing into this commodity.
Wow. So let's talk a little bit about steelmaking, whether it's iron ore prices, whether it's metallurgical coal, and your outlook there as well.
Well, I think what we've seen, steel has been really resilient and is holding up much better than some forecasters would often predict. For the last 7 years, China has produced about 1 billion tons of steel. When we look forward over the coming years, we expect that trend of 1 billion tons of steel production to hold. And then when you look at the GDP growth playing out in India, they're running at GDP levels of around 7% per annum. And on the back of that, we expect steel to continue to grow in those markets as well. So I think the headline there is steel production is resilient, but you can see some shifts playing out. Steel production used to be driven by infrastructure investment and residential construction investment in China. That's actually switching out now to more manufactured goods. And a lot of those goods are being exported to the global south. So China's been very effective at switching out of what was predominantly infrastructure investment into more higher-end manufactured goods and exports.
BHP's new CEO there. And as we head into break, take a look at this. The Temasek-backed tech logistics startup Shiprocket rocketing up some 40% today, blowing past its IPO price of 97 rupees after raising about $170 million in a heavily subscribed IPO. Stay with us. We are back in 2 minutes.
Abu Dhabi has now been branded as the capital of capital. There really are few places in the world where the concentration of sovereign wealth funds and smart investors.
It's a great place to work and live. I mean, living in Abu Dhabi, it's a very safe, secure city.
I love it so much, I don't think I'll ever leave.
Any company that's looking to grow and expand, really look at the Hub 71 Accelerator Program, the ADGM ecosystem. We couldn't have found a better home.
Everything is there for you to succeed here.
Welcome to Europe Early Edition.
We've seen very strong demand all summer long.
Are you heading into a record Q4? Parliament continues to stay very fragmented. Prime Minister, it's a pleasure to be back in Athens.
It's a pleasure to talk to you, Sabine.
Here's what investors are watching this morning.
In this CNBC Explains, we explore why Asia is leading the global IPO market.
We have a really big year for IPOs with SpaceX, OpenAI, and Anthropic, but analysts are pointing out that there's much more volume here in Asia.
And we look at how South Korea's AI chip boom is spilling into the housing market.
In Korea is a reflection of what people consider as their safety net, as well as a symbol of success.
The show that explains the why behind the headlines, only on CNBC.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime Report, weekdays streaming on CNBC Plus.
Welcome back to Access Middle East. Some other stories on our radar this morning. Syria has allowed UN nuclear watchdog inspectors to begin excavating a site linked to the country's former nuclear program. The IAEA says the site in eastern Syria was part of an undeclared program under the former Assad government, including a reactor that was destroyed in an Israeli airstrike back in 2007. The IAEA chief also says another site containing nuclear material has been identified. Meanwhile, South Korea's annual military drills with the US have been cut short following President Trump's order to substantially reduce US participation. South Korea's Joint Chiefs of Staff said in a statement that at the request of the US side, the annual military exercise will end 6 days earlier than originally planned. Other operations have reportedly been cancelled or deferred, with some taking place as just simulations. And Russia and Myanmar looking to deepen energy and defence ties as Russia's President Vladimir Putin hosted Myanmar's junta chief turned president in Moscow on Tuesday. Putin said they discussed a range of issues and are now mulling an oil refinery plus joint hydrocarbon production and exploration in Myanmar. He also said Russia could supply LNG to the country, which it could trade with other countries. And the landmark child safety trial against Meta has just kicked off. CNBC's Julia Boston has been keeping track of what's at stake for investors.
In this bellwether case in Oakland federal court, the biggest yet attacking Meta's child safety issues, both the plaintiffs, comprised of 29 state attorneys general, and Meta presented their opening statements. The lawyer representing the state suing Meta asking for monetary damages and changes to its business practices, alleging Meta's financial success depends on keeping kids on its apps, saying that it knowingly developed features to take advantage of them, while the lawyer representing Meta focused on its efforts to improve its policies, asking the jury to consider whether its features such as the ability to have multiple accounts, its time management tools, and its efforts to block users under age 13 are unfair. The trial's first witness was also called to the stand, former Meta employee Arturo Bejar, who testified that safety and security was an afterthought during his time at Meta, also saying Meta's focus on metrics and growth was to the detriment of child safety. With the stock dropping 4.5%, it's now down almost 30% over the past year. Julia Borston, CNBC Business News, Los Angeles.
And that's all for today. Enjoy your trading day ahead. Stay with us here on CNBC. Europe Early Edition is coming up next. Good morning.
Be there for the opening bell.
Right here.
Squawk on the Street, CNBC.
The AI boom is reshuffling the global equity market rankings, with Taiwan and South Korea leapfrogging past long-established markets. Taiwan has climbed past Canada and India to become the world's fifth largest equity market. while South Korea has moved into 6th place.
All this happened within the span of just a few months, because last December, they were in the 9th and 11th places respectively. Now, such a shift is not unprecedented, but what is unusual is the speed at which these two have been climbing.
But this reordering isn't necessarily being driven by broad economic growth. Instead, it's about 3 companies at the heart of the AI hardware supply chain.
It's the AI theme which is driving things. So we have this kind of perfect positive storm of industry fundamentals which are resulting in very, very rapid profit growth.
So what does this reshuffle tell us about how AI is changing global stock markets? And what are the risks?
Don't miss the highlights of the PGA Tour. Catch the action from the PGA. The biggest hits and misses. Join us on the green, Saturday and Sunday afternoons, only on CNBC.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
What happened today?
The market had to resort to defense.
We've got a developing story out of Washington.
What's moving in real time?
What do the numbers tell you, pro or con?
Be ready for tomorrow after the bell.
There's a wait and see about a lot of things for tomorrow, Mike.
Completely.
Melissa Lee, Mike Santoli. Closing Bell Overtime. CNBC.
Welcome to Europe Early Edition with me, Ritika Gupta. Let's get into your headlines. The global bond rout eases, but yields on sovereign debt hold near multi-decade highs. Investors today eyeing UK inflation data and the July Fed minutes. The bond sell-off spills over into equities, with chip stocks bearing the brunt stateside and overnight in Asia. European futures also pointing to a lower open. And shares in Chinese humanoid developer Unitree surge as much as 600% in their IPO as China looks to flaunt its advances in robotics and physical AI. Good morning and welcome to the show. Let's get into our top story. That is the bond market, with those yields, though maybe starting to pull back, but the impact of the past week's sell-off is still being felt, with the yield on the 30-year Treasury at its highest level in nearly 20 years. This ahead of a highly anticipated auction of 20-year paper later today. Bloomberg reporting the Treasury will ask investors for a further $16 billion as a sticking plaster on America's $1.8 trillion deficit for the year so far. If investors decide that means they want to return around the current yield on that debt, that's the most the US will have had to pay for it since it reintroduced 20-year auctions 6 years ago. This as global yields continue to hold at multi-year highs. Japan's 10-year debt currently fetching its highest yield in around 30 years. And we are seeing the spillover effects from those higher bond yields into equities and dragging on those major averages. We're seeing Stocks 50 futures in Europe off nearly 0.2% there. investors are going to be looking out for inflation data out of the UK and the Eurozone later this morning. Let's flip up the board and take a look at Asian markets, where they're mostly red across your screen there. The Hang Seng Index being the outlier. The Nikkei 225 Index off nearly 3%. The Kospi underperforming off more than 5.5%, and a big part of that down to the chip sell-off. Samsung and SK Hynix account for about 40% of the Kospi Index, and both of those stocks down 7% for Samsung and down nearly 9% for SK Hynix. Now, a bright spot were those shares in the Chinese humanoid robotic maker Unitree. Those rocketed on its debut in Shanghai. The stock, priced initially at 150.8 yuan a share, was seen as high as 1,100 yuan a share during trading before paring some of its gains. Elaine Yu joins us now with more. Elaine, walk us through this blockbuster IPO.
Yeah, Ritika, investors have been betting on a big first day pop, and that's what they get. It's still up more than 480% as of now. And this is the first humanoid maker to list on the mainland, and retail investors have rushed in to get exposure, and there was more than 5,000 times oversubscribed. And the IPO also attracted strategic investors like DeepSeek. Now, Unitree has seen real revenue growth. It posted a net profit in the first half after swinging from a net loss in the same period last year, but its adjusted profit did fall 19% in the first half as its spending on R&D and marketing continued to rise. Now, some of the institutional investors and skeptics we've talked to said that beyond these robots dancing and running and doing acrobatics, they haven't seen proof that this technology can scale commercially, and they said that it will take time for them to test their return on investment. And indeed, almost three quarters of their humanoid revenue from last year, or most of last year, came from research and education. So a lot of their robots are still in labs and lobbies and for demonstrations. But analysts say that Unitree's edge is in its manufacturing scale and cost structure. The company has been slashing prices, and even across the industry, you've seen the average humanoid robot and also wholesale prices falling year on year. And China's lower manufacturing cost as well has helped the country dominate in humanoid shipments. The top 5 firms in terms of humanoid shipments in the first half of this year are all Chinese companies, and they're also dominating in rare earths, which are used in the joints and actuators of these robots. But also some investors, including those in the U.S., said that firms, American firms like Tesla, for example, which is working on its Optimus model that will start production this year, are more focused on specific applications on robotics. For example, where there are labor shortages or where the places are dangerous for humans to work. Now, geopolitics is going to affect this sector as well. The U.S. recently banned new foreign-made humanoid and quadruped, which are four-legged robots, and even just last year, 13% of Unitree's revenue came from the U.S. Researchers have told me that Unitree, in fact, was the default choice when it comes to research humanoids because it's so easy to buy them online and because of their lower cost as well. But Unitree did warn that it may not be able to sustain its rapid growth in overseas sales, which make up more than 40% of its sales, and that could even decline, the company has warned, if these U.S. restrictions continue. Ritika?
Thank you, Elaine, so much for that update. Fascinating stuff there. And let's take a look at the U.S. close, where we've seen now 3 straight days of declines for those major averages, with the S&P 500 closing off 0.7% lower. It was tech that underperformed there, with the NASDAQ closing down more than 1.3% lower as we saw those higher bond yields and higher oil prices. And it was those chip stocks as well in the U.S. bearing the brunt of the selling, where we see big losses there for Micron down 7%, along with Intel, Broadcom, and Nvidia also moving lower. Let's take a look at the U.S. futures picture, where we're seeing the selling continuing this morning. That's as investors take stock of what we're seeing in the yield space. Even though yields are stabilizing today, investors will be looking ahead to the Fed minutes from its latest policy meeting. Now, in other news, new data is expected to show that British inflation ticked higher in July as a lift in the cap on energy bills likely pushed yearly CPI up to 2.9%, according to economists polled by Reuters. But the Bank of England is expected to hold rates throughout the rest of the year, despite 3 out of the 9 members of the Monetary Policy Committee voting for a hike at the July meeting. That data crossing the wires at 7 London time. And on the other side of the pond, as I mentioned, we'll get the minutes from the Fed's July meeting 12 hours later at 7 p.m. London time. Let's get more on all of the action. I'm pleased to say Cyrus de la Rubia, the chief economist at Hamburg Commercial Bank, joins us now. Cyrus, we have to talk about the bond market, what we're seeing with yields climbing globally. What signals is the bond market telling us now about inflation?
Well, the yields are indeed on a rise, and there are 2 factors which are behind this. It's not only inflation, it's also the worry about the high fiscal spending and the high debt. And I think this combination makes it a little bit difficult for investors to get through this phase because, and I looked at the markets over the last few months, and I saw one let's say, regularity that even if inflation figures came down or labor market showed some weak signs, the yields went down in the short term but recovered once again because there are these worries about fiscal spending supported by defense spending, which will be around us for the next decade or so. And therefore, I don't expect yields to come down significantly. Instead, I expect yields to go higher.
And how much is the energy shock from the Middle East war, how much is that contributing to this big move in the yields? As you mentioned, you think a big part of it is the fiscal picture and government's spending, but also what we're seeing in terms of inflation becoming embedded. And how big do you think this is going to be of a headwind for those central banks?
Absolutely. The Iran-US issue and the Strait of Hormuz is very much a very important point here. We saw quite a lot of correlation between the oil price and the long-term yields. We don't know how long this will be around us, but the longer it is around us, the more consumers will embed these developments into their inflation expectation. And this is obviously worrisome for central banks, which tend to react to such movements in inflation expectations, especially the ECB, but also the Bank of England.
There's a risk there that these central banks overreact to the signals that we're seeing.
I'm not sure. I think the ECB has done was quite wise in hiking rates for one time, and I think the September hike is also almost a done deal. They are still at rather low key policy rate levels of 2.25. So it's nothing where you say, okay, they are putting a deep brake on the economy, and at the same time, you have this issue of inflation expectations, and they have this experience from 22 when they were too late in getting against the inflation. So they are a burnt child in a way, and so I think it's wise to react.
Also, the question of AI. So we think of AI typically as this kind of productivity story, but you argue that it could be pushing electricity prices higher. So how significant could that become as an inflationary force?
I think this is already happening in some regions, that electricity prices are going higher due to AI. But it's not only electricity; it's sucking up resources from many other sectors, and therefore putting upward pressure on capacity and on prices. And this is a thing that will be around us for quite a while before all those productivity gains will kick in a global sense, so that the whole economy is really taking advantage of it. So we are in a phase where still these inflationary forces are dominating.
You've also described the heat waves that we've been looking at and discussing on the shows as another stagflationary shock. I mean, how are you looking at extreme weather patterns and how are those feeding into inflation expectations? And do you think this has a bigger impact than some kind of a temporary impact, shall we say?
Well, what we are witnessing right now with a very low level of the water in the Rhine or the Donau or other rivers has many repercussions on power prices, on transport costs, on heating or on cooling costs for buildings and so on. And these are all inflationary forces and should worry indeed central banks, because this will not go away. Obviously in winter we have other temperatures, but the next summer is there, and even it may start in spring. So this is a structural issue that will accompany us through the next years and years.
And Cyrus, we've got the UK CPI data out later this morning. What are you expecting from the headline number and, I guess more importantly, the underlying inflation numbers and how this could be impacting the Bank of England's decision, particularly also what we see in the services sector and how sticky you think inflation's looking there?
Right. The Bank of England will look very much on the services inflation, because this is considered to be the underlying trend, and this trend has gone down somewhat over the last few months, and so it's important to see if this is going down once again. And I expect so, but not very much. But the point here is that first, the headline figure is what people are perceiving. This would go down near the 3% mark, which is, if you communicate it, well, we stop rising and we will not rise, even though we are far away from the target, is a little bit tricky, I would say. And if we have, in addition, more tensions in the Strait of Hormuz and higher oil prices, therefore, then it would become even more trickier. So I'm not fully convinced that the Bank of England will sustain its course to stay put with key policy rates. They maybe even have to go somewhat higher, even though they are at a higher interest rate level than the ECB.
All right, we'll have to leave it there. Thank you so much, Cyrus de la Rubia, Chief Economist at Hamburg Commercial Bank. And the US President Donald Trump has said that Washington is not holding any talks with Iran and none are scheduled, an abrupt contradiction to the US leader's prior insistence that negotiations are underway. The UAE said all trade, commercial exchanges and financial transactions with Iran have been halted under further notice, citing regional escalations. The move came shortly after the UAE said Iran fired 2 missiles in its direction, one of which fell into the country's territorial waters. Now, for more on all of this, Dan Murphy joins us now. Dan, walk us through President Trump's latest comments, which look like a bit of a U-turn from what he's previously said about where negotiations are with Iran, and also what we're seeing about the regional conflict as well within the Middle East exacerbating.
Ritika, good morning. Well, let's start there, because the UAE was targeted overnight and has now responded by cutting off Iran entirely. The Ministry of Defense saying air defenses detected 2 ballistic missiles launched from Iran towards the UAE. The first fell outside of territorial waters, the second fell inside them. Interestingly, Iran denies any involvement here, and Abu Dhabi's response has been economic and sweeping. The Foreign Ministry says that, quote, in light of regional escalations that undermine regional and international peace and security, all trade, commercial exchanges and financial transactions with Iran have been halted until further notice. Now, this is significant. The UAE has, of course, been one of Iran's most important commercial partners for decades. That relationship has now been suspended. We don't have details on the extent of these measures and what it could mean for Iranian property owners or bank account holders here in the UAE, for example. But this decision could also protect Dubai and Abu Dhabi's banking sectors from secondary global sanctions. As reports suggest, the White House is preparing an even bigger package of economic measures against Iran as soon as this week. Now, interestingly, this also comes after state media reported that President Sheikh Mohammed bin Zayed here received a call from President Trump on Tuesday. As for the wider conflict in Washington, diplomacy is dead, at least for now. President Trump posting on Truth Social overnight, there are no talks or conversations going on right now or scheduled with the Islamic Republic of Iran. That basically ends weeks of the president signaling that a deal was imminent and that Iran was desperate to talk. And then, of course, on the Strait of Hormuz itself, there is a gap between claim and reality as well. The president saying Hormuz is open and operating and that all water mines there have been removed or detonated. But of course, the actual traffic through the strait remains at a trickle this morning, at least according to independent sources. So that is the situation as it stands in the region this morning. Quite a significant development overnight here in the UAE. Perhaps part of the reason that we've seen oil prices continuing to stay mostly bid up through the course of the Asia session, with Brent now holding at around $91 a barrel. Back over to you.
All right, Dan, appreciate the update. Thank you so much. Now, annual joint military drills between the US and South Korea will be cut short after President Donald Trump issued an order to reduce the scope of American involvement. The exercises will now run for 5 days rather than 11. The Wall Street Journal is also reporting that Trump is pushing for a meeting with North Korea's Kim Jong-un this year, with the US leader having held 3 summits with him during Trump's first presidency. The paper reports a meeting could take place in November during the Asia-Pacific Economic Cooperation Summit in China. Coming up on the show, could the UK become a global leader in quantum computing? Well, we'll bring you more right after the break. Stay with us.
The day's top stories driving Wall Street. Up-to-the-minute developments. Kelly Evans, Brian Sullivan, Power Lunch, streaming on CNBC+.
As the Asia trading day begins, join me for SquawkBox Asia. What are you watching? Nobody would be thinking that level of a benchmark is possible. We're live across the region covering what you need to know from here and around the world that would shape the business day.
We know there's 2 winners in AI. It's going to be China-US.
Let's stay away from these companies that are selling it at 40, 50 times sales.
Join me for SquawkBox Asia, only on CNBC.
China is the world's second largest consumer market behind the US. In 2025, the country's total retail sales of consumer goods exceeded about 50 trillion yuan, or about $7.2 trillion, up by 3.7% year-on-year. With a population of 1.4 billion people, the market has long been a cash cow for global brands. But today, success is no longer a given, with some Western brands struggling and even scaling back operations in the country.
When you think about live streaming and social media, the hottest new thing is going to bubble up overnight, and you have to have it the next day.
The number one thing that you will see is how little loyalty Chinese consumers are because of the brands and how fast they innovate and how quickly they push things out. Consumers are very used to being hit by new concepts, new designs.
So what does it take to win in China?
Welcome back, everyone. OpenAI reportedly saw revenue rise to $6.7 billion in the second quarter, an 18% rise compared to the first quarter. That's according to the Wall Street Journal, citing people familiar with the matter, which also reported its operating margin worsened over the period as the AI startup saw its losses deepen to $12.3 billion. OpenAI says it has expanded its monitoring of new AI models as it looks to increase its security following a security breach where one of its agents escaped controls and hacked another company. The AI lab said it now aims to issue an alert within 30 minutes after any concerning activity is flagged through its monitoring system. Now, our next guest says that the UK has the science to become a global quantum leader, but must back this up with greater commercial strength. I'm joined now by Andy Lever, the CEO of Arkit, a London-based cybersecurity company specializing in quantum-safe encryption services, protecting governments and businesses from emerging risks posed by quantum computing. Andy, thank you so much for joining me on set. It's a pleasure to have you.
Great to be here.
First of all, describe exactly what your company does when it comes to cybersecurity and that intersection with quantum computing.
Sure. So last year was the International Year of Quantum, and this year is the International Year of Security. So you're probably aware quantum computing is moving at a very, very fast speed. In fact, it's unprecedented right now that we have two super cycles back to back. So we're in the middle of the AI super cycle, and quantum is right behind it. So we've had 5 IPOs this year for quantum companies, so it's been a very, very busy time. And what's happening is, with the speed of development, is the security we use today, which is called RSA security, was developed in 1977, so it's quite old, and was firmly embedded in the internet by 1994. Quantum computers soon will be able to break that encryption, and that is called Q-Day. And nobody knows when Q-Day is arriving. It could be anywhere between now and probably 2029, and that will mean that all companies are vulnerable then for their cryptography to be broken by quantum computers. So our company addresses that by helping companies figure out where their weaknesses are, and also allow them to fix those weaknesses to protect against quantum computers.
Now, we've seen a lot of buzz around quantum. I mean, some of the biggest technology names are making some bullish predictions. IBM, for example, is talking about measurable commercial impact by 2028 to 29. Is that realistic in your view? I mean, you mentioned there's big IPOs coming to the surface, and when you're looking at the earnings, for instance, is that technical progress, or are markets getting a little bit ahead of themselves?
I kind of see there's a couple of indicators that people should be looking for. So I think the 3 probably best known companies that are public right now is Rigetti, you have D-Wave and IonQ, and all of them have slightly different ways that they're going to market. So you'll hear terms like trapped ions or photons as a way that they're actually producing their quantum computers. And by the way, quantum has got its own vocabulary, okay? So it's like so different from traditional classical computing that you have to learn a little bit of quantum physics, to be quite honest, to understand how they work. As to who is going to be the most successful, we're waiting to see, but the way they measure the power of a quantum computer is something called qubits. And qubits are very, very prone to what they call error correction. So the challenge now is to produce a stable platform by which they can ramp up the number of qubits that they can use in computation, and that, I think, is where each of the companies will show their progress and succeed. But if you look at the backlog of each of these companies, I think that's where you see what's really going on inside those companies, because that backlog is growing and growing and growing. So not just looking at the revenue number, but looking at the order book as well.
Right, and I want to go back to one of the comments that we mentioned in the intro, was looking at the UK and the quantum science around here, and you've argued that it lacks the commercial muscle. So what is it holding back the British companies from becoming these global technology giants?
Well, I think the UK and Europe has got a huge bench strength of around quantum. So you'll look and see, so IonQ, who I just mentioned, bought Oxford Ionics for just shy of $1 billion, which is spun out of Oxford University. We have people like New Quantum, which were spun out of Cambridge University, which did the largest ever Series A in the UK at $60 million quite recently. So the funding for the early stages is there, and the quality of people is there. The stat that I just saw just yesterday is 42% of European companies, when it gets to the growth stage capital they need to really grow, are moving to the US, which is quite a shocking figure when you see that they get the capital and moving their headquarters into the US side.
Yeah, that's quite worrying, and it's something that we talk about a lot, is that, yeah, the next stage of that series B, the next stage of fundraising, they're going over to the US or to list. Can the UK, I mean, and Europe, can it keep up with not just the US, but also the pace of growth in China as well?
I mean, there's a lot to unpack in that question, because as to exactly what's going on in China, if you mirrored it with the AI world and what happened with DeepSeek, and you can see that they've got a lot of things going on in terms of how they're developing tech as well. We don't quite know where they are on quantum, which means that from a part of our business is around defense with a new kind of digital war space and protecting all those endpoints on autonomous vehicles and drones, etc. Quantum will be a big part of the backstop of how you manage all of that. And I think whoever gets there first is going to have a big advantage. And exactly where people are, we don't know. I think just to finish the point, I think one thing you're seeing is the rise again of special purpose application acquisition companies or SPAC mergers that is going on right now. And we've probably got a couple more to come this year.
And just a really quick one, because we're short on time, but I just wanted to, if you could just kind of dive into this convergence between AI and quantum and how transformative this could be and what it could look like in practice.
I think when these two super cycles come together is going to be a huge unlock. So if we look at AI today and the ramp in performance that we need and the data center build out that we've got going on, as soon as quantum arrives, it's going to give it that ability to have almost unlimited compute power. So I always joke, people always talk about drug discovery, for instance, with AI. I don't think it's discovered many drugs yet, if any. Once you put it together with quantum, it gives it that ability to actually think, learn, and have the ability to maybe discover drugs because it will have the computational power. I think that's going to be a huge unlock moment.
Well, really fascinating stuff. Thank you so much, Andy Lever there, the CEO of Arcit. And coming up on the show, we'll discuss the future of humanoid robots with the president of ABB Robotics, Mark Segura, as Chinese humanoid maker Unitree surges on its Shanghai debut. Stay with us.
American soccer legend Landon Donovan. He'll explain how the 2026 World Cup could shape the future of Major League Soccer and the inner demons that drove him to greatness.
I was constantly chasing this insatiable desire to be noticed.
He's the man behind Apple's sports ambitions. In an exclusive interview, we talk about the tech giant's unique sports strategy and whether a blockbuster acquisition is on the horizon. This is CNBC Sport on the Record.
Fast Money is America's post-game show.
Basically, near all-time highs against the S&P.
Every single story that we pick is a tie back to the markets.
Those sort of revenue streams don't trade at a great multiple.
We want to arm people with the information to make great decisions.
Stock got whacked. I get it. People say they overpaid. I get that.
Fast Money is all about the chemistry. We've been successful for this long because we're a team.
Fast Money, CNBC, streaming on CNBC Plus. Breaking news, market moves. Scott Wapner from the NYSE, Closing Bell. Weekdays streaming on CNBC Plus.
I love the story. I love the drama that is business. A great interview is when you can get the subject to tell you something that you never expected, that you never imagined. My ambition is to help the viewer connect the dots, to understand the context so that we, all of us, can actually make our own judgments. Oh, I love what I do. I can't imagine doing anything else.
You're watching Europe Early Edition. I'm Ritika Gupta. Let's get into your headlines. The global bond rout eases, but yields on sovereign debt hold near multi-decade highs. Investors today eyeing UK inflation data and the July Fed minutes. The bond sell-off spills over into equities, with chip stocks bearing the brunt stateside and overnight in Asia. European futures also pointing to a lower open. Shares in Chinese humanoid developer Unitree surged as much as 600% in their IPO as China looks to flaunt its advances in robotics and physical AI. And let's get a check of your markets now. Over here in Europe, Stocks 50 futures moving to the downside, off 0.2% or so. So nothing major, but after a down day yesterday, it's really those higher yields as well as oil prices dragging on the major averages. Investors are going to be looking out for inflation data out of both the UK and the Eurozone later today. Let's take a look at Asian markets, where they are currently trading mostly red across your screen there. The Hang Seng index, though, being an outlier, pretty much flat. The Nikkei 225 index off more than 3% now, but the Kospi underperforming. It's down even more. The biggest laggard off more than 5%. A big part of that down to the chips sell-off and what we saw with Samsung and SK Hynix, which make up about 40% of that index, down more than 7% for both of those stocks. Let's take a check on Unitree. This is the Chinese humanoid robot maker, which has seen its shares surge on its debut in Shanghai. You can see the shares there up a whopping 485%. So a bright spot in Asia today. CNBC is taking a look at where Europe stands in the robotics and humanoid race, and the region may be late to the AI revolution, but it is a key innovator when it comes to robotics and so-called physical AI. Now, our next guest says Europe's answer to the rise of Asian robotics is technology that is already deployed and where Europe has a genuine lead. Mark Segura, the president of ABB Robotics, joins us now. Mark, thank you so much for joining us. First of all, talk to me about this, what you've said about in terms of Asian robotics, the technology being deployed there, making a tangible difference, and Unitree, what we're seeing. How are you seeing where Europe stands?
Yeah, it's great to be here. Good morning to everyone. Well, I mean, robotics is entering definitely a new era. Okay, robotics has been all about robots repeating preset tasks in preset environments. But with the convergence of and the developments of AI, robots are becoming intelligent. They're becoming autonomous. So robots will be applied in more places, doing more things. So that opens up for a completely new market opportunity for robotics. China has been an exciting market already for decades. We moved there in 1994, and we have a very, very large market, very large install base and all the R&D capabilities. So we can say firsthand that it's a very fast-moving market with a lot of end users, of course, a lot of support from the government to develop industry. So a lot of things are happening then. But I think robotics is becoming more and more a global industry. So every region, the US, Europe, China, but also now new countries like India are growing very fast, all of them. Each one of them have their strengths. That's why we enjoy being a global company to support them all.
And where does Europe stand currently in that race? Can it compete with the likes of China? I mean, we're seeing the Unitree shares. I mean, those are up a whopping over more than 400%, up as much as 600%.
Yeah, as I said, Europe has its own strengths and every region has kind of different ones. Europe has a strong engineering, industrial engineering base, has a strong mechatronics, and has a strong, end users, OEMs producing things. So this industrial knowledge is probably one of the biggest leverages that Europe has to utilize, because when we talk about physical AI and all this excitement we have around technology, we have to remember in the end that robots in factories, even in logistics, they have to deliver. They have to be safe, they have to be reliable, they have to meet some cost points, they need to be serviceable. All these things that is not that exciting as the technology per se, which once again, we're absolutely kind of a fan of, has an expertise, needs this industrial base. So I think when you look at Europe and you compare to China or US, what they mostly need is speed. This sense of urgency, probably a bit more of political focus on industrialization, but it has a terrible platform, a fantastic platform, which is the industrial knowledge to leverage upon, which will be anyhow necessary to get into real big deployments.
So your argument here that I guess the story really around robotics isn't necessarily the most futuristic, the most sexy story. It's actually the machines working in those factories today. So how much more potential is there to automate these kind of existing industrial processes?
The potential is huge, and again, it's not only in industry; it's beyond industry. We're already doing a lot in life sciences, in logistics, even in food service. The big change here, which is exciting, once again, is in the intelligence of the robots. Robots were only capable to do repetitive things where the customer had engineered and invested on structuring, on fixing the environment. Now with robots that are autonomous, that can perform a task in a variable environment, robots that can learn from the internet looking at the manual, robots that can talk to each other, so you suddenly have fleets of robots. As you can imagine, this opens up robots being applied to any kind of industry and in multiple shapes. We are more advocating, once again, because customers are in business, they will also want optimized solution. We will have lots of different form factors of robots, which will be more suitable for every suitcase. As ABB Robotics, we already have 150 different type of form factors of embodiments. And that's once again because robots will be more and more in different places, because autonomy and intelligence will allow them to be in a kitchen, to be in a lab, to be in a hospital, to be in a small factory, and producing and supporting in almost every industry.
So Mark, I mean, there's a lot of conversation about, AI replacing workers. How much are robots, how much are they going to replace workers, and which particular sectors? I mean, is this one thing that we could be looking to when we see the demographics, the labor shortages? Are they making automation increasingly necessary, even though there are these concerns about job shortages in the future?
Yeah. So first, as you said, labor shortage is a much bigger problem than what robots are replacing jobs. And also, robotics has been there for a long time, 50 years, so there's already a lot of hard data that shows certain correlations. For example, there is a correlation with robot density and employment. The countries that are more robotized, like Korea and others, are having the highest rates of total employment. There's also correlation of how productive and successful companies are thanks to robotics and automation. So when companies are thriving, when companies are successful, typically they create better jobs and more jobs. So we believe that more robotics, more capable robotics will just once again amplify human capability as it has done, even to the next stage, and make companies successful and drive business and prosperity.
And ABB has been working with NVIDIA for the autonomous industrial robots. I mean, what can they do that the traditional robots couldn't? What are you working on with them?
Our work with NVIDIA is centered around the first part of the intelligent robotics, which is everything about simulation and training the AI models. To train the robot models, you need a lot of information. But unlike ChatGPT that could train on all the text that existed on internet, there is not such that body of data for robotics. So you can have people training robots physically, which is one way of looking at that, teleoperating robots. But another powerful way to scale data for AI models in robotics is through simulation. So with NVIDIA, we've joined forces. We have Robot Studio, which is our software suite for robot simulation, which is used by more than 60,000 people. And we have embedded NVIDIA graphical capabilities, compute power, so people can really train high-grade industrial AI models for robots, and then you push them to the reality, to the physical part, and then robots start to work according to that simulation. So that will cut the cost of engineering, speed up the training and the deployment of the new AI robots.
Finally, now I understand you cannot comment on the transaction itself, but I want to ask you about if you could give us any update on SoftBank's proposed acquisition of ABB Robotics.
Yeah. First, we are really excited about it. I mean, SoftBank investment shows an endorsement to our global position and the opportunity of the convergence of AI. We are on track for a successful closing in this year, as we said from the beginning. So we are really working to be prepared and continue to serve our customers.
All right, we'll have to leave it there, but thank you so much, Mark Segura, the president of ABB Robotics, for joining us. And a quick look at US futures, where we're seeing more moves to the downside after a down session yesterday for the three major averages. It looks like tech is again set to underperform. This is as we've seen higher yields and higher oil prices, though yields stabilizing somewhat this morning. Now, US President Donald Trump says he will initiate a 3-day pause on new 50% tariffs on Canadian goods after saying the two countries had reached a deal, quote, subject to the finalization of documents. The U.S. leader added that the Keystone XL pipeline, which was cancelled by President Biden, may be revived, but failed to provide any further details. Meta has rejected accusations made by some US states that it intentionally looked to addict children to Instagram and Facebook in the aim for profit. The accusations came on the first day of landmark trial against the social media giant in California. Julia Borston filed this report.
In this bellwether case in Oakland federal court, the biggest yet attacking Meta's child safety issues, both the plaintiffs, comprised of 29 state attorneys general, and Meta presented their opening statements. The lawyer representing the state suing Meta asking for monetary damages and changes to its business practices, alleging Meta's financial success depends on keeping kids on its apps, saying that it knowingly developed features to take advantage of them, while the lawyer representing Meta focused on its efforts to improve its policies, asking the jury to consider whether its features such as the ability to have multiple accounts, its time management tools, and its efforts to block users under age 13 are unfair. The trial's first witness was also called to the stand, former Meta employee Arturo Bejar, who testified that safety and security was an afterthought during his time at Meta, also saying Meta's focus on metrics and growth was to the detriment of child safety. With the stock dropping 4.5%, it's now down almost 30% over the past year. Julia Borston, CNBC Business News, Los Angeles.
Coming up on the show, Europe could be headed for a difficult winter amid concerns over current gas storage levels. We'll discuss after the break.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box, streaming on CNBC Plus.
I built a legacy on the court, and now it's the moment to build a legacy outside of the court. My main investments are in hospitality, in education, and sports. So I believe that's the future. I see my brand as in a growing perspective, and in some way building this new chapter.
You'd been managing a very rare condition in your foot for much of your career. At what point do you think you seriously started to think about life beyond tennis?
You need to have goals. I think it's very important in this life to have goals ahead of you, because that helps you to wake up every day with motivation and passion. I knew since a long time ago that I wanted to keep doing things and learning after my tennis career. I have two small kids, and that's the most important thing of my life, without a doubt. But I like to work. That's how I understand this life.
Become a smarter investor with CNBC Pro. 24/7 access to market-moving news and interviews with 3 global live streams. Subscriber-only content from Wall Street pros like Josh Brown.
If you love the stock market as much as I do, you're going to love the best stocks in the market list.
Plus exclusive live events.
This is my first time at the stock exchange, and it's been awesome. To be on the floor, I just can't believe I'm here.
Become a CNBC Pro. Go to cnbc.com/GoPro now.
Welcome back, everyone. The former Ukrainian Defense Minister Mikhailo Fedorov has called for wartime elections, arguing the nation faced a crisis of governance. Authorities implemented martial law in the aftermath of Russia's invasion in 2022, with this preventing elections. Fedorov was ousted as the country's defense minister earlier this year after 6 months in the role. His dismissal sparked protests in Kyiv and has sparked the most significant challenge to Volodymyr Zelensky since the war began. Meanwhile, Russian government officials told CNBC the country's economy remains strong, following criticism from a former deputy economy minister who was subsequently reported fired. Sam Meredith has been working on this and joins us now for more. Sam, talk to me about the comments that they've made to you and how serious the economic situation is looking there right now.
Yeah, absolutely. Good morning, Ritika. I mean, Russia says its economy is resilient, but of course the reported firing of one of the country's top economists is now raising fresh questions about the cost of the war in Ukraine. Andrei Klepak, the former chief economist at State Development Bank VEB, was fired over the weekend after warning that Russia could not win a prolonged war of attrition with Ukraine. Klepak said that while the economy would not collapse, Russia's economic costs were mounting and the country could face a major social crisis. He also warned Moscow could fall further behind its competitors on issues such as technology. Now, this marks a rare critique of Putin's wartime economy and comes as Russia faces growing pressure. Ukraine, of course, has stepped up attacks on Russian oil refineries and other key infrastructure like Wildberries, while economists point to Moscow's heavy reliance on military spending, higher taxes and subsidized lending. The Kremlin, of course, remains defiant. The Russian embassy in London told me, in fact, that the economy remains robust and that Russia's fiscal position is stronger than many Western economies. A key question now, though, is whether Russia's growing economic costs are becoming harder to ignore. Now, that's not just from outside Russia, but inside the country, too. Back to you, Ritika.
And Sam, talk to me about where the political upheaval in Ukraine sits right now. Of course, there was protests sparked about the dismissal of the defense minister, Mikhailo Fedorov, and now he is calling for wartime elections. So talk to me about the latest.
Fascinating. In fact, just after speaking with you, I'll go back to try and cover the story, because we heard overnight about Fedorov really throwing down the gauntlet to Zelensky. This is the most direct political challenge to Ukraine's president since Russia's full-scale invasion. We're not aware that Zelensky has responded to this challenge yet, but we know that Fedorov is a highly popular ex-defense minister, so this is a very serious political challenge for Ukraine's president.
Thank you so much, Sam Meredith there. Now, Europe's gas storage is unusually low for this time of year, according to an analysis by Argus Media, which suggests the low buffer could mean the continent is heading towards a difficult winter, having to rely on LNG imports and potentially facing tough competition. Natasha Fielding, the editorial manager for gas, LNG and biomass at Argus Media, joins us now. Natasha, thank you so much for joining us. I mean, how concerning is Europe's current storage position at 61% full compared with what the 5-year average was at 78%, according to some of the stats I've seen?
Yeah, thank you. So we really do have historically low gas stocks. To put it further in perspective for you, in the last 15 years, the only time that stocks were nearly but not quite as low was in 2021, before the last major energy crisis. But whether that means we have a really challenging winter ahead really depends on what happens with the Strait of Hormuz. We kind of have these two incompatible visions of what the winter holds. If we do see the strait remaining closed, it looks like Europe could be in for perhaps one of the most challenging winters of recent times. If we, however, see a return to Qatari LNG production, that's 20% of the world's LNG supply that's basically removed from the market at the moment, then things start to look a lot more comfortable for Europe.
So how much more LNG will Europe need to import this winter? As you mentioned, it could be particularly vulnerable at this time of year, to compensate for those lower storage levels, and where are these cargoes going to come from?
So Europe will, with low stocks, Europe will be more reliant than normal on LNG imports to meet winter demand. The trickiest part here is that Asia too will be more reliant on non-Middle East sources for its winter LNG supply if Qatari LNG supply remains very limited. So there we could see really strong competition. The main alternative supplier to Qatar is the US. In fact, North America and particularly US liquefaction capacity has been increasing a lot over the last year or so. So that is some additional US supply that's coming to the market. But we may well see strong competition between Europe and Asia for available cargoes, and that can really bring up the price, particularly if we see cold weather hitting Europe and Asia at the same time. There is potential for price spikes this winter.
So you mentioned there that, suggested that we could get some kind of a renewed bidding war between Europe and Asia for LNG. I mean, how volatile do you expect European gas prices to be over the next few months? And what do you think is going to be the next trigger for a price spike?
So we've already seen a lot of volatility in the market as the rest of the world is really closely watching the outcome of negotiations for an end to the war between the US and Iran. So we can expect continued fluctuations in the price. But at the moment, we're still in summer mode in Europe, not much gas demand around. So if we were to see continued disruption to the Strait of Hormuz into the winter, and we got some cold weather, perhaps even some unplanned supply constraints elsewhere, then there's potential to see price volatility that we haven't really seen since 2022.
And we talked about the impact of the Strait of Hormuz, but what about the ongoing Russia-Ukraine war and how that is complicating Europe's gas supply outlook? I mean, particularly as we're seeing these damage to energy infrastructure from those attacks, could that materially worsen the situation this winter?
So Europe has already weaned itself off of most of its Russian gas. So in terms of pipeline gas supply, there's only Russian gas probably makes up about 5% of the supply mix at the moment. The EU already has a regulation to completely phase out Russian pipeline gas and LNG from the mix by autumn next year. LNG from Russia should stop completely at the beginning of 2027. So that additional supply loss will add more pressure to the European gas market. But it must be said that Europe is far, far less dependent on Russian molecules than it was a few years ago.
What needs to happen then over the next few months for Europe to rebuild its buffer before winter? Is there enough time to do that? And could we start to see governments kind of intervene more aggressively into the gas market?
Yeah, so we normally see a switch to storage withdrawals around late October or November, so we still have a bit of time left. Thankfully for Europe, September is a time when Asia's LNG demand normally dips between the summer cooling peak and the winter heating peak. So it actually already looks like Europe will get a bit of a bump in its LNG supply in September, which should help to bolster storage injections. What could also help is if we did see governments intervening to make sure that storage fills further. Germany's a big market to watch for in this space. German gas stocks particularly low. Germany has more storage capacity than anywhere else in the EU. And there is a regulation, national regulation for German storage to be 70% full. Germany is at the moment on track to miss that target. If we saw the government stepping in to ensure that storage reaches at least that amount, then that would create a bit more of a buffer ahead of the winter. But time will tell whether that really happens.
All right, we'll have to leave there. Thank you so much, Natasha Fielding, the editorial manager of Gas, LNG and Biomass at Argus Media. Before we go, let's take a look at the markets over here in Europe. Futures moving to the downside. No major losses, but we will be looking ahead to inflation data out of the UK at the top of the hour. This is, as we've seen, yields really pressure equities, particularly over in Asia. If we look at the US and how that gets set to open, we're seeing also futures moving to the downside after what was a down session yesterday. Tech, particularly those chip makers, underperforming. A bright spot though, let's take a look at the Unitary IPO that we have been discussing all show. Look, it is up, soaring almost 500% now, so we'll have to keep you updated on all with that. And that is it for today's show. I'm Ritika Gupta, and Squawk Box Europe will be up next.
money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime Report, weekdays streaming on CNBC Plus.
Listen to CNBC on the move with the CNBC app.
A check on how Europe is set to open the trading day.
Real-time market updates.
A lot of strong numbers this morning.
Listen wherever in the world you are. Download the CNBC app now.
Never miss a moment.
We think there is a huge opportunity for AI in the UK and Europe because it is that middle ground between the United States and China.
Andy Burnham has committed himself to the Labour manifesto, so I don't think that that's going to change in the immediate future. I think our historic destiny is to be back in the European Union.
The world is taking you at your word, sir. What happens next?
We're never going to see Iran have a nuclear weapon.
To me, ambition is drive. It's the fire in your belly. I didn't go to college right out of high school, and I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make the decisions that are right for you. CNBC is an adventure beyond my wildest dreams.
Edge just opened up in Europe with a French government cooperation agreement as well. How significant is that deal for Edge and for Abu Dhabi?
Europe is where the next budgets are. We would like to contribute to the security of Europe. We feel that we have a value. We feel that Europe have recognized this value by accepting us into Europe. These are facts. We have a very nice footprint in Europe, and this would have not been possible if the UAE wasn't accepted in Europe as a partner, knowing and trustworthy with NATO and the way we firewall things. Plus, you need another player in Europe. Even the big players today, we're working with them. There is always these collaborations, but they only start when you put your ego aside. There is always someone better than you. And you need to be on this learning curve forever.
The AI boom is usually told as a Silicon Valley story, but some of the biggest winners are thousands of miles away in South Korea. And their windfall is now spilling into an unexpected place, the housing market.
Before we saw this massive rally this year, people just like to invest in the housing market because there is no alternative for savings and investment.
From January to April 2026, home buyers used about 3.7 trillion won, or roughly $2.4 billion, from stocks and bond sales to fund purchases.
The government wanted to boost the stock market so that people could move away from homes into the stock market, but people are coming back to the property market with the money that they earned in the stock market, and it's also sort of this vicious cycle.
The danger is not that one stock market sell-off would immediately crash home prices, it's that the same wealth channel pushing stock gains into housing depends on confidence.
Welcome to Squawk Box Europe. I'm Karen Cho with Steve Sedgwick and Ben Brulos. These are your headlines. The global bond rout eases, but yields on sovereign debt hold near multi-decade highs. Investors today eyeing UK inflation data and the July Fed minutes.
Well, the bond sell-off spilling over into equities, with chip stocks bearing the brunt stateside and overnight in Asia. European futures are pointing to a lower open.
Shares in Chinese humanoid developer Unitree surge as much as 600% on their IPO as China looks to flaunt its advances in robotics and physical AI.
Could have been worse, I think, is the answer on the UK inflation data. I don't know if it's going to move the needle too much on what people expect. I will go through some of the figures for you. So UK July CPI still has a 2 handle, 2.9% year on year. Reuters poll was expecting 2.9. Services CPI, which is one of the two drivers, services and wages, which people have been most concerned about at the Bank of England for a long time, it's up 0.6%. That is a tad above expectations of 0.5% on the month. But core CPI, ex all those interesting things out there for you lot, ex energy, food, alcohol, tobacco, was up 2.6%. Again, just a tad above the expectations of 2.5. I wouldn't say these numbers are moving the needle on anything. The July CPI on the month-on-month up 0.3%. What else can I do for you? RPIX. The only reason I mention RPI because I know that certain economists out there hate it and think it's useless, but I'm doing it to annoy them. Up 0.6% month on month. That's you, Paul Donovan. And anyway, as opposed to the poll of up 0.8%. I don't think these numbers move the needle on absolutely anything. Of course, the inflation pressures are there. The inflation pressures remain there as well. But there is the argument, which has been talked about stateside, is the bond market doing the job of the central bankers for them, or actually do the central bankers need to be more hawkish in order to head off concerns that they are not in control of the situation?
The energy price cap, that was a big feature of the numbers today, so that has clearly had an impact on the headline. The typical energy bill rising by just over £200, or 221 the numbers, to close to about £1,800. So that had some bearing, came into effect in July. I think that is one of the main features. But the pressures you point out are going to be closely watched for bond markets, and whether this is something central banks are going to have to react to, tame, or is it just the one-off factor?
Well, here's the thing, and here's the fascinating thing, and let's expand this way beyond the UK. And go back to that conversation we had yesterday with Carl Weinberg as well. Is the inflation data the driver of the bond markets? And I thought he was absolutely superb yesterday, typifying the fact that, is it bond vigilantes? Maybe, maybe not. Is it the inflation data? Is it concern over control of interest rates? Or is it something else? And we talked about that AI stories. What is driving this bond market? People are calling it a rout. It's not a full rout, but it's certainly a significant sell-off, especially at the long end.
Yeah, a crowding out, I think that's the terminology, that you've got the AI issuance crowding out to the sovereign bond market even at this point. Ben?
Just going back to the UK inflation figure, actually, one of the things that could have stopped it from being any worse than it was because we had that temporary reduction in VAT over the summer for children's activities, summer holiday activities, theme parks and the like, which saw VAT.
Did you take advantage of that? Did you go to theme parks?
I didn't. I'm not one for roller coasters.
Were you at Alton Towers on a roller coaster?
The markets are enough.
Park on the water slide.
The markets are enough of a roller coaster at the moment for me. But I think the I just no. I don't like the fast rides. Not a fan. You? Do you like?
No, I hate them, but I have to occasionally do them because I have children of an age where you sometimes have to. Actually, no, I don't have to. They're dreadful. And nothing will give me more terror than the Tower of Terror. Disney, it's your fault. Karen.
I love the Tower of Terror, one of my favourite rides. But spinning teacups, I think we've seen on markets, the rotation into tech, rotation out of tech, into safer areas. The market, again, taking stock of the capex spend around AI. We saw some of the big semiconductor stocks under pressure, accounting for those falls. You saw on the NASDAQ, outsized drop of 1.3% versus 0.2 coming off the Dow. Big moving names, the likes of NVIDIA, dragging the S&P 500 lower. For the NASDAQ, it was Micron Technology. If you look at the Vanac Semiconductor, which had been bouncing recently in a couple of sessions, now pulling back 4% in yesterday's trade. So fairly strong action again around concerns about this intensity of capex that you were seeing flashing up warning signals to on the bond markets. The bond markets are certainly casting a shadow over what we saw on equities yesterday. To the Asian markets and the stabilization some are looking for. This is the trading session. It is not happening. You can see that the South Korean market stepped out selling on the technology stocks are down 6%. So again, very strong swings we're witnessing on the Kospi. Japanese stocks too down a fairly hefty 3%. Elsewhere, Shanghai caught up in some of the selling action in more than 2% of the red. It is just the Hong Kong market holding steady at this hour. And let's see what's in store for the European markets. Yesterday, again, another session where we marked lower, down 0.7%. A steady stream of red ink is what we've witnessed. Markets looking to pull back again at the open, looking fairly soft from the 50 futures across to the DAX, seen by 0.1% in the red, Steve.
Right, let us go back to the bond market story. Bond yields may be starting to pull back, but the impact of the past week's sell-off is still being felt, with the yield on the 30-year paper on Treasuries at its highest level in nearly 20 years. This ahead of a highly anticipated auction of 20-year paper later today. Bloomberg reporting the Treasury will ask investors for a further $16 billion as a sticking plaster on America's $1.8 trillion deficit for the year so far. If investors decide that means they want to return around the current yield on that debt, that's the most the US will have had to pay for it since it reintroduced 20-year auctions 6 years ago. This as global yields continue to hold at multi-year highs. Japan's 10-year debt currently fetching its highest level in around 30 years. Manish Singh is CEO at Crossbridge Capital. Lovely to see you, Manish, after the summer. Nice to see you. Look, here's the thing. There are boring people like me, and I appreciate I'm a dullard, who constantly point to the debt, to the deficits, to the yield that central banks are having to pay, and see problems there. There are bullish people like you who say, I understand that, I'm cognizant of that, but it's not going to affect the equity market. Is that still the case?
I would say yes. And let's look about this bond thing. So I don't see this as a crisis. So the closest comparison, historical comparison we can think of is 1994, which is where the bond vigilante term came from. Now clearly the debt is much higher today than it was, but that time it was because the short end of the rate curve was rising. You had 75 basis point Fed rate hike in 1994 because growth was accelerating at that time. We haven't seen, so this time it's very different to that. But what is it? Is it about term premium alone? This time it is purely about term premium. So central banks are discovering that they don't really control the long end. What they control is short end. If the short end rates were also rising, then I would be more concerned, because that is yields are going to get out of control. I don't see this getting out of control. So the yield going up by 50 basis points is not a problem. Staying there for longer is the problem.
Let me just park my concerns about sovereign debt viability to the side for one moment, because you've clearly made your point on that as well. What about this concept that actually there is only a finite amount of money available to lend to investors, to companies, to governments as well? And this vast amount of money being raised by the technology sector is creating problems. And then that reestablishes potentially, Manish, the link between the sovereign bond markets and corporate bond markets and ultimately to the equity world.
I agree. Look at UK, because we talked about UK inflation. We got the wage rate data yesterday. The public sector wage is rising at 6%. The private sector is 2%. Is that what should happen in an economy? So the governments are going to be asked the question that you're used to raising money from us in the market. You're not running the economy properly. Should be lending you money. So I think some of these things are a welcome news that puts pressure back on the government that are you running the economy the way you should? Because you've taken us for granted that we will keep funding your debt. But we will fund your debt, but we don't trust how you run the country and the economy. You need to pay me more on the long end. So I think the question is being raised that if I'm going to buy your 10-year bond and 30-year bond, should I be still expecting the same rates as past, or should I be asking you for more? So some of that, there's some illiquidity. If you look at the plumbing of the industry in terms of when a bond auction happens, we don't get bond directly. It has to be warehoused through a bank, through dealer and other networks. Are they full to capacity? Where is the liquidity ratio that banks are? And the Fed had a paper on this, and they have implemented some reform where they're trying to change the plumbing. They are using the central clearing house, or rather they would use central clearing house to improve liquidity. So there's that aspect as well. So a lot of things are into play. So I'm not concerned about bond yield as long as it doesn't stay high for long.
Can I ask you about the inverse correlation we've seen in bond yields with the equity market? Because there was a playbook. We don't actually even have to go very far back in history. It was in July. We saw a very similar circumstance when the escalation in yields happened. It flowed across to hit technology names. The NASDAQ was down then. Semiconductors got hit. And the market quickly recalibrated, recovered a lot of that territory. We bounced back towards some of the highs that we've had in recent trading sessions. So what do we make of the impact, the detrimental impact that yields could have on the tech trade from here?
So Karen, there's always a possibility of an accident because there's so much leverage in the system. There are funds out there who are doing leverage trade on treasury, on short-term treasury, on the run, off the run. So there's always a capacity that if yield was to erratically go up by 50 basis points in a week, that it could spill over into equity. Possibility, absolutely. So as an equity investor, I always say you should know the stocks you're holding. But be prepared for, you can get a massive whiplash of 10-20% move if something bad was to happen on the liquidity front. But that is always a possibility, and that's what even Fed is worried about and central banks here is worried about, that do we know the leverage in the system? Do we know the trades in the system and how that might impact? So if you're using leverage in your equity position, you have to be very careful.
even if you're not using leverage in a position, you're still seeing some fairly violent moves. I mean, so the South Korea market is a great example of that. We've had a lot of fund managers say that they saw a re-entry point in recent weeks after some of the shakeout of those leveraged positions. But here we go again. You have a global story that causes some doubt around the technology trade, and you get very violent action to the downside on the South Korean market. How do you perceive the Cosby? Is it value at this point? Is it just bumpiness you're going to have to ride out?
So my view is that, if your duration, as an investor, I always think your most important view has to be what is the duration of investment. So if you take that into account, then yes, you should be buying, because I believe in the tech story. I believe in the AI story, growth story, productivity story. I believe in all that. But all that is not going to disappear in just a quarter or just make all your money in a quarter. So Kospi and Korea, we know it's the data. It's in the data that there were a lot of retail investors whose account got closed because they were using leverage because they're 200, 300%. You cannot get 200% in 6 months. There's something wrong in the market if that's happening. So you had funds who were, I won't name any, but there's so many funds in Asia who were up 50, 60, 100%, and LPs were throwing money at them because they are the next best investor, they can use quant. You cannot run like that. Investment world does not change just because you have AI. You still need to think about your value, think about what you're paying for it, what others are doing. You have to get worried about that as well. So you have to be humble enough that if I did a thesis and I thought I'm going to make 30% return, I made 60. You have to be humble enough to understand that extra 30 is not because of me, which means it can go away, it can be taken away from me, because we don't know where it came from. It came from somebody else's zero-day trade on option. So I always think that you cannot lose sight of compounding at 10, 12% that you should do on your portfolio, and don't get excited about 50%, minus 40, 30%. It doesn't get you anywhere. So that should never change.
Manish, something that I don't quite understand is if part of the pressure on government debt that's pushing up the yields is because the hyperscalers are acting as a centre of gravity for investors. They're pulling that money away from investors wanting to invest in government debt. Why then would tech stocks sell off? Because surely that means there is more money going to the big tech companies. Investors are putting more money into the big tech companies who are ultimately going to spend that money on chips and all the infrastructure needed for the AI data center build out. So it slightly confuses me as to why on the same day we saw yields push to multi-decade highs, we then also saw a sell-off in AI-related stocks, especially chip makers. Can you make any sense of it?
Yes, I will, because when it comes down to one-day movement, it's extremely difficult to put it down to any thesis. Because one-day movement does not just make the market trend. If you look at, so how much are the equities up this year? Let's look at that. So if you were up 35% and you're now only up 33%, does that matter? That sell-off was 4% on that particular day. So that's how I rationalize it, that what is happening. It doesn't change the story. But also what marginal traders who are, I didn't sell anything. There are many who didn't sell. But the marginal ones are selling it, who are option traders. That is going to impact my price too. So when I'm putting a trade on, the gains I like to make is between 10 to 12% unleveraged return per year. That's my goal. You end up making 15, 20%. When it does happen, I tell my clients, it's not because this is going to happen every year. Just because we had a good year, the market structure was in our favor. If it goes to 8, market structure was not in favor and something else was happening. So I always take a 3 to 5 year cyclical view. What have you done over that period? In that, you're going to have the vol moment. In my opinion, NVIDIA is trading very cheap. But it could trade cheap forever because that is the cost you pay for being a leader. I mean, look at Jensen Huang kept telling people what he's doing over the last 3 years, and people kept doubting him. So doubts will always persist, but it is logical that you just cannot buy a bullish story. You have to keep betting and checking, and then you keep going on. So one-day moves are very easy because it's just done by market structure, liquidity, long-end buyers are not coming in, the short-term traders are trading it, and that's plenty of that happening. Market structure will continue to change. We will have more such days.
Is there anything that governments globally can do that's innovative that maybe they haven't tried before to try and ease the pressure on these yields, short of the good old-fashioned fiscal discipline and showing that they are serious about reining in deficits and bringing public debt under control?
Well, I think that they should. I mean, we talk about this country, we need it. We need a lot of discipline in this country, how we are running the UK. But if you talk about US, it's not a case of bond vigilantes are going and knocking. People like to knock down the US and look where the yields are. But if that is the case, the long end yield has increased across the board. So it's not just a US story or a Trump story or a fiscal story. Other than having a fiscal discipline, well, you can, as I said, you can do the plumbing measure. You need to find out. So today, if you look at 1990 or maybe last 20 years, the outstanding US Treasury debt that is coming into the market has increased almost by 4 times, and dealer capacity has not increased at the same level. Is that playing a part? These are things you don't look at unless you see, okay, so there's no short-end rally in the rates. There's no inflation risk, so why is the term premium rising? It is rising because of illiquidity, or is it rising because people want more returns? So central banks have to address, and BIS have written paper on that. Fed is looking into it, which is part of what they're doing, central clearing, so improve liquidity. Because the bond don't come to us directly, it comes through auctions, dealers, and somebody has to wear, and that needs to be looked into. So a response on all these fronts have to be required.
Super. I think we're done. Lovely to see you.
Thank you.
Thank you very much indeed for joining us. Great start to the show. Manish Singh, who is the CEO of Crossbridge Capital. Ben.
Great start to the show and plenty more coming up, including this. US President Donald Trump reverses course on claims around talks with Iran. Dan will have all the details. Plus, Russia backs the strength of its economy following reports that Kremlin fired its former deputy economy minister. Sam will bring us more on Moscow's economic outlook. And we'll speak to the CEO of Tether about all things humanoid robots following Unitree's stellar market debut.
You can master your strategy, but performance could be limited by your instrument. Precision trading starts with the right instrument. Over the past 3 years, Interactive Brokers clients outperformed the S&P 500 on average. Like returns, trading costs compound. Interactive Brokers is built to lower costs through smarter execution. Access stocks, options, prediction markets, and more across 170+ global markets. The best informed investors choose Interactive Brokers.
American soccer legend Landon Donovan. He'll explain how the 2026 World Cup could shape the future of Major League Soccer and the inner demons that drove him to greatness.
I was constantly chasing this insatiable desire to be noticed.
He's the man behind Apple's sports ambitions. In an exclusive interview, we talk about the tech giant's unique sports strategy and whether a blockbuster acquisition is on the horizon. This is CNBC Sport on the Record.
Never miss a moment.
We think there is a huge opportunity for AI in the UK and Europe because it is that middle ground between the United States and China.
Andy Burnham has committed himself to the Labour manifesto, so I don't think that that's going to change in the immediate future. I think our historic destiny is to be back in the European Union.
The world is taking you at your word, sir. What happens next?
We're never going to see Iran have a nuclear weapon.
Power Lunch, streaming on CNBC+.
US President Donald Trump has said Washington is not holding any talks with Iran and none are scheduled. It's an abrupt contradiction to the US leader's prior insistence that negotiations are underway. The UAE said all trade, commercial exchanges and financial transactions with Iran have been halted until further notice, citing regional escalations. The move came shortly after the UAE said Iran fired 2 missiles in its direction, one of which fell in the country's territorial waters. Well, Dan joins us now, and Dan, quite an abrupt U-turn from the president regarding the status of talks, and also I understand Iran's parliamentary speaker has been calling members of the Trump administration a clown crew, hardly the mood music for productive talks.
That's exactly right. And of course, quite a dramatic development in the UAE overnight as well, Ben. The UAE now taking one of its most significant steps yet against Iran, suspending trade and financial dealings after 2 ballistic missiles came from Iran towards waters off the Emirates. The UAE Ministry of Defense saying its air defenses detected 2 ballistic missiles launched from Iran on Tuesday. The Ministry of Defense also saying the missiles appeared to have been targeting maritime traffic. Of course, both fell into the sea. But the incident triggered emergency alerts across the UAE. There were no reports of casualties or damage, but certainly an abrupt end to what has been relative calm across the country over the past couple of weeks, with residents here, including myself, getting the alerts on their phones. Interestingly, Iran denies responsibility here, and Abu Dhabi's response has also moved to the economy. The foreign ministry saying that in light of the regional escalation that has undermined regional and international peace and security, all activities, trade exchanges, financial transactions with Iran have now been suspended until further notice. And this is a major move because the UAE has long been one of Iran's, I guess you could say, most important commercial gateways. It potentially cuts into a trade and financial channel that's really been critical to Iran's economy. Still plenty of unanswered questions here, major questions, in fact, over exactly what this means for Iranian-owned companies here, for property owners, bank accounts, existing transactions here in the UAE as well. The government has not yet publicly set out those details, and it's going to be interesting to see the full extent of these measures as they unfold. All of this also coming as the diplomatic track between Washington and Tehran appears to have effectively collapsed, at least for now. As you mentioned, President Trump posting on Truth Social saying there are no talks or conversations going on or scheduled with the Islamic Republic. And that really is a sharp reversal from just a couple of weeks ago when the White House was still publicly leaving the door open to a deal. The president now saying the US naval blockade will also remain in force. And that brings us to the Strait of Hormuz. The president also saying the strait is open and operating and that all water mines have been removed or detonated. But of course, the individual tanker trackers say shipping remains well below normal levels. It's back over to you.
Dan, I don't know if you've got the answer to the following question. I don't know who's got the answer. Why is the oil price so tame? Given that there are no talks, no ships are getting through, there are problems with Saudi getting product to market via other waterways because of the Houthis in the Red Sea and what have you as well. Why are we still only at 91.48 when people like Jeff Curry and others are pointing out that the products, the crack spreads, are so enormous at historical levels? Why is the oil price looking so tame?
Yeah, the benchmark pricing has been really interesting to watch over the past couple of trading sessions, right? First and foremost, I think the headline story here is that the market has basically moved on. We're seeing Brent and WTI, yes, elevated in the 90 USD handle for Brent, but still, given the fact that we have really crippled global inventories here and the fact that the conflict is not over yet, analysts have suggested to us that we should be seeing oil a lot higher at this point. Beyond the headline fatigue as well, there's probably a few other factors at play. Of course, we're seeing rising yields unfold right now, equities continuing to pull back, and at the same time as well, clear concerns about the broader kind of outlook for the energy markets here. I think it's probably a combination of headline fatigue and the fact that markets have other things to focus on at this point as well.
Which is extraordinary. Thank you very much indeed for that. And the president talking, thanks Dan, the president talking the last 24 hours about it's okay for American stuff to pay a little bit more. I mentioned cracks, but have a look, you lot out there. Do some homework if you want. I can do the work for you, but have a look at the spread now between crude oil prices and the prices that American refiners are selling product at. It will blow your mind, the spread compared with history. We're talking like historical levels that are blown out 2-3 times in some product cases as well. That is real pain for businesses and for individuals. Ben.
US President Donald Trump, meanwhile, says he will initiate a three-day pause on new 50% tariffs on Canadian goods after saying the two countries had reached a deal, quote, subject to the finalization of documents. The US leader added that the Keystone XL pipeline, which was cancelled by former President Biden, may be revived, but failed to provide any further details. We'll be discussing the outlook for US trade with the Director General of the Chartered Institute of Export and International Trade. That's coming up at 9:30 London time.
And here's the question that Mark Carney and others will be asking. When is a deal not a deal? And the answer is it's not a deal if you upset the president at a later date. Look at the UK now, potentially facing more threats from Jameson Greer and that, and they thought they had a deal a year ago, I think, one of the first to sign a deal. Talking of UK, Andy Burnham says he will move responsibility for growing the UK economy to his new number 10 North office based in Manchester in what he called a huge transfer of power. How's that a huge transfer in power? You move it from one office to another. Still the same people, isn't it? Or am I missing something? All right, it's a huge transfer of power, apparently, according to the government. Burnham says Chancellor of the Exchequer, John Healey, will give a major speech on the government's economic plan next month. With a 10-year plan. Well, that's optimistic. 10-year plan due to be released after the budget on October 23rd.
Quick look at futures as we gear up for the start of the trading day. We've got negative handover from Wall Street, some selling across in the Asian session. Europe looks modestly downbeat, and don't forget we've weathered a string of selling in recent sessions, so it is further moves to the downside this morning.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime Report, weekdays streaming on CNBC+.
There were definitely a few times when there was no money in the bank.
Before Careem became one of the defining startup stories of the Middle East, Mudassir Sheikha was trying to keep it alive from one funding round to the next. He'd left a safe consulting job, and he and his co-founder had each invested $50,000 of their own money into the company. In the early days, Careem wasn't an app that magically matched riders and drivers. It was the founders calling drivers themselves in the early hours of the morning.
It was radically basic. All we had was a website.
And 7 years later, Uber, the rival Careem spent years fighting, agreed to buy the company in a landmark deal for the region.
To do a deal with our biggest rival, the company that we thought was trying to kill us, was just very, very difficult for the organization.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
What happened today?
The market had to resort to defense.
We've got a developing story out of Washington.
What's moving in real time?
What did the numbers tell you, pro or con?
Be ready for tomorrow after the bell.
There's a wait and see about a lot of things for tomorrow, Mike.
Completely.
Melissa Lee, Mike Santoli, Closing Bell Overtime, CNBC.
Squawk Box Europe. I'm Steve Sedgwick with Karen Cho and Ben Boulos, and these are your headlines. The global bond rout eases just a tad, but yields on sovereign debt hold near multi-decade highs. Investors today eyeing the UK inflation data, which was relatively in line with expectations, and the July Fed minutes. The bond sell-off spills over into equities, with chip stocks bearing the brunt stateside and overnight in the United States and Asia. European futures also pointing to a lower open. Plus, shares in the Chinese humanoid developer Unitree surge. What are they now up? They're up 463%. They were up as much as 600% in the IPO as China looks to flaunt its advances in robotics and physical AI.
So this was the picture on the US markets at the close of the session yesterday. You can see all the three benchmarks in the red. The Nasdaq leading the losses, down by 1 1/3%. We saw a sell-off in some of the big tech chip plays. The markets really souring on the AI trade. Partly the equities feeling some pressure from the yields climbing to multi-decade highs on treasuries and globally on government debt more generally. We'll come into that in more detail in a moment, but that session on Wall Street really set the tone for the Asian session, and this is the picture on those markets. As you can see, again, mostly in the red. The Nikkei off by 3% or more. The Kospi down sharply, more than 5%, approaching 6% off. It's just the Hang Seng that's hovering above the flat line, but we are seeing that that nervousness around the tech play really filtering through to the Asian trading session. What will that mean for European trading once that gets started in the next half an hour? Well, futures pointing, as you might expect, to a negative start to the Wednesday session, all of the benchmarks being called lower. I mentioned the pressure on yields, on bonds pushing up yields and treasuries. Have a look at this. It has eased slightly, but the treasuries reached, the 30-year treasury reached almost a 2-decade high, levels not seen since 2007, and the pullback we've seen today just taking the edge off it slightly, but not giving up some of the advances that we had seen in the previous session. That's also had an effect on European borrowing costs for governments here. Those, again, easing slightly in the session, but all of that also putting pressure on government debt. A lot for investors to digest, and we'll keep talking about that throughout the show.
In the meantime, let's steer over to robots, as shares in Chinese humanoid robotic maker Unitree have rocketed on its debut in Shanghai. The stock, priced initially at 150.8 yuan a share, was seen as high as 1,100 yuan a share during trading before paring some of its gains. And let's get out to Lane for more. Lane, this is a profitable company. I was looking at the paper wealth of the founder, Wang, now $12 billion on paper.
Yeah, he has roughly a fifth of its shares in this and more through indirect shares. And yeah, investors were hoping for a big first day pop, and there they have it, still up 450%. After jumping more at the open. And this is the first humanoid maker to list on mainland China. So there's been a lot of hype. Retail investors have been rushing to get exposure. It was more than 5,000 times oversubscribed in the retail portion. And the IPO also attracted strategic investors like the Chinese AI startup DeepSeek. Now, as you mentioned, the company has real revenue growth. Its revenue quadrupled last year, and it posted a net profit in the first half after swinging back from a net loss, but its adjusted profit did fall 19% year on year as it spends more on R&D and marketing. But the institutional investors and skeptics that we've been speaking with said that beyond all this dancing and acrobatics and running, they want to see proof that this underlying technology can scale commercially. They haven't seen that yet, and they also said that it will take time to test these robots' return on investment. And indeed, nearly 74% of Unitree's humanoid revenue most of last year came from research and education. So its robots are mostly seen in labs or lobbies or demonstrations. And Unitree itself acknowledged that its robot hands, which are notoriously hard to make and engineer, are still not precise and durable enough for sustainable use. And the company has said that large-scale commercial adoption may be slower than expected. Now, in the U.S., we were talking to Adam Grosser of the VC fund Partners earlier, and he said that American robotics firms tend to focus more on very specific applications on robotics where there is labor shortage or it's dangerous for humans to work. And of course, you have Tesla starting production of its Optimus model this year. They haven't started shipping or making money off of that yet. But analysts also says that Unitree's edge lies in its manufacturing edge and its cost structure as well. Indeed, the company has been slashing prices, which help manufacturers and factories be more willing to test this technology. And indeed, across the industry, we've seen the average humanoid price plunge year over year, wholesale prices as well. And China's low-cost manufacturing has helped the country dominate in this regard. The top 5 firms leading leading global humanoid shipments were all Chinese firms. So it is, in a way, a bit of a hardware story as well. Back to you.
Lane, thank you very much. We're going to pick up the conversation about humanoid robotics with Paulo Arduino, who is the CEO of Tether. And of course, we know Tether from a different reason because of stablecoins. But Tether, Paulo, has also been a big investor in humanoid robotics of late. In recent weeks, a big investment in a raise by a German company, Neura. Just tell us how you're perceiving this huge launch in China today of Unitree and what it means for the sector.
Thank you very much for having me. Yeah, Unitree has been definitely the company to watch when it comes to the advancement in robotics. They had incredible shows of skills over the last couple of years to showcase the precision, the ability, the dexterity of these robots. It's definitely a defining moment, and now we have to see what Europeans and American companies will do in order to compete with that huge advancement that Unity represents.
Unitree also seen as potentially the first one that could be used in households as well, but I think most of us at this point are perceiving humanoid robotics as useful in factories and industrial uses. When we look at your investment in Neura Robotics, what's your big hope of how it could be useful in terms of industrial in Europe?
Absolutely. So Neura is a great example that I think that is much more practical to think about robotics for the next 5 years when it comes to industrial. Neura is definitely has a humanoid robot. They are developing that. They are progressing very, very fast towards the humanoid robot. But I believe that when it comes to revenues and in a short term will be all about industrial. So how we can improve the pipelines, how we can improve the workforce, how we can make sure that we get to a precision that hardly humans can get when it comes to miniaturization and similar. So that is a huge advancement. I know that Neura is working to build robots for hospitality, for healthcare, and many other verticals, and that will continue to grow in the next few years. Tether also invested in another company called Generative Bionics, that is an Italian one that is building humanoid robots, bipedal robots. So we are testing the market. We believe that coming from the stablecoin and digital money ecosystem is important for us to envision a future where robots, both in industrial sense and in, let's say, day-to-day life sense with humanoid robots, we start using programmable money.
Glad you brought that together, because I was wondering how this changes the business profile of Tether, because I mean most of us spend the whole time talking about your stablecoin USDT and how successful it's been, what it could mean in future of agentic and how it could be used in terms of the transfer of certain payments. Just link this all together for us. How does the profile of the company change, and what do you think is the real upside of linking robotics with the fintech platform that you have?
Absolutely. So we have to imagine a future, let's say in 10 years, where you have 10 billion humans, 10 billion robots, and 1 trillion of AI agents, all together. They will transact with programmable money. Programmable money, USDT is programmable money, is money that runs on a blockchain, runs with smart contracts that by definition are programmable money. USDT will be embedded in the brains of the robots, as is already embedded in the AI agents. And so we have to envision a future where robots and AI agents will transact at the speed that is 1,000 times the speed of humans. And so they will make 1,000 times more transactions per day, or even 1 million times at some point in the next decades, the number of transactions of humans. And so testing already our technology, our wallet technology, our stablecoin technology in the robot's brain, I think is very important to understand how the future will look like.
Paolo, good morning to you. Can I ask you a few questions about the business and how you get a roadmap to Genius compliance as well? You know better than I will ever know that there are going to be continual questions over the next couple of years until you show the roadmap to compliance, and you also just show publicly the results of your audits. Why are you not doing so, Paolo?
Well, we just released a few days ago the audit from KPMG US. That is a full audit. That is the biggest inaugural audit in the history of finance, because we have audited $184 billion worth of assets. KPMG checked every single rock, turned every single rock, went deeply into our operations. And if you look at our press release, they even counted every single gold bar and checked every single gold bar that is also part of our reserves. So I think that why, despite all the critics over the last many years that said Tether could not get audited, didn't want to get audited, we got the audit, and not just an audit, we got a Big Four audit from the biggest firm in the world, and also a US one. So I think that should shut down pretty well the critics.
Paolo, it's not going to. You know that. Why don't you make it public?
Well, you know that, for example, many private companies, including Bloomberg, that is providing all the possible services to financial services and so on, does not disclose its public audit. So, well, does not disclose publicly its audit. So, Tether is a private company, and you can easily call, as a journalist or reporter, you can call KPMG, and they will gladly confirm that our audit is unqualified. That means, despite the word unqualified, means that is very positive, it's unqualified clean. That is the highest level of opinion, audit opinion you can ever get. So no emphasis on matter was found on our audit. That can be confirmed. That was confirmed by many reporters calling KPMG, asking them to confirm our statements.
How are you going to get to Genius Act compliance as well? There are concerns about the assets you hold that are not going to be fit for compliance with Genius Act, and that you haven't got a roadmap to full compliance to 2028, and the fact that you're based in the British Virgin Islands is just not going to satiate it with the US regulators.
First of all, we are not based in the British Virgin Islands. We are based in El Salvador. El Salvador is the first country that issued a stablecoin legislation. Also, we keep the vast majority of our assets, i.e. the US Treasury bills, in Cantor Fitzgerald, that is a US custodian and is a US broker-dealer. So that shows that we are not hiding the reserves, we are not hiding ourselves. Also, we got to just the audit, as I said. Also, Tether is, despite, in a world where every single company that people invest to, like, most of the stocks are loss-making, think about all the AI companies, Tether is actually the only company in this world that is actually, or one of the few companies in this world that is making quite a good amount of profits. Last few years, in the last 3 years and a half, we amassed more or less $30 billion in profits. That would make it very reasonable and feasible to get to full Genius compliance. So we think that it's something that is in our roadmap. We are working towards that direction. We are increasing the number of US Treasuries that we have in our portfolio. Actually, in 2025, we were one of the top 5 biggest holder buyer of US Treasuries, and we are the 17th largest holder of US Treasuries. So our collaboration with the United States will continue. We think that stablecoins are going to be the tool for the US dollar hegemony continue to expand and diversify towards a broader user base.
Paolo, final one from me. So in order to comply, this is simple. Just base yourself in the United States. Put yourself under their jurisdiction. Why did you move from British Virgin Islands to El Salvador when actually you could have moved to the United States and it would have solved all of these issues?
Well, when we moved to El Salvador, there was no legislation in the United States. The legislation in the United States came late last year. And so we also complied immediately with one of the main requests that we got, like issue a domestic stablecoin, which we did. It's called USAT. And our future, again, we have 2 years to comply And we're working towards that direction. Plus, we comply with all EML and KYC requirements of the Genius Act already. We comply with sanctions. We comply with OFAC. We work with 300 law enforcement agencies across more than 60 to 70 different countries. So there is no financial institution in this world that is as compliant as Tether. We are growing very fast, and we are defining an entire new industry. So I think that as for the KPMG audit that people kept saying, we would not get. Instead, we got it. We demonstrated everyone wrong. So I think that we are in the right trajectory here.
Paolo, I want to ask you about the landscape, because there's no doubt the rise of stablecoins in the United States is being linked to the greater usage of the US dollar down the track, that perhaps it does protect the reserve status of the US dollar. Those links have already been drawn. But when it comes to Europe, we know that there's been no private innovation. In fact, your own endeavours in Europe were shut down. The ECB wants to do this themselves in terms of euro coin. Where do you think that leaves the euro as a reserve currency? Is it going to be on the back foot in 5-10 years' time?
I think unfortunately, look, I'm Italian, I'm European, and I feel like, unfortunately, euro is a Series B currency. Is not perceived that well outside Europe. If you think about it, if you go everywhere in the world, you go to Africa, you go to Central South America, you go to Asia. If you have a dollar in your pocket, then you can transact, you can pay anything. Everyone will accept it. The euros will not be accepted. The euro, people in many countries don't even know about the euro. And so that is quite saddening, because in the future, and we are already seeing that, in the future, let's say wars will be fought with currencies. And I think that the euro will not one of those main currencies that will succeed in the long term, unfortunately, because either Europe will do a better job for defending the currency and helping global commerce to trade in euro, and will help also companies like ours to help themselves in bringing the euro outside Europe, or this all will be stagnating over the next decade. So if you look at the biggest stablecoin in euro today, it's 400 million euros. That is a drop in the ocean of the dollar stablecoins, and there are not major signs of change that direction.
Paolo, fascinated to have your thoughts on that. Thank you so much for taking the questions and joining us this morning. Paolo Ardoino, who is the CEO of Tether.
OpenAI reportedly saw revenue rise to $6.7 billion in the second quarter, an 18% rise compared to the first quarter. That's according to the Wall Street Journal, citing people familiar with the matter, which also reported its operating margin worsened over the period as the AI startup saw its losses deepen to $12.3 billion. OpenAI says it has expanded its monitoring of new AI models as it looks to increase its security following a breach where one of its agents escaped controls and went on to hack another company. The AI lab said it now aims to issue an alert within 30 minutes after any concerning activity is flagged through its monitoring system. Meta has rejected accusations made by some US states that it intentionally looked to addict children to Instagram and Facebook in the aim of generating profit. The accusations came on the first day of a landmark trial against the social media giant in California. Julia Borston filed this report.
In this bellwether case in Oakland federal court, the biggest yet attacking Meta's child safety issues, both the plaintiffs, comprised of 29 state attorneys general, and Meta presented their opening statements. The lawyer representing the state suing Meta asking for monetary damages and changes to its business practices, alleging Meta's financial success depends on keeping kids on its apps, saying that it knowingly developed features to take advantage of them, while the lawyer representing Meta focused on its efforts to improve its policies, asking the jury to consider whether its features such as the ability to have multiple accounts, its time management tools, and its efforts to block users under age 13 are unfair. The trial's first witness was also called to the stand, former Meta employee Arturo Bejar, who testified that safety and security was an afterthought during his time at Meta, also saying Meta's focus on metrics and growth was to the detriment of child safety. With the stock dropping 4.5%, it's now down almost 30% over the past year. Julia Borston, CNBC Business News, Los Angeles.
All right, coming up on the show, is the Russian economy in trouble? Government officials tell CNBC it isn't. Well, they would do, wouldn't they? But recent moves by the Kremlin have raised eyebrows for those sceptical of the country's economic growth. And we'll discuss more next. And remember, you can just subscribe to the Daily Open email. It's written by the head of news and programming. It's brilliant newsletter giving you a quick and succinct recap of key markets-related stories from overnight, as well as a look ahead to what's coming up on the trading day.
One of the world's largest private climate investment vehicles, Altera, aims to mobilize $250 billion by 2030.
What we're trying to show is that we can align those objectives and we can make money doing it.
Clean energy, emerging markets, even the AI boom. The opportunities are vast, but how do you pick the right investments?
We have people who specialize in these investments, and that's what makes Altera unique. That's our secret sauce.
Find out more on the next Managing Middle East.
From the markets to the courts. Kick back and relax while we serve up the highlights. Tackle your weekend. This weekend, race to your screen. The adventure continues. Dive into the action with CNBC Sports. CNBC Sports, afternoons on Saturday and Sunday, only on CNBC.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
This is not just good content, this is good business. It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has the chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
I'm with Becky. This is the greatest show on earth.
Squawk Box, streaming on CNBC Plus. Be there for the opening bell.
Welcome to Squawk on the Street.
What's moving? The biggest guests, the market action.
Right here.
Squawk on the Street, CNBC.
Welcome back. Former Ukrainian Defense Minister Mikhailo Fedorov has called for, he's a very popular gentleman as well, by the way, has called for wartime elections, arguing the nation faced a crisis of governance. Authorities implemented martial law in the aftermath of Russia's invasion in 2022, with this preventing elections. Fedorov was ousted as the country's defense minister earlier this year after 6 months in the role. His dismissal sparked protests in Kyiv and has sparked the most significant challenge to Volodymyr Zelensky domestically since the war began. Meanwhile, Russian government officials told CNBC the country's economy remains strong. They kind of would do, wouldn't they? Following criticism from a former deputy economy minister who has subsequently reportedly been fired. Sam joins us now with more. Well, both stories absolutely fascinating. Take it where you want, Sam.
Yeah, I think we should talk about Fedorov, but maybe we'll just quickly do the Russian economy bit first. So, I mean, as you say, it's expected that the Russian embassy in London would say that the economy is resilient, that it remains strong, but actually there are fresh questions about the cost of the war in Ukraine following this reported firing of Andrei Klepak, the former chief economist at the State Development Bank, VEB. Now, his comments were fascinating. They were actually made earlier in the year, but they surfaced in Russian language media over the weekend. And he said that Russia couldn't win a prolonged war of attrition with Ukraine. He said that economic costs were mounting, and while the economy wouldn't necessarily collapse, there could be a major social crisis and Russia could fall further behind its
Let me ask you a quick one on that before I think Karen or someone will ask you about Fedorov. Yeah. Because I have had the privilege of being in Russia many times over the years, and the team that I last spoke to when I was allowed to go to the country are still in place pretty much. The likes of Siluanov, the likes of Nabiulina at the central bank. These are highly competent individuals. No matter what people think about who's running the country, the likes of Siluanov, the likes of Nabiulina, these are very, very smart individuals as well. What are they saying? Are they coming out of anything that's at all different from this narrative?
Yeah, not too much. I mean, Klepak himself was seen as someone who was a highly capable economist. So the view of him from outside Russia was one that was very positive. He would ground his views in reality and not be someone that was afraid to kind of go against the grain with the Kremlin. He even has a run-in with the economy minister when he was a deputy economy minister for some of his macroeconomic forecasts, which were kind of somewhat bleak. I think there was some pressure on him to make them be a bit more glossy or rosy, if you like, but he resisted that. So there is a reputation there.
Yeah. Just very quickly, this is an election that the entire world could be focused on when it comes to Ukraine. Fedorov has been pushing for a wartime presidential election. He was dismissed previously. He's been concerned that the democratic process hasn't held up, that there are corruption scandals across Ukraine because the whole focus is on war, fighting Russia. Just flesh this out for us and how significant it is for Ukraine.
Very significant. Yeah, Steve mentioned that this is a highly popular minister. He was someone that was credited with energizing the defense ministry during his 6 months in post as minister. He is an advocate of drone warfare. He was someone that was trying to lead the charge to get issues of corruption outside of government. And when he was ousted late last month, there were protests nationwide, such was his popularity. So this is really throwing down the gauntlet to Zelensky now. And as you say, the whole world will be watching for the president's response. I will be a couple of times.
So I've got so much more to ask you about this as well, because how you hold an election when there are so many contested areas, that for me is the key.
Big question.
Trump previously demanding an election too in Ukraine, so there's a lot to unpick.
Trump was on the back of his Alaska conference with Putin. Funny that.
Yeah, Sam, thank you so much. Let's take a look at what we're seeing on futures as we gear up for the start of the trading session. We flipped. Look at that. We're in the green. The market has been down for a number of straight sessions. We're picking up on negativity from Wall Street, from Asia. It seems as though we've improved as we count down towards the session.
One hour of added insight every morning doesn't just add up, it compounds. 1 extra hour every morning delivers exponential value and a pure investing advantage. That's the compounding edge. The all-new Morning Call.
I'm Morgan Brennan, and this is your Morning Call.
CNBC. Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange. Streaming on CNBC Plus.
A market shaping industries. We are watching the sixth little dragon, the first to be listing in the Hong Kong market, supply chains, and global momentum.
Do you feel pressure to create the next Labubu soon?
This really is a business first pivot despite the geopolitical strains. The China Connection, weekdays.
The trade heads are gathering against the backdrop of the global energy crisis.
CNBC.com and the app anytime. Let's get to your headlines. Only on CNBC, connecting you with China.
I grew up a news junkie. It's really the only thing I ever wanted to do. I like holding people to account. You can't just show up and say, I like XYZ stock, because I'm going to ask you why. And then if you say you sold it, I'm going to say, well, why'd you sell? Get away from talking your book and tell me the real story. Ambition is a fuel and a fire. They call me the judge for a reason. I'm supposed to make people squirm as long as I get the goods at the end of the day. We're talking about people's money. I feel the weight of that, the responsibility, and I love it.
the thing, isn't it? Two of the big worries we have at the moment as well about the war, the multiple wars we're having, but the one that's affecting the oil price the most, which is in the Middle East, and the concerns about the bond markets. What's it doing to the equity market in the round? Absolutely very nothing on the surface. Let's be honest about it. The volatility measures, as we discussed yesterday, remain low as well. Yes, some equities came off yesterday, but by and large, we're holding most of the recent gains as well. The big question I have is, why aren't we being more effective? I'm not sure if Karen's got the answer at this open, but she's going to look at the markets anyway.
Indeed. Steve, what is of note is that we've been falling for 5 straight sessions. So the negativity has settled into the European markets as well, even though we've been talking about concerns around CapEx, the extent of that, whether it's going to reap the rewards that have been invested, the rise in bond yields. European markets that were seen as one of the big diversifier now have been under pressure in recent trading patterns. But what we've got this morning is a little bit more green, moving back onto the charts even early on. Basic resources, that's popped 0.4%. We've got a third on chemicals, construction, telecoms. So a little bit of breadth coming back into this market on the open, again, with very slim ranges in terms of the percentage jump. What we've got, if we flip over those boards and take a look at some of the worst performers, it's media names. We're down 0.2 there. Retail stocks, a very firm trade yesterday. We saw a lot of broker changes around the target prices for the likes of H&M. That moved towards the top of the benchmark, along with Next. The sector had a lights on moment. So just giving back a little bit of territory out of the gates, although you can see that has now moved around. Real estate, healthcare, food and beverage, some of the other areas of weakness this morning. Let's get into the bourses and take a look at the starting point. The FTSE, for instance, we managed to snap a 6-day losing streak yesterday, but with faint ranges to the upside. We again are seeing very slim ranges, less than 0.1% as we just trade off that 10,800 point mark. French stocks also picking up about just over 0.1% along with Italian names. So that's a bounce. Again, the negativity has been very evident here. French stocks, 6 negative session in a row yesterday, down 0.8%. So reversing again some of that red, but it is very cautious, very tentative still at this hour. And let's push on and take a look at some of the big chip plays, because some of that selling pressure stateside was around the tech stocks. The growth areas being very much hit by the debt position, the credit side, that the bond market was putting pressure on these big tech names. Micron was down yesterday. We saw Nvidia selling off out of the semiconductors. The VanEck semiconductor was down more than 4%. Here in Europe, picking up on that very negative lead. You can see it's a mixed bag. ASML is tracking high along with ASMI. ST Micro, though, still in the red with Infineon. Ben.
Dirk Steffen is the CIO for EMEA at Deutsche Bank Private Bank and joins us now. Dirk, we have seen, I suppose, the story dominating so far this week in terms of markets and assets has been the jump in government bond yields, treasuries and the like. This, as we approach the annual gathering at Jackson Hole, what do you think the bond markets investors want to hear from Kevin Warsh when he speaks at that gathering?
Yeah, good morning, everybody. So I think, first of all, they want to hear something, right? So because Kevin Warsh was quite, let's say, brief in his latest communication. That's also why we are quite excited about tonight, right, when we get the FOMC minutes to see if we get some more color on the decision process and what has been discussed in the committee. So this, in our view, also one of the reasons why the bond market is, let's say, in a bit of a disarray. I mean, it's maybe a big word, but we certainly have concerns in the market. And you see that this concept of the term premium, which seems to be long gone, right, is very much back on the agenda. So investors want to be compensated for longer duration. And we see that this increased uncertainty with the lack of guidance by the central bank is actually not helpful these days. Fortunately, today we see yields moderating a little bit. I mean, it's not all clear, but obviously these very elevated yield levels are also enticing for bond investors. I mean, I'll stop there in a second. 3% real yield for 30 years is, I think, a big number. So we expect that there's also still some significant bond demand coming back to the market at some point.
In your notes ahead of our conversation, I note that you talk about earnings having broadened out and saved the day in terms of the rotation we saw over the summer. Just expand on that a little and flesh out what sort of rotation you feel we saw that is potentially enduring and most significant.
Absolutely. So if you look at what happened more or less since the end of June, so 22nd to be more specific, we had the peak in, let's say, what was the huge memory rally, so memory lane, however you want to name that. And we had markets like Korea hugely outperforming, and also then specific sectors in the US with semiconductors. So apparently you had a huge demand shock and a huge price shock in segments, and you can see that in earnings that grew in a stellar fashion this year. So we have South Korea, for instance, growing by more than 200%. We have the semiconductor index in the US growing earnings by 100% by estimates for this year, 2026. And I would say it's quite logical to see the price performance of these markets, almost explode. But this all peaked, as I said, end of June, and we had a big rotation towards other names. Namely, we got, let's say, almost flat performance by the hyperscalers that had not been performing for 2 or 3 quarters. You had defensive sectors outperforming. You had also Europe doing relatively well compared to that, and that's why we call it a rotation. What we mean by earnings fading today is that if you look at the earnings picture these days, and the earnings season is wrapping up just these days, you will see that it's not only tech sectors or tech-related sectors like IT, communication services, and discretionary consumer. It's more than that. So financial is doing really well. We have also industrial delivering, and all but one sector are not performing. So that's what we mean. The earnings picture is really supportive, and that's why the rotation can go without major setbacks for the overall market.
Yeah, but lovely to hear your comments there. But here's my problem, well, one of my many problems. If I'm looking for something that isn't AI, that isn't tech, whether I should be or shouldn't be, let's leave that judgment aside. If I'm looking for something aside from that to give me a port in the storm, immediately I'll look at the financials, which has been a brilliant sector in terms of performance. They're making loads of money. We've addressed that imbalance with the US to a large degree, although not entirely as well. But the sector's up 34% over the last 12 months in Europe as well. It's not as if it's been unloved, is it?
I mean, it's, of course, it won't go on like that in a linear way, but it's certainly backed up by earnings, right? So that's why when you look at the markets, most markets are trading much cheaper now than at the beginning of the year. So that's why we are still confident that this rally we had is actually sustainable. And instead of let's say, a fierce rotation with strong losses for the overall market, which is something we had in 2024, we had this rotation, let's say, below the surface. And we think that earnings really make a difference this year.
Dirk, you've warned us about some air pockets in technology, that if you're owning the sector, you could experience some air pockets. But if you chart a lot of the other sectors in Europe, for instance, healthcare, food and beverage, you could also make the case that there have been air pockets in the trade of late too. It feels like everything is bumpy out there. Do you have the same observation?
I mean, the air pocket theme is dear to my heart, so it's very much related to the chip sector, really, where we're talking about multi-year planning horizons for supply, and there's oftentimes also potential for a mismatch, right? Where there will be quarters in the future where AI demand or compute demand is very strong and the supply is not there yet, and the other way around. That's why we think that how you can explain the huge volatility in the space. But the same is obviously true for other sectors as well, because in the end, stock markets are in the business of discounting the future, right? So it's always about future demand and future supply, and there's a lot of uncertainty in there as well, of course. So it doesn't apply only to the tech sector.
I mean, household goods in Europe, I'll throw that in there, it's just cratered in recent weeks after climbing to fairly decent levels. Now, let me just push on to where you started. You're talking about the term premium in markets. The New York Fed has estimated that there could be roughly 80 basis points of that now when it comes to the 10-year. How much worse could the term premium get if we're talking about 80 basis points today?
I I mean, it's of course the more art than science to estimate that term premium, right? But if you look at standard models that didn't work for more than a decade, they are back. They are back and they are becoming fashionable again because for years, actually, investors had not been compensated for taking on duration risk. So now the 80 bits, I think, is a good starting point because we're coming from deeply negative levels, as you know. And we think over time, there's still room for the term premium to rise further. It won't be like 2% overnight or something like that, but it's a gradual process. And I think that's one of the main reasons why the long end is suffering so much these last weeks.
Just around the circle and just go back to that banking versus technology story as well. I can bet your bottom dollar or my bottom dollar that sooner or later people will start saying, oh, I'm worried about the financial sector because of its exposure in terms of lending to the technology sector. It doesn't seem to have happened yet on either side of the Atlantic. Do you have any concerns at the exposure of European financials and global financials, for that matter, to the AI tech boom?
I mean, I'm not overly concerned. It's I think a very stable business and it's a profitable one, right? So we think that AI is a secular growth story, and there's a lot of evidence for that as well. And we're talking about profitable companies. Then, of course, the innovators and the non-profitable companies need the cash, right? So now we see that cash-rich companies somewhat move the cash to the companies that need the cash in order to expand. So we think this is a normal process for the market. And of course, the financing side is very important in this. So credit risk management is of course a priority in all that, and it won't be let's say a calm market going ahead, but we think that the opportunity is just outweighs so much the concerns that we will still be supportive of that.
Dirk, lovely. Thank you, sir. Nice to see you. Dirk Steffen, who is the CIO of EMEA Deutsche Bank Private Bank. Carlsberg says its organic growth outlook will come in towards the upper end of its guidance, despite just missing first half operating profit forecasts. The world's third largest brewer said that the benefits of its purchase of Britvic were delivering faster than expected benefits. Coming up on the show, the world's largest humanoid robot maker by sales surged on its Shanghai debut, up a mere 457%. Okay, this as Unitary goes public. We'll have some more with Elaine after the break.
Breaking news, market moves. Scott Wapner from the NYSE. Closing Bell. Weekdays streaming on CNBC Plus.
Listen to CNBC on the move with the CNBC app.
A check on how Europe is set to open the trading day.
Real-time market updates. A lot of strong numbers this morning. Listen wherever in the world you are. Download the CNBC app now.
As the Asia trading day begins, join me for Squawk Box Asia. What are you watching? Nobody would be thinking that level of a benchmark is possible. We're live across the region covering what you need to know from here and around the world that would shape the business day.
We know there's two winners in AI. It's going to be China-US.
Let's stay away from these companies that are selling it at 40, 50 times sales.
Join me for Squawk Box Asia, only on CNBC.
Never miss a moment.
We think there is a huge opportunity for AI in the UK and Europe because it is that middle ground between the United States and China.
Andy Burnham has committed himself to the Labour manifesto, so I don't think that that's going to change in the immediate future. I think our historic destiny is to be back in the European Union.
The world is taking you at your word, sir. What happens next?
We're never going to see Iran have a nuclear weapon.
Shares in Chinese humanoid robotic maker Unitree have rocketed on its debut in Shanghai. The stock, priced initially at 150.8 yuan a share, was seen as high as 1,100 yuan a share during trading before paring some of its gains. Let's get out to Elaine for more. Elaine, this one has really captured the attention. All the optics that we've seen of dancing of robots. Just tell us how investors have responded, because it looks like a runaway day for the stock.
Yeah, it's another blockbuster debut after CXMT earlier, and now opening at 629% earlier. It's still up 460%, and there's been a lot of hype leading up to this star market listing, because this is the first humanoid, pure play humanoid maker to list on mainland China, and retail investors have rushed in. This was oversubscribed more than 5,000 times in the retail tranche, and the IPO also attracted investors, strategic investors like DeepSeek as well. Now, Unitree has seen real revenue growth, unlike many other early-stage robotics companies. It posted a net profit in the first half of this year, swinging from a net loss last year, but its adjusted profit did fall 19% year on year because it's spending more on R&D and marketing. Now, the investors and skeptics that we've spoken to said they want proof that these robots and their underlying technology can scale commercially and be more widely deployed beyond just dancing and acrobatics and running, and it takes time as well, they say, to test their return on investments. And a lot of their revenue has come from research and education, being used in labs and lobbies and in demos. And it has 9% of its revenue, most of last year, did come from this industrial segment, but it's still more focused on corporate tours. So it is a long way from that commercial deployment that investors want to be seeing. And in a way, a main constraint is also on the software and the AI part, which is basically the robotics brain, and more than half of the IPO proceeds are going to go into intelligent robot making, according to the firm.
Elaine, UniCredit, not the only robotics firm in town. In fact, there's another one with an enormous market share, Agibot, 44% when it comes to the global market. It is in the industrial use side, but it's also looking to IPO. So if you missed out on this one, tell us about the next one coming and whether UniCredit really has set the scene now for Agibot to come to markets.
Yeah, this company, they're named after AGI, and they are expected to come to list in Hong Kong. So it's interesting to see a lot of these robotics makers, eyeing the Shenzhen or Shanghai market. But Agibot is looking to list in Hong Kong, and UB Tech is already listed in Hong Kong. And although we see a lot of these robotics companies trading in the red, it could be because of not enough liquidity and this big IPO sucking that up, as others are trying to reallocate from other shares to bet on Unitree. But altogether, we see the top 5 companies that lead in global humanoid shipments so far this year are all Chinese firms, and analysts say it's also because it is China's low-cost manufacturing and an end-to-end supply chain that has allowed these companies to scale. Agibot did overtake Unitree in the first half of this year in shipments. So Unitree is definitely facing some competition as well. And also earlier in this marathon among humanoids in China earlier, Honor, another robotics maker, beat Unitree. So, I mean, the competition is with the US, yes, but it's also very much heated in China. Although it's talking about the competition, we have to talk about geopolitics and the situation in the US as well, because the US recently banned new humanoid and quadruped robots that are foreign made, which is seen as targeting Chinese tech and products. And the US did make up 13% of Unitree's revenue last year. A lot of these are also used for research humanoids because of their lower cost, and it's because researchers said it's easy to buy them online, which is why it's sort of the default choice for a lot of these American universities. And Unitree said that it may not be able to sustain its rapid growth overseas, and overseas sales do make up more than 40% of its sales. And it said that its performance can even decline if these US restrictions continue. So it is facing competition abroad and also definitely at home. Back to you.
So a lot of competition in this space, Elaine. Thank you very much for that.
What a brilliant report.
Yeah.
Elaine, if you're just listening, thank you. That was brilliant. Top 5, all Chinese.
Yes.
They're cheaper. They're doing amazing things. Agibot, Unitree, whatever. They're doing amazing. Where's Optimus? Where's Tesla? It's all very well people loving Elon Musk, and I get it. The guy's mercurial. He's interesting. He's fun. He's kind of a bit crazy. He says some terrible things as well, but that's another story. How do we justify Tesla's 175 times forward valuation when they've pretty much given up on selling cars as they are now? It's about robo-taxis, it's about power banks, it's about AI, and to a great degree, it's about humanoid robots, Optimus as well. How on earth can we justify Tesla's extreme premium when you've got these Chinese companies, as of Elaine's report, absolutely wiping the floor internationally?
Well, I'll tell you a story. So a couple of years ago when I was at Viva Tech, I asked Elon Musk a question, and others in the room asked him questions too. And one of the big questions that came up was, what else do you want to do next? And we all thought it would be mass market car, something not too far out, not too distant that he could really monetize. And he spoke about humanoid robotics, and he spoke about going to Mars. Those were his two big things. What happened in the 2 years? He got funded in public markets for those two ventures. So very frontier technology, I think, is what you're saying now get funded by investors in the United States. Where is it? Surely it's coming next, because the money and the investment has been put behind these ideas. You've seen it in frontier labs as well. You're seeing it in quantum. I think these ventures that have been easy to get off the ground in China, there's a lot of VC money there. There's a lot of looking into the future. What do we want to be in 10, 20, 30 years' time? It hasn't been as evident in Western markets, and the funding's not been as readily available. I think that's changed. I mean, the fact that OpenAI has been so successful in its funding rounds, a very big amount of capital raised to fund compute, has been evidence that there is a real change in psychology around frontier technology. So it's coming is the answer.
I don't buy it. Where's the show? Sorry, I always go back down to Cuba Gooding Jr. Show me the money. Show me the profits. Show me how your route to profitability for both OpenAI and Tesla, if we're going there. How's that going to be? Anyway, I think it's the same old trope, isn't it? But we've kind of done the one. I better move on. US President Donald Trump has said that Washington is not holding any talks with Iran. Wow. No talks and none scheduled. And yet the oil price, it's up a bit, but it's not that much, is it? An abrupt contradiction, anyway, to the US leader's prior insistence that negotiations are underway. The UAE said all trade, commercial exchanges and financial transactions with Iran have been halted until further notice, citing regional escalations. The move came shortly after the UAE said Iran fired 2 missiles in its direction, one of which fell in the country's territorial waters. Dan, I'm bemused about technology. I'm bemused about why the oil price isn't higher, when the fact that we are short on reserves, short on diplomacy, and quite frankly, the crack spreads have gone through the roof as well. I cannot understand why oil is so tame.
Yeah, it's a fair point, Steve. And what's also interesting is you mentioned the crack spreads there. Well, look at what's happening inside products. Perhaps the escalation is taking place on the consumer side here, with the price of gasoline and other products surging in the last couple of days. The headline oil price suggests all calm at the moment, but Brent's still holding on to that 90 USD handle. All of this also coming as we see the president now saying there are, quote, no talks or conversations going on or scheduled with Iran. And on the Strait of Hormuz in particular, the president says the waterway is open and operating, but of course commercial traffic, we know, remains at a trickle well below normal levels. It's certainly a sharp reversal from just a couple of weeks ago, when the White House was still publicly leaving the door open to a deal, and Trump was saying that Iran was begging for a deal, in fact. So it seems as if on the diplomatic side, things have completely stalled out here. And beyond the region as well, I want to draw your attention to a Financial Times piece this morning that is also getting a lot of attention. The FT reporting that Iran has considered attacking US military targets inside Europe if the war escalates. Now, that's according to 2 regime insiders speaking to the FT. US assets in Bulgaria and Cyprus were weighed as potential targets, according to the FT's report. CNBC has reached out to Iran's its Ministry of Foreign Affairs for comment, and has not independently verified the story. But it still speaks to perhaps some of the narrative that we're hearing from the regime at the moment when it comes to possible next steps. Of course, a very dramatic escalation in the UAE overnight. The UAE escalating its own response to Iran after we saw 2 ballistic missiles detected heading towards waters off the Emirates. The defense ministry here saying both missiles fell into open water. There were no casualties or damage, and Iran denies responsibility. But here in Abu Dhabi, they've just suspended all trade, commercial exchanges and financial transactions with Iran until further notice. Again, the full details of that still emerging, but nevertheless, quite a significant development on the UAE front as well.
Okay, Dan, thank you very much. Still to come on the show, the UK's Trades Union Congress calls for a tax on banks to help lower energy bills. We'll take a look at what that might involve after this break.
In this CNBC Explains, we explore why Asia is leading the global IPO market.
We have a really big year for IPOs with SpaceX, OpenAI, Anthropic, but analysts are pointing out that there's much more volume here in Asia.
And we look at how South Korea's AI chip boom is spilling into the housing market.
In Korea is a reflection of what people consider as their safety net, as well as a symbol of success.
The show that explains the why behind the headlines, only on CNBC.
I was studying molecular biology, going to grad school. I started investing a little money for my dad, and I got bitten by the bug. I was a stockbroker, and it's fun, but we all wished we could just follow the markets and talk. My ambition was to be able to pay my bills and not have to constantly be selling. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime Report, weekdays streaming on CNBC Plus.
Fast Money is America's post-game show.
Basically, near all-time highs against the S&P.
Every single story that we pick is a tie back to the markets.
Those sort of revenue streams don't trade at a great multiple.
We want to arm people with the information to make great decisions.
Stock got whacked. I get it. People say they overpaid. I get that.
Fast Money is all about the chemistry. We've been successful for this long because we're a team.
Fast Money, CNBC, streaming on CNBC Plus.
Welcome to Squawk Box Europe. I'm Karen Cho with Steve Sedgwick and Ben Boulos. These are your headlines. The global bond rout eases, but yields on sovereign debt hold near multi-decade highs. Investors today eyeing UK inflation data and the July Fed minutes. The bond sell-off spills over into equities, with chip stocks bearing the brunt stateside and overnight in Asia. European stocks treading water at the open. Shares in Chinese humanoid developer Unitree surge as much as 600% in their IPO, as China looks to flaunt its advances in robotics and physical AI.
Let's check in on the markets. What are we now? Half an hour into the trading session, and they've been really lacking any sort of clear direction. About 10-15 minutes ago, they were all just above the flat line, all four now with the exception of the CAC 40 just below the flat line. The CAC 40 advancing about 0.25%. We've seen the pressure on equities from the rise in bond yields globally this week. That has eased slightly, but we are still seeing equities a little under pressure. Let's have a look at how this plays out sector by sector. These are the sectors where we're seeing the best gains. It's construction, which is advancing almost 0.8%. Telecoms also on the board of outperformers. Basic resources jumping up there above telecoms, and oil and gas, unsurprisingly, up around 0.5%, tracking the oil price higher. International contract for Brent crude now above $90 a barrel, given all that uncertainty around the status of the talks between the US and Iran. President Trump saying that the US is not having talks with Iran, as we were hearing from Dan a few moments ago. In terms of the biggest losses, these are the sectors where we're seeing a bit of a downturn. It's banks off by around 0.5%, media stocks giving up some territory this morning, real estate as well, and insurance also trading softer this Wednesday. Let's cast an eye ahead into what's being anticipated for Wall Street when trading gets started. A modestly higher open being pointed to by the futures. Of course, one of the big things investors will be looking out for today is those minutes from the Federal Reserve's last meeting in July. Any clues about the thinking of the FOMC on inflation rates and the future path. Karen.
Let's get into this bond story, as bond yields may be starting to pull back, but the impact of the past week's sell-off is still being felt, with the yield on the 30-year Treasury at its highest level in nearly 20 years. This ahead of a highly anticipated auction of 20-year paper later today. Bloomberg reporting the Treasury will ask investors for a further $16 billion as a sticking plaster on America's $1.8 trillion deficit for the year so far. If investors decide that means they want a return around the current yield on that debt, that's the most the US will have had to pay for it since it reintroduced 20-year auctions 6 years ago. This as global yields continue to hold at multi-year highs. Japan's 10-year debt currently fetching its highest yield in about 30 years. And as you can see across that, as we take a look at UK paper, the 10-year gilt yield as well, 5.04. We said we have drifted off about 0.6% in session. Better data to digest today. UK inflation has hit its highest level since March, as it rose to 2.9% in July. The ONS said the rise was due to the largest rise in gas prices in 4 years, pushing household energy bills higher. Andy Burnham says he will move responsibility for growing the UK economy to his new number 10 North office based in Manchester, in what he called a huge transfer of power. Burnham says Chancellor John Healey will give a major speech on the government's economic plan next month, with a 10-year plan due to be released after the budget on October 23rd.
The UK's Trade Union Congress has called on the Chancellor of the Exchequer to hike taxes on banks in order to pay for a social tariff, cutting energy bills for those on low and middle incomes. The UK currently levies a 3% surcharge on banks' corporation tax, lower than it used to be, but it's still 3%, applied to profits above £100 million. That is down from 8% since the government cut it 3 years ago, though the base rate of corporation tax was increased at the time. Now, the TUC, Trade Union Congress, is calling for the surcharge to be hiked to 16%. 16%. After the big four UK banks took in nearly £30 billion in profit for the first half of the year, arguing that the measure would bring in £24 billion over the next 4 years. But the call comes after JP Morgan boss Jamie Dimon reportedly warned Andy Burnham's government yet again against hiking taxes on banks last week. It's not just him, by the way. Anna Botín of Santander has made a similar point. The move comes ahead of an expected surge in lobbying from the financial services sector ahead of October's budget. Shares in British banks have outperformed their peers globally, notching more than triple the gains of their US counterparts over the past 5 years. But so has their tax bill. According to research from PricewaterhouseCoopers and UK Finance, the UK will charge the highest total tax rate amongst the global financial centres this year. 46.6% total tax take, compared with New York's 27.9%. Italy attempted to impose a surprise 40% windfall tax on banks' net interest margins 2 years ago, only to backtrack a few days later after bank stocks took a hit. Spain also applies a special levy to its banks, targeting net interest income over a certain amount. Now, all eyes will be on what John Healey pulls out of his red box, it's more of a case actually, at the budget on October 28th. Now, let's get to Paul Novak, who is the General Secretary of the TUC. Paul, really good to see you. Thank you. I hope we can have a really good debate here about this as well. Paul, I understand what you're saying about inequalities in the United Kingdom and about how we need to address a lot of social issues. I'm not coming at this blindly and with cold heart, Paul. But when did increased taxes create more growth? And as we've heard from the previous Chancellor, this Chancellor, both Prime Ministers, growth is the secret sauce to reducing those inequalities. When did increasing tax, Paul, actually reduce that inequality?
Well, listen, we all want to see a growing economy, but we want to see a growing economy that benefits everybody. And you ask the British public time and time again, the biggest set of pressures they face, that the country faces, and it's those cost of living pressures. People are afraid to turn on the central heating because they can't afford the heating bills. People skipping meals to make ends meet. Now, as you said in your trail, Britain's banks have done spectacularly well over the last 3 or 4 years, partly because we've been in a relatively high interest rate environment, but our big 4 retail banks between them are making over £1 billion in profit each and every single week. Now, I want a successful financial services industry, but I want a financial services industry that pays a fair share of tax, and crucially, to use that tax to support millions of families up and down the country, because we know those heating bills that have been a problem will rise yet again in the autumn because of the continued war in Iran. I think it's fair to ask those with the broadest shoulders to pay a fairer share.
Those with the broadest shoulders would argue they are paying a fair share. A lot of people are paying over 50% tax individually in the United Kingdom. The tax burden is being placed on a smaller and smaller number of people. And I know I've had my arguments with various academics and politicians as well, but it is unarguable that a lot of very, very rich people are choosing to domicile themselves elsewhere, and financial institutions can domicile themselves elsewhere if it becomes too uncompetitive to base yourself in the United Kingdom.
Yeah, but there's been absolutely no evidence at all that we've seen the so-called flight of the millionaires from the UK. Let's put this into perspective.
That's not the case, Paul. I know. No, honestly, I had lunch with a billionaire a couple of weeks ago. Trust me, I get to do that. I get to speak to all kinds of people. And I by the way, I don't hang out with billionaires. I want to put that point. No, I just want you to get that right. That's not my usual lunching partners. But Paul, there were 3 of these guys who set up this brilliant company. They're all billionaires now. 2 of them have moved overseas. The one who's left, is because his mother lives here and he doesn't want to leave. I'm telling you, Paul, very rich people are leaving or domiciling themselves at least elsewhere.
Well, the official statistics, rather than anecdotes over lunch, would suggest that there isn't a flight of the millionaires, and we need to put this into perspective. Last year in the City of London, it was the biggest ever year in cash terms for bonuses. £25 billion in bonuses across the financial services industry. It hasn't been bigger than that in real terms since the financial crash, the eve of the financial crash back in 2008. And I suspect that the people you're having lunch with, Stephen, they're not the people who are worried about paying their heating bills this year. So I would expect those companies, listen, they've done very well out of the UK over the last few years, not because they've become incredibly competitive or more commercial, but because, as I said, we're in a relatively high interest rate environment. I want a growing, a thriving financial services industry, but it's right when companies make windfall profits that we ask them to pay a fair share. The Tories did this. The Tories did this back at the height of the energy price spike. They introduced a windfall profit surcharge of 35% on the energy companies. As I say, we think that a 16% increase in that bank surcharge will lead to something like £16 billion over the next 4 years. That would pay for that social tariff that's desperately needed.
Paul, you know what happens when you tax a sector too heavily. You've seen it with the North Sea. You know better than I will ever know that from Aberdeen downwards as well, people are not having jobs created because of government policy on taxation, on new fields, old fields, windfall profits on the energy sector as well. And trust me, I've also spoken to the leaders of many of these companies as well, and they're just saying, look, Angola wants our money, Gabon wants our money, the Middle East wants our money. We can put that capital where it's wanted rather than in a country that doesn't want us there, doesn't want to build hydrocarbons, and doesn't want to have a fair taxation on a global competitive basis. Paul, you know what's happening to those jobs. They're disappearing.
Well, you're conflating a whole series of issues there. The issues in the North Sea partly relate to policy decisions taken by government, not just simply about tax. But the reality is our big banks will still continue to make huge profits. As I say, £1 billion a week. The bonus pots will still be large. People will still be able to go out for nice lunches. What we will do, though, is support those people who desperately need help with their heating bills. And I say, government is all about choices. And I think asking companies who enjoyed windfall profits to pay a fair share is the right choice.
Paul, if you compare how much the bank tax is in the UK, their overall tax take versus other jurisdictions, London stands out as a very heavy tax jurisdiction, 46.4%, well above the likes of Amsterdam, Frankfurt, Dublin, and crucially, New York. Are we not concerned about this being just another hit on the UK banking sector after Brexit, where effectively all the competition goes elsewhere to bigger jurisdictions?
No, because as you said in your trail, bank profits in the UK are doing incredibly well at the moment. And the other thing is, I don't think that PricewaterhouseCoopers research, with all due respect, compares apples with pears. In New York, yes, headline effective tax rates are lower, but for example, everybody who works for a bank in the UK gets the benefit of the National Health Service. That's part of our national insurance scheme. In the US, employers are paying private health insurance and other hidden costs as well. So I think what we've seen over the last 2 or 3 years is real evidence that the UK banking industry is competitive, is successful, asking them to pay a fair share of tax. I don't think we'll bring the sky tumbling down, and I think it would be the right thing for the government to do.
Well, Paul, let's just bring up on that commentary there about the sky falling in. This does suggest that it's been a linear journey of success for the banks year after year, decade after decade. We know that's simply not been the case. I mean, the financial crisis, 2008, what happened 2009, the wash-up, banks went under, they were rescues by the state. The good times like this are typically there so the banks can repair the roof. They can bank some profits, invest in the business, grow to be stronger entities to protect populations and economies when the bad times inevitably turn up. And we're all talking about something potentially being around the corner. We don't know what. Don't we want stronger banks and we're going to tax them? Aren't you concerned that actually undermines the bank's strength?
Of course, I think we want strong banks, and I think the UK system of bank regulation and making sure banks have adequate reserves is absolutely correct. But I mean, you said it yourself. In 2008, we bailed the banks out. The taxpayer, those people who are struggling to pay their heating bills, bailed the banks out. Now, when they're doing well, I don't think it's unfair to ask them to pay a fairer share of tax. And frankly, there is no evidence that what they're doing is saving for a rainy day and more resilience. There is evidence that what they're doing is handing out bigger and bigger bonus pots. And as I say, you could have a fair bank surcharge and still have significant bonus pots in the UK banking industry. I think it's the right thing to do, and I think that the vast majority of the public would agree as well.
Paul, it's Ben here joining the conversation. I hear what you're saying about bonuses, but when banks make big profits, they also pay out bigger dividends, and that helps to shore up people's pensions, including the default nest pension scheme, which means people have a more comfortable retirement. I imagine, I can't say for sure, but perhaps even the TUC's own pension scheme for its staff would benefit if the banks are paying bigger dividends. So yes, in the short term, you can tax the banks and put that towards short-term goals, but that then potentially leaves pension funds with less money to support people in retirement, doesn't it?
But the job of government, Ben, is always to get the balance right, and I think we can have a bank surcharge that is fine, that does generate the income that we need in order to support people through a difficult autumn, and at the same time have healthy dividends and bonuses for those who work in our financial services. I'd say when you've got profits for the big four banks alone running £1 billion a week, I think that there is scope there for banks to pay a fairer share of tax. Now, I mean, you said it in your trail. I mean, actually, the Tories reduced the bank surcharge by 5% over the course in 2023. Simply restoring that alone brings in £9 billion over the next 4 years. I don't think anyone could plausibly claim that restoring the bank surcharge to where it was in 2023 would have a devastating impact on the bottom line or indeed the dividends of our financial services company. Increasing the dividend, the surcharge to 16%, as I say, generates £24 billion over the next 4 years. If you actually had a windfall tax that was similar to the one the Tories put on the energy companies, that would bring in something like £60 billion over the next 4 years. So the right balance has to be struck. That's something that the Chancellor will have to look at in the budget. I think it's unarguable that Britain's banks could afford to pay more tax and still be incredibly successful and profitable.
Let's imagine, I mean, he may well be watching, John Healey may well be watching this morning and listening to you and thinking, actually, Paul's onto something. And if he could pick up the phone and say to you, look, Paul, I'm just doing some sums ahead of the budget in October, what overall rate do you think the banks should be taxed at, all told? What rate would you set it at?
Well, listen, John Healey is the Chancellor. I'm not the Chancellor. I mean, we've been very clear that we think that a surcharge of up to 35%, same as the windfall tax on the energy companies, would be sustainable. The Chancellor's got to make that judgment call. But fundamentally, we know that we've got people not only facing those issues with their heating bills, making ends meet. We need vital investments in our public services and Britain's infrastructure. we all want a growing economy, but at the moment it feels like we've got an economy that's growing for some, and the vast majority of ordinary working people at the moment aren't feeling it in their pockets. So let's make sure a successful industry, a UK success story, is paying a fairer share of tax.
Well, Paul, I think we've had a fulsome debate. Thank you so much for joining us today.
Thank you so much as well.
Paul Novak with us, General Secretary, TUC. Russian government officials told CNBC the country's economy remains strong following criticism from a former deputy economy minister who was subsequently reportedly fired. Former Ukrainian Defence Minister Mikhailo Fedorov has called for wartime elections, arguing the nation faced a crisis of governance. Authorities implemented martial law in the aftermath of Russia's invasion in 2022, with this preventing elections. Fedorov was ousted as the country's defence minister earlier this year after 6 months in the role. His dismissal sparked protests in Kyiv and has sparked the most significant challenge to Volodymyr Zelensky since the war began. Let's get to Sam for more on this. Sam, politics at play in Ukraine, and clearly it feels as though there's been an emergency state that has been responding to war, but democracy and the calls for that have been much stronger in recent months.
Yeah, it's a very significant challenge to Zelensky, this one. Fedorov, having left government late last month, has really thrown the gauntlet down to Ukraine's president and says that democracy cannot be held hostage by Russia, which is fascinating to see that. And I mean, this YouTube video that he posted late yesterday, it was about 9 minutes long, and it came just hours after Zelensky had effectively closed the door on a Fedorov comeback into government. He had asked Parliament to confirm Yevhen Kamara as the new defence minister today, and it leaves Fedorov now challenging Ukraine for the presidency.
This is feeding into a Kremlin narrative. And he'll know what he's done here. But yeah, maybe there should be, maybe there shouldn't be elections. Right? Let's just leave that question aside. But how on earth do you have fair, uncontested elections when 20% of the country is in Russian hands, plus another large percentage of the country is in near war zone territory as well? And let's be brutally honest about it, Russians would have their own campaign of disinformation, they would have, they'd be targeting polling centres as well. With all due respect to whether we should or shouldn't be, how on earth would that happen in reality during a war? When, what would you do? Would the people in Crimea, would they get a vote? Would the people in Kherson, Zaporizhia, Donbass? I don't understand.
Soldiers, how would they be able to vote as well?
So why on earth is he, well, I mean, this is a political play, of course.
Extremely difficult to imagine how it would work in practice. Zelensky says that that's why martial law is there in the first place, because it's not possible to hold free and fair elections. In fact, when Trump had pushed for elections earlier in the year, Zelensky had said that he would need a ceasefire for at least 60 days to ensure that it was possible to hold these elections. And even then, trying to avoid Russian interference would have been...
Look, I've had the privilege to be in Ukraine many, many times before this phase of the war. There is a lot of corruption there. There is no doubt about it. I'll give viewers an anecdote. Give everyone an anecdote. When I first went there, I managed to speak to Klitschko, former world champion boxer, mayor of Kyiv, and I said, why on earth did you come back? You know, you are a rich man. You have residency. I think he was in Germany, Italy. I said, why did you come back? He said, because everywhere I go around the world, Ukraine is seen as the most corrupt country on the world, and I want to change that. Now, whether he has or not, that's a moot point. But the fact of the matter is, it is well known for its corruption. And look, it's a fact that if it wants to get into the EU, it has to address that issue. But again, you know, why has he done? So the points that Fedorov is making are well known to everyone out there.
Yeah, he's talking about corruption in his messaging to Zelensky, who he didn't name, by the way, in his YouTube video. But Fedorov was someone who was credited with spearheading a drive against corruption during his 6 months in post as well. So this is something he's clearly looking to utilise in putting pressure on Zelensky.
You know, elections don't just solve corruption. Strength of institutions matter too. I mean, having the right institutions in place, the right oversight. Election is just only one piece of the puzzle. It's not the solver. Sam, thank you very much for that. And for more on the story, you can check out Sam's article on CNBC.com. Ahead on the show, President Trump presses pause on tariffs against Canada, citing a deal subject to finalization. We'll discuss.
China is the world's second largest consumer market behind the US. In 2025, the country's total retail sales of consumer goods exceeded about 50 trillion yuan, or about 7.2 trillion US dollars, up by 3.7% year-on-year. With a population of 1.4 billion people, the market has long been a cash cow for global brands. But today, success is no longer a given, with some Western brands struggling and even scaling back operations in the country.
When you think about live streaming and social media, the hottest new thing is going to bubble up overnight and you have to have it the next day.
The number one thing that you will see is how little loyalty Chinese consumers are because of the brands and how fast they innovate and how quickly they push things out. Consumers are very used to being hit by new concepts, new designs.
So what does it take to win in China?
Become a smarter investor with CNBC Pro. 24/7 access to market-moving news and interviews with 3 global live streams. Subscriber-only content from Wall Street pros like Josh Brown.
If you love the stock market as much as I do, you're going to love the best stocks in the market list.
Plus exclusive live events.
This is my first time at the stock exchange and it's been awesome.
To be on the floor, I just can't believe I'm here.
Become a CNBC Pro. Go to cnbc.com/GoPro now.
Breaking news, market moves. Scott Wapner from the NYSE. Closing Bell. Weekdays streaming on CNBC Plus.
OpenAI reportedly saw revenue rise to $6.7 billion in the second quarter. That's an increase of 18% compared with the first quarter. This, according to the Wall Street Journal, citing people familiar with the matter, which also reported its operating margin worsened over the period as the AI startup saw its losses deepen to $12.3 billion. You gotta hold the margin in the early stages of technology. We've done this, haven't we, everybody? Right, let's move on. OpenAI says it has expanded its monitoring of new AI models as it looks to increase its security, following a security breach where one of its agents escaped controls and hacked another company. That was Hugging Bear, wasn't it? The AI lab said it now aims to issue an alert within 30 minutes after any concerning activity is flagged through its monitoring system. But what if the AI wants to turn off the I'm just saying, if it's now thinking and working with other bots, what
and
if
why 30 minutes after? Surely if they've got a powerful enough model, it could flag a potential breach 30 minutes before it happens. That would be far more useful, no?
Yeah, can't argue. Scary, isn't it? Meta has rejected accusations made by some US states that it intentionally looked to addict children to Instagram and Facebook in the aim for profit. Well, Julia Boston has done a very big piece on this one. Those accusations came on the first day of landmark trial against the social media giant in California. Let's listen to Julia Boston's report.
In this bellwether case in Oakland federal court, the biggest yet attacking Meta's child safety issues, both the plaintiffs, comprised of 29 state attorneys general, and Meta presented their opening statements. The lawyer representing the state suing Meta asking for monetary damages and changes to its business practices, alleging Meta's financial success depends on keeping kids on its apps, saying that it knowingly developed features to take advantage of them, while the lawyer representing Meta focused on its efforts to improve its policies, asking the jury to consider whether its features such as the ability to have multiple accounts, its time management tools, and its efforts to block users under age 13 are unfair. The trial's first witness was also called to the stand, former Meta employee Arturo Bejar, who testified that safety and security was an afterthought during his time at Meta, also saying Meta's focus on metrics and growth was to the detriment of child safety. With the stock dropping 4.5%, it's now down almost 30% over the past year. Julia Borston, CNBC Business News, Los Angeles.
US President Donald Trump says he will initiate a 3-day pause, just 3 days for now, on new 50% tariffs on Canadian goods after saying the two countries had reached a deal, quote, subject to the finalisation of documents. The US leader added that the Keystone XL pipeline that had been cancelled by President Biden may be revived, but he failed to provide any further details. I suppose short term, but a relief that there are no new tariffs being applied. 3 days goes by just like that, doesn't it? And who knows what the stages will be. And that announcement, according to reports, came at the 11th hour. The tariffs were due to come in at midnight, and I think almost literally at the 11th hour, there was that pullback from them. But as I say, no details yet on what exactly is in this purported deal.
Is anyone going to utter the phrase taco? I mean, this is what it is. It's a negotiating tactic every time, isn't it? Put the heat on, apply the heat, bring the tariffs, try and negotiate to the last minute, and then suddenly there is a taco. So you see the relief trade that comes in. The question is whether we end up with a reformed agreement for tariffs and for trade across on the US, Mexico, Canada agreement. There have been changes afoot there. I think there have been direct negotiations with the likes of Mexico and the US. Canada was the missing piece in that puzzle. So how does this all come together in terms of trade across the region?
Trying to be a trade negotiator these days, dealing with the US, is probably the worst job on the planet. I'm sure they get paid good money, but it's not enough.
Yeah.
The UK was so excited on the 8th of May last year. It was so exciting. It was the first one. We got a deal. Yay, Keir Starmer in the Oval Office. Wasn't Mandelson there as well at the time? Before his fall from grace, before their fall from grace. 8th of May last year, Britain gets a deal, right? What's the latest headline from the Brits this year? Well, on the deal there. Trump not bluffing about 100% tariffs on the UK, says trades are. That's Jameson Greer as well. The point is, every time you think you've got a deal with the administration, they'll find something else to hate you about, whether it's the war not backing, whether it's hockey sticks, whether it's lumber inequalities, whether it's Canadians not buying the right American goods and what have you, and supplanting those goods with domestically made ones as well. Whether it's the Digital Services Act as well.
Human sourcing.
Oh, yeah, that's right. Yeah, that's right.
Supply chains, yeah.
The problem is you can't necessarily trust the deal because it changes so quickly based on other different stuff.
We've got to take the break. Ahead, the global bond rout eases, but yields on sovereign debt hold near multi-decade highs. We'll have the latest.
The AI boom is usually told as a Silicon Valley story, but some of the biggest winners are thousands of miles away, in South Korea. And their windfall is now spilling into an unexpected place, the housing market.
Before we saw this massive rally this year, people just like to invest in the housing market because there is no alternative for savings and investment.
From January to April 2026, home buyers used about 3.7 trillion won, or roughly $2.4 billion, from stocks and bond sales to fund purchases.
The government wanted to boost the stock market so that people could move away from homes into the stock market, but people are coming back to the property market with the money that they earned in the stock market, and it's also sort of this vicious cycle.
The danger is not that one stock market sell-off would immediately crash home prices. It's that the same wealth channel pushing stock gains into housing depends on confidence.
Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange. Streaming on CNBC+.
From the markets to the courts. Kick back and relax while we serve up the highlights. Tackle your weekend. This weekend, race to your screen. The adventure continues. Dive into the action with CNBC Sports. CNBC Sports, afternoons on Saturday and Sunday, only on CNBC.
I love the story. I love the drama that is business. A great interview is when you can get the subject to tell you something that you never expected, that you never imagined. My ambition is to help the viewer connect the dots, to understand the context so that we, all of us, can actually make our own judgments. Oh, I love what I do. I can't imagine doing anything else.
Welcome to Squawk Box Europe. I'm Karen Cho with Steve Sedgwick and Ben Boulas. These are your headlines. The global bond rout eases, but yields on sovereign debt hold near multi-decade highs. Investors today eyeing UK inflation data and the July Fed minutes.
Well, the bond sell-off spilling over into equities. Chip stocks bearing the brunt stateside and overnight in Asia. European equities, they're just treading water really in the open.
Shares in Chinese humanoid developer Unitree surge as much as 600% at one point, but now 460% up in their IPO as China looks to flaunt its advances in robotics and physical AI. Well, if you're looking for big dramatic moves and clear direction in equity markets, well, this is not the wall for you, I'm afraid. Mostly in the red, the 3 of the 4 benchmarks I've got on the wall here, not by a huge amount. It's only the Italian market that's off by more than 0.1%. The CAC are the only one of the 4 above the flat line, about 1/3% higher this Wednesday, and really seeing a bit of investor caution amid the jump in yields, government bond yields, treasuries that we've seen, pushing them up to multi-decade highs. That's been weighing on equities in the US session, the Asian session, and now in the European session, although those yields have eased slightly from the highs that they were at. Breaking it down sector by sector, this is the wall of outperformers. We're seeing the biggest gains this morning, about neck and neck really, construction and oil and gas. That one unsurprising given the oil price ticking higher amid all of the uncertainty around the status of talks between the US and Iran. President Trump doing something of an about turn, saying that the US is not conducting talks with Iran. That has led to further concerns about oil supply, pushing up the price there for Brent crude, keeping above $90 a barrel. Telecoms up as well, and basic resources rounding off the wall of gainers. In terms of the losses, these are the sectors seeing the sharpest falls in the first hour of trade. Media stocks off 0.75%, banks down 0.5%, real estate, travel and leisure both giving up ground this morning as well. That's the picture in Europe. Let's see how things are looking as Wall Street prepares for the start of the trading day. They have been sort of wavering a little, but as I stand here now, the future's pointing to a positive start. Again, fairly modest moves with the Nasdaq looking to recover some of the losses that it saw yesterday. In fact, all of the 3 benchmarks had seen a 3rd day of losses, 3rd session consecutively of losses. If things pan out as futures indicate now, well, looking to regain some of that ground. Steve.
Right, bond yields are maybe starting to pull back, but the impact of the past week's sell-off is still being felt with the yield on the 30-year paper at its highest level in nearly 20 years. This ahead of a highly anticipated auction of 20-year paper later today. Bloomberg reporting the Treasury will ask investors for a further $16 billion as a sticking plaster on America's $1.8 trillion deficit for the year so far. If investors decide that means they want to return around the current level of yield on that debt, that's the most the US will have had to pay since its reintroduction of 20-year auctions 6 years ago. This as global yields continue to hold at multi-year highs. Japan's 10-year debt currently fetching its highest yield in around 30 years.
The bond sell-off spilling over into equities with chip stocks bearing the brunt stateside. Micron and Intel among the biggest underperformers in Tuesday's trade. The moves on Wall Street mirrored the Asian session overnight, with tech names including SK Hynix and Samsung Electronics tumbling. Our next guest says that the market is actively separating companies that are converting AI into revenue and those that ask the market to wait for the payoff, adding that the split is now clearly visible in stock divergence. James Kisner is with us, Managing Director of Tech at Water Tower Research. James, thank you very much for joining us. You cover a lot of frontier tech at your company, from AI to blockchain to fintech to quantum, autonomous vehicles, cryptos, drones. What are you seeing in terms of the differentiation and how investors treat these names based on profitability and revenue?
Well, I mean, I think one of the biggest places that shows up was this last earnings season. You had Microsoft and Google is kind of or Alphabet rather. It's kind of a tale of two cities. Microsoft was very free cash flow generative, and the stock traded up. Whereas Alphabet, their free cash flow went negative, and their stock traded down. So I think what we're seeing is investors are perhaps more broadly getting they want more evidence that this massive and historic build out that's the investment associated with that is going to result in in real returns. I think the story entering the year was that basically these large cloud players had mature businesses with large cash flows that could finance that build out, and so now that starting to come into question, and we're seeing that in kind of stock reactions.
Yeah, perhaps we can get into what doesn't get funded in future in a moment, but I want to ask you about the headlines, which is that we've got a global bond rout playing out, concerns that AI is having a crowding out effect for the sovereign. And even today we're talking about a $5 billion bond sale in Australia for the likes of Alphabet. So it's far and wide that these raisings are coming through in the market for AI capex. What do you make of the crowding out? Is it happening in your view?
Well, I think that what we're seeing here is, one of the, one of the biggest investment cycles in kind of human history. We're now, seeing like I mentioned before, like the big cloud players are having to use debt to finance some of this build out. We're talking about trillions of dollars in spend, something like $5 trillion in spend through 2030, and a lot of these business models are unproven, and so I think historically growth should be financed by equity, but the revenues aren't there yet, and so you just got a massive need for capital, and that clearly would make sense that's impacting the debt markets.
James, what do you make of this Unitree IPO and the implications of it for American competitors?
Well, I think robotics, is still nascent. I think it's going to change the world. I sure would like to have a robot housekeeper or butler or what have you, bodyguard. I think there's a lot of concern. I think about security, and there's the ban on foreign-made robotics domestically in the U.S. where I'm based. I think there are some potential headwinds. But obviously that's robotics are a really important area and an important tech, and so I think it's definitely one to watch. They're one of the leaders in the space.
I just wonder how concerned you are about the potential hiccups, if I can put it like that, along the way to profits for some of these companies that are spending vast sums on AI infrastructure on the basis of anticipated growth. We've seen, I think it's Pennsylvania is now the latest state to put limitations on data centers being built, having to comply with certain conditions. We've got the issue of what looks like circularity of funding that NVIDIA's involved in, although it denies that it's that, but some warning that that could spell problems in the future. The cut in the cost, the pricing for some of the models that has been implemented. It feels like there are lots of different potential road bumps on the way to profitability, or do you think those are all just surmountable?
Well, I think I'd say that so far things have kind of held. The rise of Anthropic's revenue, reportedly $9 billion ARR exiting the year to $65 billion. In the most recent quarter, like that's a really meteoric rise. But I think you hit on a really important point, which is that this market is ultimately only a few years old. Pricing power is over the long term is not proven. You've had Kimi K3 launch with basically arguably competitive performance with the Frontier. Grok 4.6 came at a much lower price from XAI. So far that hasn't hindered the growth of the other models at the highest end, Claude and OpenAI. But I think it's pretty clear here that the switching costs are not that high. 6 months ago, we weren't saying that Anthropic was the leader, and here we are 6 months later, and they've overtaken OpenAI, and so these, even the GPUs themselves are depreciated on a 5-6 year schedule. And so, I think, the jury's out. And so, and you mentioned, there's security risk. I mean, there's, concerns about job losses. Power is a tremendous bottleneck. I mean, we've got to basically triple the capacity of power supporting AI data centers, in the next, through 2030, and that's not trivial either. So I mean, there are many things to keep you up at night potentially as an investor. This is not a done deal, but sometimes markets find a way, and capitalism finds a way. There's clearly a lot of demand for this, and it's transformative technology. So perhaps it can all work out. But I think there are reasonable questions to ask here.
Yeah, James, look, I've loved listening to you and Karen and Ben have this conversation, but one thing seems blatantly obvious to me, that all of those questions are valid. You and Ben and Karen discussed as well. You've given this as well. But the valuations in the market don't seem to be balanced. It doesn't seem to be in equilibrium. They are pretty much gung-ho in many, many cases now on traditional valuation metrics. And I appreciate a lot of the advocates of the industry think we shouldn't look at traditional metrics and we need to look further out at different measures. But do you think that the problem here lies in that the value of these new technologies that is being ascribed to these nascent players, as you call them, is far in excess of those risks you just mentioned?
I mean, it's always interesting. I tend to be a value guy. I like cash flow. I've always struggled with, companies that have kind of looked expensive, but then, Amazon always looked expensive, and investors were rewarded for holding that. And, same with Google, or Alphabet ultimately. And so, this is the multiples are certainly heady. I mean, we're talking, tens of multiples of revenue, 30 times revenue, some of these IPOs like OpenAI and Anthropic are, they're definitely trading on revenues that are going to be much bigger. So I think it's tough, but that's kind of the psychology of growth investing.
Yeah, you're right. But here's I have many issues, James. I mean, viewers will know that. But you mentioned Amazon, and Amazon is the great case of building, and then having a monopolistic position as well, and doing very good. Most of these companies are trying to mimic that model. No, we're going to build. We don't worry about profits. We're building. But as we know, there can only be one winner if there's a monopoly at the end of it as well. So the Amazon example isn't going to work for a vast majority of these companies who are trying to replicate it. Isn't that the case?
I mean, I think you're right. I mean, fundamentally, AWS, cloud services, was kind of the ace in the hole for Amazon, and that's a scale business. So I feel like that's really their kind of edge is being kind of a cost leader, both on the retail, online retail side as well as on the cloud side. But I think you're right. This is not really a scale game so much. I mean, certainly you need scale. It's helpful, but what's really important is performance, and the frontier models, their ability to perform, it's fundamentally a training and software exercise, and so the economies of scale I don't think are as relevant. So I think you're hitting on an important difference. That's an important nuance of the difference in the business models.
Okay, James, for the moment, thank you very much. James Kissner, Managing Director of Tech at Water Tower Research. Well, we mentioned Unitree, and shares in the Chinese humanoid robotic maker have rocketed on its debut in Shanghai. The stock, priced initially at 150.8 yuan a share, was seen as high as 1,100 yuan a share during trading before paring some of those gains. Elaine joins us now. Elaine, just talk us through this. This was hotly anticipated, and it didn't fail to wow.
Yeah, definitely wowed, and it closed more than 460% higher on its IPO day, valuing the company at $50 billion US. And even based on the issue price, the valuation was already very demanding at more than 200 times its earnings last year. And we've seen extreme demand. Retail investors have rushed in to get exposure to what is effectively the first pure-play humanoid robot maker to list in mainland China, and it was more than 5,000 times oversubscribed in the retail portion. And the offering also attracted strategic investors like DeepSeek, which invested about $20 million US into the robotics company. Now, Unitree has seen real revenue growth, which is not common in terms of a lot of these early stage robotics makers. It posted a net profit in the first half, swinging back from a net loss last year, but its adjusted profit did fall 19% year on year as it's spending more on R&D and marketing. Now, the institutional investors and skeptics tell us that they want more proof that this underlying technology can scale commercially beyond just dancing and kung fu kicks. And indeed, almost three quarters of its humanoid revenue last year came from research and education. So we're mostly seeing these robots in labs and lobbies and demonstrations. Now, we were talking to Adam Grosser, managing partner of the VC fund Up Partners, and he said that by comparison, American firms like Tesla are focused more on specific applications when it comes to robotics, such as making them adapt to places where there's labor shortage or where it's dangerous for humans to work. But Tesla hasn't started making money yet and hasn't started shipping these robots. It's going to start production of its Optimus model later this year. But analysts would say that Unitree's edge is in its manufacturing scale and its cost structure. And Unitree has been slashing prices, which is helping manufacturers be more willing to test out this technology. And even across the industry, average humanoid robot prices and wholesale prices have been falling year on year, and this has helped Chinese robotics firms dominate in humanoid shipments in the first half of this year. The top 5 are all Chinese firms. Unitree, in fact, is only second place to its rival Agibot, which is eyeing a listing in Hong Kong later. And also China's dominance in rare earths, which are used in making components like the joints and the actuators, are also helping. But of course, it's really the big question that a lot of the institutional investors and experts are asking is, when are we going to see them in industrial settings and even in the household doing domestic labor and so forth? But that really could be some time off, because it takes a lot to train even a humanoid robot to perform a single task. It has to be quite specialized, and they can only work for a couple hours before having to recharge their batteries. So there are a couple bottlenecks they have to work through, and not to mention major constraint for robotics and for companies like Unitree is still the software part, which is the brain of the robot, and helping it understand how to make complex decisions and to perceive and to act more spontaneously and respond to unpredictable environments. But geopolitics is another issue here, because 13% of Unitree's revenue last year actually came from the US, which recently banned new foreign-made humanoid and four-legged robots. And Unitree has indeed warned that if these US restrictions continue, then it can really hurt its overseas sales. Back to you.
Elaine, thank you very much. Still to come on the show, US President Donald Trump reverses course on claims around talks with Iran. Dan will explain all after the break.
You can master your strategy, but performance could be limited by your instrument. Precision trading starts with the right instrument. Over the past 3 years, Interactive Brokers clients outperformed the S&P 500 on average. Like returns, trading costs compound. Interactive Brokers is built to lower costs through smarter execution. Access stocks, options, prediction markets, and more across 170+ global markets. The best informed investors choose Interactive Brokers.
Be there for the opening bell.
Right here.
Squawk on the Street, CNBC.
American soccer legend Landon Donovan He'll explain how the 2026 World Cup could shape the future of Major League Soccer and the inner demons that drove him to greatness.
I was constantly chasing this insatiable desire to be noticed.
He's the man behind Apple's sports ambitions. In an exclusive interview, we talk about the tech giant's unique sports strategy and whether a blockbuster acquisition is on the horizon. This is CNBC Sport on the Record.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
What happened today?
The market had to resort to defense.
We've got a developing story out of Washington.
What's moving in real time?
What do the numbers tell you, pro or con?
Be ready for tomorrow after the bell.
There's a wait and see about a lot of things for tomorrow, Mike.
Completely.
Melissa Lee, Mike Santoli. Closing Bell Overtime. CNBC.
US President Donald Trump has said that Washington is not holding any talks with Iran and none are scheduled, an abrupt contradiction to the US leader's prior insistence that negotiations are underway. The UAE said all trade, commercial exchanges and financial transactions with Iran have been halted until further notice, citing regional escalations. The move came shortly after the UAE said Iran fired 2 missiles in its direction, one of which fell in the country's territorial waters. Let's get out to Dan for more. Dan, this has been one of the fears that escalation would happen from here, given there's been no progress towards a deal.
That's right, Karen. And now the UAE is hardening its response to Iran after those 2 ballistic missiles were fired from Iran and fell into waters off the Emirates. The Defense Ministry now says its assessment is that the missiles were targeting maritime traffic. Of course, both landed in the sea with no casualties or damage being reported. And now Iran also denies responsibility. What's most interesting, though, is that Abu Dhabi has responded with a major economic move. It has suspended all activities, trade exchanges and financial transactions with Iran until further notice. Now, that is significant given the UAE's long-standing role as a major commercial gateway for Iran. And the Emirati lawyer Habib al-Maleh posted on X this morning calling it a direct blow to Iran's economic lifeline. Now, the UAE is Iran's largest trading partner by a long shot, closely followed by China and Turkey. That's according to European Commission data. Annual trade between Iran and the UAE was worth more than $15 billion in USD in 2025 alone. And at a more human level, we still don't have clarity on how these measures will impact Iranian businesses, property owners or bank account holders inside the UAE. CNBC has contacted all corners of the UAE government for comment on this. Obviously, quite a significant development when one country decides overnight that it is going to be cutting ties completely, economically, with another. This also comes as Washington shuts down the diplomatic track here. President Trump saying there are no talks or conversations underway or scheduled with Iran, and the US naval blockade, of course, remaining in place as well. Interestingly, oil prices little changed off the back of these developments. Brent crude still holding on to that 91 USD handle. Back over to you.
Thank you very much indeed for that. Let's move on. Russian government officials told CNBC the country's economy remains strong. I'm surprised. Following criticism from a former deputy economy minister who was subsequently reportedly fired. The former Ukrainian defense minister, Mikhailo Fedorov, has called for wartime elections, arguing the nation faced a crisis of governance. Authorities implemented martial law in the aftermath of Russia's invasion in 2022, with this preventing elections. Fedorov was ousted as the country's defense minister earlier this year after 6 months in the role. His dismissal sparked protests in Kyiv and has sparked the most significant challenge to Volodymyr Zelensky since the war began. Sam has been writing about this, and Sam, I'm just reading your copy online now. It seems very idealistic of Fedorov to say the following, and this is in your copy. We must find a legal, safe and realistic mechanism that will allow Ukraine to renew its full democratic process, even in the conditions of a long war. Sounds great on paper. Legal, safe and realistic, when 20% of the country is controlled by the Russians anyway. So what happens to those inhabitants as well? And another significant portion of the country is under continual threat from Russian activities as well, whether that be polling stations, whether that be public places for forum, what have you. I hear what Fedorov is saying. Yes, at some stage you do need to have the democratic process reinvigorated. But how on earth can you do that in a legal, safe and realistic mechanism given the backdrop of war?
Yeah, extremely difficult to see how it would happen. I actually read that as an acknowledgement of how difficult it would be. Because, I mean, Zelensky has said himself previously that he would require a ceasefire of at least 60 days to try and manage a free and fair election, but there are questions on how frontline soldiers could vote, how there could be campaigning, how could there be gathering of any kind in any major city. It just feels impossible under war conditions.
What if you are in that, what if you're in Crimea? What does that count now? The Russians say the Crimea is Russian now. It's a lot of people have migrated from it, there's a lot of Russians there. It just beggars belief how this could be done.
It does, yeah, but it's still a bombshell announcement from a former Zelensky ally who's throwing down the gauntlet in a way that is representative of the biggest and maybe most direct political challenge to Ukraine's president since Russia's full-scale invasion. So the world will be watching what happens next.
I mean, how do you pop your head up and campaign too in Ukraine? I mean, suddenly, of course, you're a target. We know the security measures that Zelensky himself has to embark upon. You know, if you're seen as a viable candidate that Russia doesn't like, surely, I mean, the security protocols required would be enormous.
Extremely difficult. I don't have the answer for how that could happen. I mean, if we listen to Fedorov, some other quotes from him was that democracy cannot be held hostage by Russia. I suppose inadvertently Russia will,
well, it kind of
will
has
not
been for most of the 20th century. That's the point as well. I mean, when I first got to the country, it was about 2 days after Yanukovych had scarpered off to Russia. And Yanukovych, I think it's fair to say, I don't think it's particularly biased me to say, was a Russian puppet, you know, and that's how this all kicked off, because Yanukovych was doing Russia's bidding rather than doing potentially what was best for Ukraine.
Must have been a fascinating time to be there. But if we listen to Fedorov, as I say, he says that these elections are an important part of how Ukraine can remain a free European state. I should note that Fedorov's announcement came just a few hours after Zelensky effectively closed the door on any Fedorov come back into government, because he asked Parliament to move forward with the official confirmation of the new defence minister, which should happen today.
Yeah, Sam, thanks very much for coming in to chat about that. And if you want to see more, read more about what Sam has been writing, his story is up there. It's the article at cnbc.com. Coming up here on the show, refunds for US tariffs are starting to roll in to companies. But how are they choosing to spend the cash? We'll take a closer look next.
One hour of added insight every morning doesn't just add up, it compounds. One extra hour every morning delivers exponential value and a pure investing advantage. That's the compounding edge. The all-new Morning Call.
I'm Morgan Brennan, and this is your Morning Call.
CNBC.
Ambition is in my DNA. My grandparents came over from China to give their children a better life. They opened up a laundry in Buffalo, New York. They raised 5 kids, and they sent all 5 children to college. They achieved their American dream, so I can have mine. It's a privilege to be able to have the platform to help viewers out there make better investment choices so that they can have a better life, so they can achieve their American dream. That's what ambition is all about.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box, streaming on CNBC+.
Fast Money is America's post-game show.
Near all-time highs against the S&P.
We want to arm people with the information to make great decisions.
Valuations matter in a higher interest rate environment.
Fast Money, CNBC, streaming on CNBC Plus.
Welcome back. You're watching Squawk Box Europe. I'm Ben Boulos with Steve Sedgwick and Karen Cho, and these are your headlines. The global bond rout eases, but yields on sovereign debt hold near multi-decade highs. Investors today eyeing UK inflation data and the July Fed minutes. The bond sell-off spills over into equities, with chip stocks bearing the brunt stateside and overnight in Asia. Meanwhile, European stocks are treading water an hour and a half into the trading session. Shares in Chinese humanoid developer Unitree surge 460%. Look at that in their IPO as China looks to flaunt its advances in robotics and physical AI. So European markets are fairly flat, to be honest. They had been hovering above the flat line, below the flat line, and now they are doing pretty much the same. It's only the CAC 40 that is outperforming. Paris market up around 0.33%. That sell-off in bonds, government bonds, pushing yields higher, having weighed on equities stateside in Asia, and clearly promoting some caution among investors in the European session as well. In terms of the sectors where we're seeing the biggest gains, this is the board of outperformers. It's construction currently leading the way, up 0.7%. Oil and gas unsurprisingly higher, 0.6%, give or take, as the oil price ticks up, given the latest messaging coming out of the White House, with Donald Trump having done an about-turn, saying that he is not conducting talks with Iran. Obviously concerns there about the implications for trying to get the Strait of Hormuz reopened, pushing the oil price higher and keeping it above $90 a barrel for Brent crude. Retail stocks doing well this morning. Industrial goods also rounding off that board of best performers. Here's where the biggest losses are to be found, and it's banks that are off by the biggest margin, 0.6%. Media not far behind, food and beverage, and insurance also giving up ground this morning. Quick glance at US futures. Investors, of course, stateside will be poring over the minutes from the Fed's last meeting in July when those are released. Will give any clues about what the FOMC's thinking is in terms of future path of interest rates. Steve.
Yeah, I'll be fascinated to see how Kevin Walsh plans to cut the size of the balance sheet, given the fact that we've got multi-decade highs on the 20 to 30 year. That would be interesting, wouldn't it? I don't think he's going to answer that in a minute anyway. US President Donald Trump says he will initiate a 3-day pause on a new 50% set of tariffs on Canadian goods after saying the two countries had reached a deal, quote, subject to the finalization of documents. The US leader added that the Keystone XL pipeline, which was cancelled by President Biden, may be revived, but failed to provide any further details.
US government tariff refunds have been rolling back into companies in the US and Europe after the Supreme Court declared President Trump's tariffs illegal earlier this year. According to a court filing from the US Customs and Border Protection at the start of August, the government has paid out $100 billion worth of tariff refunds, having received just over 252,000 refund applications at the end of July. Is the president going to remember all those? Wasn't he going to remember those who were seeking the tariff refunds?
He said we will remember everyone who asked for it back. Well,
yeah, 252,000 he has to remember now. So not a short list.
I wonder who didn't ask for it.
It might be just a handful. And the US tech giant Apple has been one of the biggest beneficiaries, receiving $2.2 billion in a one-off windfall payment in the third quarter. Others such as Nike, FedEx, Amazon and General Motors have also reported receiving partial or full rebates. But what are businesses choosing to do with the extra money? Some have chosen to pass some of the funding to their customers, like DHL, whose cash flow has been significantly boosted in June thanks to the tariff refunds. Last month, DHL CEO Tobias Meyer told CNBC that the company continue to watch developments on the tariff front.
So on the tariff side, it continues to remain very eventful. We shouldn't forget that some of our customers are starting now to get money back. The IEEPA tariffs, those tariffs that were used initially by the President of the United States, were judged unconstitutional by the Supreme Court of the United States. And this is roughly $166 billion that has now reverted, returned to shippers, returned to those industrial customers that paid those duties. So that's a process that is ongoing. We have additional duties, but that level, as you're indicating, is something that the world got used to, that it's priced in. There are additional, typically, prices that our customers put on for their customers in the United States to cover those additional costs. So that's factored in. But more broadly, customers, indeed, industrial customers, diversify their manufacturing footprint to deal not only with tariffs but the broader geopolitical situation.
While other companies such as Pandora and Philips have lifted their full-year guidance off the back of tariff repayments. Philips, which has beat profit estimates in the second quarter, said it largely completed the process in the period. Meanwhile, Danish jewellery maker Pandora said the one-off windfall has positively impacted its gross margin in the second quarter. CEO Berta de Pablos-Barbier told CNBC the company could raise its full-year outlook as a result of the extra cash.
We have increased our guidance by 1% on our EBIT, and that is solely driven by the refund that we have on our tariffs. Without, if you put the tariffs apart, our EBIT would have been as strong as we announced on the quarter one on the previous guidance. And this is actually despite 300 basic points of headwind, because we need to continue to have a bit of currency, commodity change, the tariffs anniversary on this year. So the increase on the EBIT, that 100 basic points, is only driven by the tariffs. Otherwise, a strong profitability, same as we initially planned.
But some firms have said they expected to see only minor benefits from the repayment of US levies. In their first half earnings release, Adidas said it only recognised a small P&L benefit from the first refund in the second quarter. The company estimates a total potential refund of between $250 and $300 million, which it did not reflect in its full-year guidance. That echoed comments made by its rival Puma, as well as Galderma, whose CEO told Reuters he did not expect the amounts to materially change its full-year outlook. Marco Forgione is Director General of the Chartered Institute of Export and International Trade. Marco, on the face of it, given the scale of these refunds, it looks like a government-instituted policy that has transferred wealth from the American consumer to these companies that were importing. And in some cases, yes, it might ultimately go back to the consumer. In many cases, it's going to stay with the company, isn't it?
It's only ever the consumer who pays when it comes to tariffs. They're the ones who are impacted. And as you've been reporting, large companies have seen benefit, but a lot of the smaller companies who were exporting into the US have not been able to navigate their way through, so have lost out. And so there are news stories we're hearing already of hedge funds buying that debt and making the reclaims themselves. So it's quite a complex area, but as I've said, the reality is, on the whole, it is the consumer that ends up losing out when tariffs are imposed.
And in terms of businesses, say, based in the UK or indeed in Europe and elsewhere, what is the impact of the constant fluctuation regarding the status of tariffs? Because they're on, they're off, they're back on, then they expire, then some new investigation comes through, they're back on. I mean, how are the businesses that you speak to positioning regarding the trade they do with the US?
They're finding it really difficult. I mean, the UK-US trade is still an important part. It's still the largest single country with whom we trade. But businesses are very actively now looking at diversifying their marketplaces because of the inconsistency in policy. As you said, tariffs are on, they get taken through the Supreme Court, they're off, new tariffs are announced. We had another announcement just this week of additional tariffs based on transshipment accusations, which are in addition to the tariffs with regards to forced labour, it's clear President Trump is using tariffs, access to the US market as a key geopolitical tool, and that is having implications. For UK businesses, we are actively seeing them now looking at alternatives to the US because of the uncertainty with regards to what the rules are going to be.
Marco, you're clearly wrong because Kevin Hassett says so. You are clearly wrong, because when Kevin Hassett took down the New York Fed for saying 90% of the costs are borne by the consumer and US businesses, he said you fail to understand. In fact, your methodology is flawed. And I say you because I think you're coming at it from the same place as the New York Fed, that it doesn't doesn't take into fact how it alters import volumes, fail to account for projected real income or wage growth as well. So that's what the case for the defence is as well. What's your back and forth with Mr. Hassett on that one?
Well, you can see that trade flows have not been massively effective in the short term, but what you are seeing is a longer term strategic shift because of the imposition of those tariffs. If you look at the inflation rate in the US, that has been affected because of the supply side shock that tariffs have imposed. What you have seen, because of the size of the US market, are investment decisions to rehouse manufacturing into the US. But that is a short-term or medium-term impact. In the longer term, you are undermining the role of the US market as a global player.
Yeah, I hear you. Yeah, and that's fascinating. But in the round, the data says, and I do this a lot with the Trans-Pacific trade. I have a look at, we have the latest back and forth over the last 15 years or so between various administrations, China and US. The trade flows continue to be rather robust, and that's the same case on global trade flows in 2025 and the early evidence of 2026, that actually global trade is on the up, where in some cases we're at record levels as well. So regardless of the oscillation created by this administration, trade flows are fantastic, aren't they?
They are, but the US's part of that global trade flow is declining. The percentage of the US trade is diminishing, and this uncertainty and this instability further undermines the long-term resilience of the US marketplace.
Does it undermine the use of the dollar?
That's a whole different issue. If you're looking at the dollar as...
But it matters.
It really does matter. And there are arguments, even within the US, as to whether they should or want to remain as a reserve currency, or whether they do wish to remain as a reserve currency. But you can see, not just with the BRICS, but the other nations now looking at alternatives. And the euro is growing in prominence with regards to as an alternative to the US dollar.
Marco, we know that the trade winds have been shifting supply chains, and it feels as though some nations were seeking to benefit from that. Everything plus China or ex-China was the trade, but some nations have simply just not been up to scratch. They're not as fast as China, they're not as nimble, they can't work with the margins, they don't have the speed. Places like Vietnam, there's a great story in recent weeks that Shein had shifted a lot of its production to Vietnam, and it just wasn't as good as China, so it shifted back. Has this been a missed opportunity for some of those nations?
Look, when you're moving global supply chains that have grown up over decades, if not longer, it's not like flicking a switch. It's not simple to make that shift. But if you need investment in manufacturing, you need investment in skills. But what you're seeing over the medium term is a fundamental shift in the way in which global trade happens. Some of that is driven by the geopolitical force that President Trump is applying, but also by the economics of nations looking at how they grow their manufacturing and build their economies.
I want to know what this means for Europe, because all along we've had many of these discussions at some big stakeholder meetings internationally. The view has been, look, Europe needs to keep its doors open because it is a big open economy. It benefits from a lot of exports. But the reality is that goods produced in Europe are increasingly facing threat from the likes of China that's gone up the production line. It's got very high-tech, very high-end products these days that can compete with the likes of Germany. What is the approach, do you think, from Europe? What should it be in this new world where the US and China are hugely competitive?
The internal market within Europe is free, but trading into Europe is very far from free, and it's a very protectionist environment. And I think the issue for Europe is how it's going to play, the role it's going to play in a new world order, because competition, as you say, from China and the likes, who have moved way up the value chain within with regards to manufacturing, is a real challenge. You can see that Europe itself is struggling to understand how it's going to respond. The Draghi report from 18 months ago very clearly identified that fundamental changes, both political and economic, are required if Europe is going to break free from the sort of stasis that it's been in for decades and really start to see growth in its economy.
Why can't Europe borrow from Trump's playbook? Argue that we need the supply chains here for the future that provide security for Europe. Put in the chip companies, manufacture those here, build up more hardware technology companies, the software to match. I mean, why can't Europe have a fully functioning technology supply chain, similar to what the US is trying to achieve?
If you look at Europe's approach with regards to AI, it is a very cautious approach. They don't encourage the sort of encourage the enterprising nature of development. The laissez-faire approach to rules and regulations is much more constrained, and this is part of what Draghi was saying, is you need to unfetter enterprise within Europe. You need to make it easier for businesses to grow, develop and thrive and to be entrepreneurial. And most importantly, you've got to address the biggest issue, which is the cost of energy.
Lovely to see you. Covered a lot of ground. Thank you very much indeed for joining us. Very nice to see you, Marco. Marco Forgione, who is the Director General of the Chartered Institute of Export and International Trade. Coming up on the show, the global bond rout eases, but yields on sovereign debt hold near multi-decade highs. We'll have the latest.
When world-class racing meets the best in science, nothing is left to chance. At this level, everything and everyone has to perform at their best. Ecolab helps protect it all, from people to performance, ready for whatever the race demands. This is what the best looks like. Driving innovation and building a high-performance future that's better for people, planet, and business. The best of us, winning the right way.
Never miss a moment.
We think there is a huge opportunity for AI in the UK and Europe because it is that middle ground between the United States and China.
Andy Burnham has committed himself to the Labour manifesto, so I don't think that that's going to change in the immediate future. I think our historic destiny is to be back in the European Union.
The world is taking you at your word, sir. What happens next?
We're never going to see Iran have a nuclear weapon.
One of the world's largest private climate investment vehicles, Altera, aims to mobilize $250 billion by 2030.
What we're trying to show is that we can align those objectives and we can make money doing it.
Clean energy, emerging markets, even the AI boom. The opportunities are vast, but how do you pick the right investments?
We have people who specialize in these investments, and that's what makes Altera unique. That's our secret sauce.
Find out more on the next Managing Middle East.
Closing Bell, weekdays streaming on CNBC Plus.
Slight recovery seen in some of those big tech names in pre-market. Now, OpenAI reportedly saw revenue rise to $6.7 billion in the second quarter, an 18% rise compared to Q1. That's according to the Wall Street Journal, citing people familiar with the matter, which also reported its operating margin worsened over the period as the AI startup saw its losses deepen to $12.3 billion. OpenAI says it has expanded its monitoring of new AI models as it looks to increase its security, following a security breach where one of its agents escaped controls and hacked another company. The AI lab said it now aims to issue an alert within 30 minutes after any concerning activity is flagged through its monitoring system.
I'm going to just pick up on Ben's point. 30 minutes. I mean, what? Bearing in mind, you know, algorithms and electronic trading and fiber can create trades, thousands of trades per second. So thousands of activities can occur in a breach in seconds. Millions of activities, I presume. I don't know what the right term is. But Ben's point is the right one. 30 minutes?
Well, let's just think about this logically. So no doubt there is an algorithm that can identify that there may have been a breach, but it needs to be verifiable by humans. So I would imagine the 30-minute delay.
Do you think the humans will have the sophistication and the abilities to be... You do?
Yes. So I think the idea is the machine red flags if there's been a breach, the human verifies whether there has actually been genuinely a breach, and then there would be some sort of system alert that gets triggered. If you want quicker, it means that you would expect the machine to carry out all of this work to immediately flag, because I mean, no human is sitting there 24/7 watching every single system across what is now a massive organization looking for security breaches. So I would imagine it's a two-part process. I would imagine.
The trust in humanity is strong. I don't know, I just don't think I'd trust the humans to be able to spot the breaches.
Well, this is the point. The machine spots the issue and then the human looks and to see whether there is actually a real problem here. I mean, it's like security in the house,
What if the breaching bot has already realised that if it's so smart, it's realised that there's going to be another bot watching it or another piece of the algorithm watching it and actually has dismantled that in advance?
Well, again, that provokes other issues and the algorithm has to get good at fixing that. But I mean, I think the issue is you don't want all these alerts sent out if they're false alerts. You don't want a company to be alerted to a possible security breach if there hasn't been one. So I think the hesitation might be in making sure there has genuinely been an issue and then communicate it, how you communicate it with the right teams to that company. I mean, obviously there's been a playbook now, given there's been an external company that has been hacked in this particular case. So no doubt there's been some learnings from this about the response mechanism at the company.
Yeah, and I suppose that 30-minute time frame depends on which company it is that has been hacked, potentially, because some companies, yes, it might be an inconvenience, they have to apologise, they put things right. What if that company is one that issues some sort of cryptocurrency and the AI model has managed to hack and decipher the code that underpins that crypto? 30 minutes, by the time you've even realised that your money's gone, it's wiped out. Good luck tracing it if the agent has been told, take this money, put it somewhere where it cannot be found. 30 minutes, I mean, it may as well be 30 years.
So this is the point. So there is detecting concerns. There is alert to human safety security team within the 30 minutes and give those teams a further 30 minutes to establish the alert is fake or positive. So there is that delay for human verification. And let's face it, these are still in their infancy when it comes to these systems. We can't allow humans to take, bots to take over all the work of humans. So there are concerns that you're going to have some sort of false negatives here. You want to ensure that's eradicated. Like, I mean, we had these conversations around the house, right? And one of the things that came through with security was that you don't want a lot of false alarms because eventually I'm not getting broken into, there's nothing happening here, it's another false alarm. The security companies are telling us that's exactly what you want to try and eradicate, those false alarms. If there's an issue that's triggered, if there's a red alarm raised, you want people to respond, safety systems, police to respond, because there is genuinely a threat.
On that front, can I give them an idea for free? They're willing, if they want to take this, it's all theirs. A traffic light system. You have an initial alert, maybe a green light, look, something's come up, we think it's wrong. Then if they think there's more legs to it, it goes to amber, and then actually, if it is borne out, a red alert. So they're given almost a real-time update to the company that is the subject of the hack.
We'll leave it there. Bond yields may be starting to pull back, but the impact of the past week's sell-off is still being felt and will be felt for a long time, let's be brutally honest. With the yield on the 30-year paper, Treasury, at its highest level in nearly 20 years. This ahead of a highly anticipated auction of 20-year paper later today. Bloomberg reporting that the Treasury will ask investors for a further $16 billion as a sticking plaster on America's $1.8 trillion deficit for the year so far. If investors decide that means they want a return around the current yield on that debt, which I presume they will, that's the most the US will have had to pay for its debt since it reintroduced 20-year auctions 6 years ago. Now, this comes as global yields continue to hold at multi-year highs. Japan's 10-year debt currently fetching its highest yield in around 30 years. And here's a question, I don't have the answer. I don't know if you guys do, and I don't know if any of you lot out there do as well. If you do, get in touch. Where is the catalyst for yields to go back down again? Now, the traditional catalyst is you find a clearing price, i.e. it gets to such a level on any asset, down or up, where actually it galvanizes investors to come back in. Where is the catalyst for investors to decide this is the clearing price and we want to actually own this paper in droves and actually push down the yield? And at the moment, I personally am really struggling to find that catalyst.
I think it would be a loss of faith in the companies pushing the AI and tech developments, because that is where some of the gravitational pull is coming from, isn't it? Investors are buying up debt there, funding the build out on the promise of revenues that based on expected demand. If that is not borne out and those look less attractive, that might be the catalyst that the bond markets need for investors to turn and say, actually, do you know what? Let's seek refuge in what was long established, tried and tested. And and that could be one of the factors that
maybe more immediately data. I mean, last month we saw an escalation in the yields in July, again, summer trading months. The heat came out of the bond market because we had a weak set of data. So the market had assessed that the inflation threat possibly wasn't as high as they were initially concerned about. So we saw yields reverse then. So it could be the same thing this time around if you're looking for a short-term fix.
Yeah, and the inflationary fears, an end to the US-Iran conflict might help.
Yeah.
Okay,
forget about
covered a bit of ground.
That is it for today.
That is it.
Yeah, let's wrap up the show. We're both, three of us are going to sign off. Actually, I'm going to come back on Morning Call. You two can sign off for the day. That's all for the show. Thanks for joining us.
See you soon.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime Report, weekdays streaming on CNBC+.
I personally risked everything to make Hyrox happen for me. For whatever reason, I went all in, literally, and I didn't have a plan B.
Moritz Forster had already reached the top of his sport. Olympic gold in Beijing, Olympic gold again in London, then bronze in Rio. But after he left field hockey, he was searching for something most athletes never get back, a second arena. The idea became Hyrox, a standardized indoor fitness race built for the millions of people who train in gyms but did not have a sport of their own.
In 2026, we currently sold 1 million tickets, with roughly another 500, 600,000 to be sold till the end of the year. And we're operating 34 countries.
The format is simple and unforgiving. The same race, the same order, anywhere in the world.
If we would change the format, it would just not be Hyrox anymore.
For me, ambition and passion go together. One fuels the other. You love something, you want to get better at it. You want to learn more about it. And I think CNBC allows our viewers to fulfill their passions. There's no doubt that the people who watch us care. I am very much focused on trying to land interviews where there is something at stake and asking them fair but tough questions in which their answers are important. I could not imagine covering anything else.
One of the world's largest private climate investment vehicles, Altera, aims to mobilize $250 billion by 2030.
What we're trying to show is that we can align those objectives and we can make money doing it.
Clean energy, emerging markets, even the AI boom. The opportunities are vast, but how do you pick the right investments?
We have people who specialize in these investments, and that's what makes Altera unique. That's our secret sauce.
Find out more on the next Managing Middle East.
Listen to CNBC on the move with the CNBC app. A lot of strong numbers this morning. Breaking news.
We got a big IPO, something for the private markets. Could it be a rate cut scenario?
Real-time market updates.
I check now on how Europe is set to open the trading day ahead.
Your favorite programs live 24 hours a day.
Welcome to Squawk Box Europe.
Welcome to the China Connection, Squawk Box Asia.
Listen wherever in the world you are. Download the CNBC app now.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
Closing Bell Overtime, CNBC.
Brennan, and this is your morning call. Good Wednesday morning. Let's get a check on U.S. stock futures, which are attempting a little bit of a rally here this morning. Well, at least say there's some stabilization after the selling we saw to start the week here. S&P is poised to open up fractionally higher to the tune of 4 points. Dow fractionally lower, 17 points. And the Nasdaq is poised to open up 55 points here. This, of course, after we saw another down day yesterday for the major averages, led lower by tech stocks and other momentum high-flying names that we've seen gain big so far this year. And it's come in the midst of this big bond sell-off. We're going to get to that a little bit more in just a moment. So if we just take a look right now at what we did see yesterday, a number of the chip and memory names hit the hardest. NVIDIA, Broadcom, Micron, SanDisk, Western Digital, they were all down between 2 and 9%. But if we take a look at those shares pre-market here, you could see a tempting rebound. And SanDisk in particular up 2% pre-market, Western Digital up more than 1% as well, and Micron up 1.5%. But a big factor in those pullbacks, as I just mentioned, has been the action that we have seen in the bond market. 30-year U.S. Treasury topping 5.33% in yesterday's session. That was a new nearly 20-year high. You can see we're taking a bit of a breather here this morning. We're also watching the 20-year Treasury auction later today. We're taking a bit of a breather here in the bond market with what we've seen, the recent run-up in yields. You can see a bit lower across the curve, the U.S. 10-year Treasury yielding 4.69% after that, too, touched levels we hadn't seen since, call it January of 2025. Yesterday, Fed sensitive. 2-year Treasury yielding 4.16% this morning. Higher energy prices are continuing to be in focus here. That's on fading hopes for a Middle East peace deal in the moves, and that is factor in what we've seen in the moves in bonds. Iran's foreign minister is rejecting the idea of a temporary truce in the ongoing conflict, stating that Tehran is seeking a permanent resolution. Meanwhile, new data from Kepler showing that Strait of Hormuz traffic slowed further yesterday as well. So if you take a look at what we're seeing in energy right now, WTI is up more than 1%, trading just below $86 a barrel. Brent up 1%, trading just below $92 a barrel. RBOB gasoline futures are higher. Nat gas is also fractionally higher this morning. It tends to trade a little differently. And another busy day of retail earnings on tap today. We've got Target, Lowe's, TJX reporting results. We're also going to get Analog Devices earnings here this morning. Estee Lauder, too, on the consumer side. But let's see how Europe and Asia are faring. Jay Pyong is in Singapore. Karen Cho is in London. And JP, let's start with you, especially since, as we've been talking about this bond sell-off here in the U.S., it's been a global phenomenon, not just a domestic one.
Indeed, Morgan, and good morning to you guys out there. And it keeps markets here risk off for the most part because of those rising bond yields, not just in the U.S., but also when you look at some of these major Asian markets, from Korea to even mainland China, 10-year bond yields all rising, although we're starting to see this surge, at least uptick in bond yields just showing signs of losing a little bit of steam. Japanese 10-year JGB yield still close to 3%. And to put it into context, the last time we saw it 3%, I was a junior in high school, actually, back in 1996. So again, you're seeing these elevated bond yields really pressuring some of these equity valuations, especially in the Nikkei 225, and more outsized with regards to tech offers, such as that of SoftBank and also Kioxia. SoftBank, actually, according to Nikkei, announcing that they're going to raise over $6 billion dollars via a retail bond offer, the biggest in Japan. But that will be tested, actually, by the current uncertainty with regards to bond market conditions out in Tokyo. It's a similar story when we take a look at South Korea and the tech shares like Samsung and SK Hynix. In fact, today we saw the sell-off trigger another sidecar in South Korea once again because of the return volatility pulling the South Korean benchmark down. SK Hynix in today's session also promising that they're going to use up to 50%, or half their free cash flow, to try and support the return it back to shareholders, and embarking on a 40 trillion Korean won bond share buyback to try and prop up the stock that fell precipitously in today's session. Finally, when we take a look at Chinese markets, it's the same story also. The Hang Seng barely staying afloat, and also robotics offers out in mainland China also suffering from an extreme sell-off. And I bring that up because we have to talk about the big IPO with Unitree, the humanoid robot maker out in Shanghai that actually debuted with a 460% surge from its IPO price of just over 150 yuan. There are over 140 robotics makers, it seems, out in China, and it seems that interest in China with regards to robots is starting to ramp up, Morgan. But the big question for Unitree is really whether they can convert this frenzy and some of these flashy robots into something that's more commercial and actually profitable. That is the $66 billion question, which, by the way, is the valuation of Unitree after its first day in the public markets. It's back to you guys for now, and hopefully the midweek session is going to be better for you guys in New York. Good morning, Morgan.
Good afternoon, JP. And I will say the video, we're going to be talking a little bit more about Unitree a little bit later this hour, and the video is wild. So we'll get into that. I'd also just say, JP, that I like the 1990s high school reference. They call us elder millennials. That's the term for us. So for what that's worth. JP Ong in Singapore.
Child of the grunge.
Yes. All right, let's turn to the early trade in Europe. Karen Cho is in London, and she has more on that for us. Hi, Karen.
Morgan, good morning to you. I'm just going to steer away from misspent youth and take you to markets directly. A mixed bag here for European equities in the Wednesday trade, with that global bond rout and higher oil prices weighing on investor sentiment. Attention too on the Fed minutes for any clues around the central bank's rate path ahead. You can see French stocks trying to snap a losing streak, but really tentative to the upside. Elsewhere, red for the major markets. If you're looking for the green, it's really concentrated around some big defense names like Rank, Safran, some of the AI trades, Nokia, and oil and gas stocks. Now, on bond markets, yields may be starting to pull back slightly, but the impact of the past week's sell-off is still being felt, with attention turning to a highly anticipated 20-year Treasury auction later today. Yields slightly more stable following that sell-off, which saw yields in Germany and France at over-decade highs. And another big story we're tracking here in Europe this morning, UK inflation has hit its highest level since March as it rose to 2.9% in July. The ONS said the rise was due to the largest rise in gas prices in 4 years, pushing household energy bills higher. Morgan, back to you.
All right, Karen Cho, thank you. Well, let's turn to the U.S. housing market, because that is certainly in focus this week. Toll Brothers reporting lower third quarter profit and revenue, but those still beat estimates. The luxury home builder delivering fewer homes, but sold them at higher prices. Toll saying the housing market remains challenging, but results were solid given the resilience of its wealthier customer base. You can see those shares are up fractionally here pre-market. This comes on the back of data showing single-family housing starts falling to the lowest level in more than 3.5 years in July. We got that data point yesterday. Latest sign that the market is being pressured by higher mortgage rates and bond yields. And the yield on the long bond steadying today below 5.27%. That's after hitting its highest in nearly 20 years yesterday at 5.33%. 10-year, which is used as the benchmark for mortgage rates, is just below 4.7% right now. Average rate on a 30-year fixed mortgage rising to 6.75% yesterday. That's up from just under 6.7% on Friday. And just to put all of this together, because we heard this from Home Depot yesterday as well, the company CFO telling CNBC that they continue to operate in a, quote, frozen housing market conditions, even as they do continue to take market share. So joining me now is Logan Matashami. He is lead analyst at Housing Wire. Logan, it's great to have you on the show. We just sort of laid it all out. We talk about easy financial conditions in other parts of the economy or other parts of the market, but not in housing.
No, but this year compared to other years, mortgage spreads, the difference between the 30-year and 10-year yield, are close to normal. So even though rates are at yearly highs almost, they're not as bad as they used to be. So the existing home sales market still year to date is up about 2.4%, but the conflict has complicated things, right? The 10-year yield does not like any negative news on the clock. So the longer this goes, the 10-year yield has gone up higher. And, growth is slowing down definitely in the last 5 to 6 weeks with our data lines that we track.
So I want to go back to the spread between mortgage and 10-year here, because that had widened to a record in the last couple of years. Why is it narrowing now?
Traditionally, what happens when the Fed starts cutting rates and when you've come off of a cycle where rates have been elevated, spreads do come down over time. So that's been a positive. If it was 2023, 4, or 2025, mortgage rates would have been up above 7% most of the year. So housing tends to operate better when rates are below 6.64 and heads towards 6. But every single year something happens where rates start shooting up higher and that growth slows down. So even though growth is still positive, if rates stay at this level or keep on going higher, that growth will decelerate like it's done in the last few years and we go nowhere.
Okay, so how does inventory factor into all of this then?
Inventory has been actually one of the positive stories in the housing market the last 2 years. We're back to somewhat normal, so that's keep price growth in check. That is something everybody's wanted. So the inventory story, even though we're only up 1.28% year over year, it is still a positive story. Wages are outpacing home price growth. That is good for affordability over time. It's really a rate story. You just get rates near 6%. You could have growth in sales in the existing home sales market.
I mean, we just touched on Home Depot. We got those results yesterday. They were better than expected. We're going to get Lowe's results this morning as well. I mean, on the one hand, you don't necessarily have folks transacting as much, moving as much because rates are high here right now and they have a lot of equity in their homes. On the other hand, they do have a lot of equity in their homes and perhaps they're going to spend more here to continue to update and improve their homes. So how to think about that dynamic as well?
Housing tenure in America has doubled. In some states, it has tripled. So people are staying in their homes longer and longer. We have a very aged stock of housing. There's a lot of homes that were built in the 40s and 70s that do need repair. So that is positive for the remodeling market. The very low percentage of homes are underwater. There's a lot of nested equity out there. A lot of homeowners are doing well financially. So the remodeling business, oddly enough, has held up very well in this cycle, and that's kept residential employment elevated compared to other cycles. Housing starts and permits are another thing. We're not going to be building homes with the builder supply where it is right now. But the remodeling business has been a highlight for the housing market the last few years.
Okay. Logan Matashami, great to have you on to start the hour. Appreciate it.
Pleasure.
We got a lot more to come here on Morning Call. We really do, including the new growing threats to the global economy. We've got a closer look at how weather around the world is disrupting everything from energy to trade, farming, what it all means for your money. Plus, more on Unitree's big trading debut in China as that company looks to get a leg up on the humanoid robot race versus Elon Musk and others. And later, in an in-depth conversation with the Undersecretary for Acquisition and Sustainment at the Pentagon, Michael Duffy, on that massive contract for RTX for Tomahawk missiles, just the latest in a series of these agreements. But of course, seeing that as questions continue to swirl about the state of the U.S. missile and munition supply and whether we have enough stockpiles. Very busy hours still ahead when Morning Call returns.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
This is not just good content, this is good business. It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has the chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
I'm with Becky. This is the greatest show on earth.
Squawk Box, streaming on CNBC+. The day's top stories driving Wall Street. Up-to-the-minute developments. Kelly Evans, Brian Sullivan, Power Lunch, streaming on CNBC+.
My earliest ambition was to be a teacher. Now I can teach you so that you can be as ambitious as you want about whatever you want to do. CNBC is my home. If you love your work, well, maybe it's life itself.
It's been a 1-2 punch for the global economy. First war, now weather. That's thanks to drought in many parts of the world right now. Water levels are extremely low, disrupting energy generation, trade flows, and farming. Take the Rhine. The major bottleneck Cobb levels dropped to 6 centimeters on Saturday. That's far below the 25-centimeter record that was set back in 2018. The river carries Germany's commodities, including steel, chemicals, and petroleum products. It's already affecting companies like BASF and Lanxess and could threaten Germany's economy. The German Economic Institute estimates a repeat of 2018 conditions could shave 0.4% off of GDP, erasing this year's projected growth for Germany. Water levels on the Danube River, that's the second longest in Europe, have dropped so low that sunken World War II German warships are now becoming visible. It's pushing power plants to the brink of shutting down, with governments across Central and Eastern Europe taking steps to conserve electricity. Hungary is deliberately sinking barges this week in an effort to raise river levels to keep the Pax nuclear power plant operating. Then, here in the Western Hemisphere, there's a Panama Canal. Wait times and daily auction prices have soared. Low water levels in the locks that feed into the canal have even caused the Panama Canal Authority to implement a schedule of restrictions on the draft of vessels that it can actually accept. And this just as tankers are looking to bypass Middle Eastern waterways. So here in the U.S., it's a crisis for the Colorado River and its reservoirs as well, which supply water to 40 million people and 5.5 million acres of farmland. Lake Powell, this is the second largest U.S. reservoir. It's now less than 30 feet from the level at which its Glen Canyon hydroelectric dam would stop generating power. So if you put all of it together, it's a recipe for more bottlenecks and potentially higher costs, and at a time where inflation, not just here in the U.S., but around the world, is already sticky. So let's talk more about the market and economic impact of all of this. Let's bring in Dan Leonard, Director of Forecasting for the USA at MetDesk, a specialized commercial weather and data analytics firm. As we like to call you here, you're the Wall Street weatherman, Dan. It's great to have you back, and I think just laying out what I did, your response.
We're kind of in trouble right now. I guess that's the overall idea. I get asked a lot as an energy meteorologist, what do you think of nuclear power? It's such a stable source, alternative source of energy. It's cleaner than burning fossil fuels. It's way more reliable than solar and wind. Why don't we use more of it? And I think Europe right now is proof positive of things that can go wrong when you have nuclear power. You have a really hot summer. And remember, the nuclear generators need cooling to continue to operate. And when your river levels are too low, or when the water's too warm, or in some cases you have jellyfish infestations, that can cause major problems. And then the nukes have to either curtail or shut down completely. And I think we've lost like over 20 gigawatts of power because of this right now in Europe. And that's a massive amount of generation that is completely offline. So when I hear this argument that nuclear is so stable, like, actually, no, you can have these situations that cause it, weather situations, beyond Fukushima, that cause it to go offline. And then it can take weeks or even months to come back online. We've got to replenish those river levels, and that can take a while. So yeah, we're in trouble in Europe right now. And the US, this could be something that easily happens in the future. We have a lot of nuclear reactors that are on lakes, rivers, and on the ocean that are impacted by something like this.
Yeah, and we just mentioned it. I mean, hydroelectric power too, and the potential impacts if you see reservoirs continue to draw down here as well. I mean, jellyfish infestations, I feel like this is probably a whole separate conversation we could have. Nonetheless, what does all of this mean for power prices? What does it mean for the companies that provide the power, the companies that provide the inputs that go into the power?
Yeah, well, I mean, obviously power prices are up in Europe. They're going to be up over parts of the Western U.S. because of the severe drought here. We have a lot of hydroelectric in the West, especially the Northwest, where it's been obviously very dry. And now we're moving into the fall and winter. We didn't really get the monsoon in the Western U.S. that I was hoping for. It's been okay, but really coming off such a warm and dry winter, we needed a lot of rain this summer. We didn't get it. Fortunately, it looks like, at least for the southwestern U.S., that as we move into the fall and early winter, we will have a more active pattern, which should replenish a lot of the rivers and reservoirs out there to help with hydrogen. But the northwestern U.S., on the other hand, tends to be warmer and drier during El Nino winters. So that could be an ongoing problem there as well.
Okay, so how to think about all of this, not only going into the winter, but coming out the other side of it. Especially, well, I guess I'll say coming into the winter because hurricane season is upon us too. Is that at least a bright spot here, that maybe we don't see hurricanes that are as severe?
Yeah, at least not in the Atlantic. We tend to have suppressed activity in the Atlantic, and we've seen that all season long. It's been very anemic in the Atlantic basin. The Pacific, on the other hand, has been very active, and our models suggest it will continue to be very active across the Pacific. And you might think, oh, okay, that's fine. You know, Asia gets their storms, but North America is safe. But actually, on the other hand, it can actually have big implications on the larger scale pattern if you get a lot of typhoons in the West Pacific. So that's something that, as meteorologists, we're following closely as well.
Okay. Dan Leonard, it's great to have you back on. Appreciate it, and all of your insights, as always.
Thanks, Maureen.
Of course, all of this has been contributing to what's been a ferocious wildfire season so far, both here in the U.S. and in other parts of the world, including Europe as well. Well, straight ahead, we've got new details on Chinese tech giants apparently gaining access to one of NVIDIA's most powerful chips. And as we go to break, let's get a check on several energy names. Shares hitting new highs. That includes Marathon Petroleum, Phillips, Targa Resources, and Valero Refiners. They have been on fire, those stocks. And in just a few moments, we're going to explain a little bit more about that. All up between 10 and 15% just this month alone. The names that are on your screen. Morning Call is back after this.
Edge just opened up in Europe with a French government cooperation agreement as well. How significant is that deal for Edge and for Abu Dhabi?
Europe is where the next budgets are. We would like to contribute to the security of Europe. We feel that we have a value. We feel that Europe have recognized this value by accepting us into Europe. These are facts. We have a very nice footprint in Europe, and this would have not been possible if the UAE wasn't accepted in Europe as a partner, knowing and trustworthy with NATO and the way we firewall things. Plus, you need another player in Europe. Even the big players today, we're working with them. There is always these collaborations, but they only start when you put your ego aside. There is always someone better than you. And you need to be on this learning curve forever.
All right, let me tell you about ambition. To me, too much is not enough. You have only one life, so go all out. The only way you're gonna accomplish all the big goals is if you have a vision. Find out what you want to do, set the goal really high, and go all out. And then you create another vision, and another vision, another vision. So that's being ambitious, be useful. That's what my father always said. Don't just waste this life away, be useful, help other people. This is what it's all about.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime Report, weekdays streaming on CNBC+.
As the Asia trading day begins, join me for Squawk Box Asia. What are you watching? Nobody would be thinking that level of a benchmark is possible. We're live across the region, covering what you need to know from here and around the world that would shape the business day.
We know there's two winners in AI. It's going to be China-US.
Let's stay away from these companies that are selling it at 40, 50 times sales.
Join me for Squawk Box Asia, only on CNBC. A market shaping industries, supply chains, and global momentum. The China Connection, weekdays. This really is a business-first pivot. CNBC.com and the app anytime. Only on CNBC, connecting you with China.
Welcome back. Let's get a check on NVIDIA. The Financial Times is reporting that small batches of the company's H200 chips, its most powerful AI chips, have been allowed to enter mainland China. The FT says that ByteDance and Tencent have each received about 10,000 of the processors in recent weeks, and that other Chinese tech firms could get similar shipments. The apartment development comes as Beijing continues to support its domestic semiconductor industry as well in a push to become self-sufficient given these Western export controls. You can see shares of NVIDIA are up fractionally this morning. We'll see what kind of commentary we get when we get NVIDIA earnings next week. Keep in mind the company and Jensen Huang have been very clear in saying that they've de-risked in terms of their exposure to China and that it does not factor in to their guidance. We will see. Sticking with China and humanoid robot maker Unitree, that surged in its public debut in that country today. The company is seen as one of the biggest rivals to Elon Musk's own robot ambitions over at Tesla. Eunice Yoon joins us now from Beijing with more on that. And Eunice, I mean, we're showing it already, but the video here is wild. I'd also just note the float was very small.
Yes, it was. But at the same time, it did have a stunning debut. This company now has $900 million more money to be able to compete with the likes of Tesla. The stock soared by 630% at one point, so that valued Unitree at $59 billion or $161 per share versus the IPO price, which was $22. The stock ended up only 460%. So a very good debut for Unitree. A little bit about this company. It's seen here as the leader of humanoid robots, competing with the likes of Tesla. In fact, in 2025, it shipped 5,500 of its humanoid robots versus Tesla's 0. In terms of the other numbers that are important, this is a company that is one of the few that's profitable in its industry. So it was able to earn $41 million in 2025 versus on $250 million of revenue. The strategic investors are also big tech names, DeepSeek, Tencent, as well as the state energy companies, the state grid as well. 20% of the allocation of the IPO went to some of those firms. Now, the profit and the key partners aren't the only reason why the retail portion was subscribed by 5,500 times. The company is in a strategic sector that Beijing wants to be able to promote. So the founder, we see him at meetings with President Xi Jinping. Retail investors also know that this is a company that where the robots are heavily promoted at big events and are important for industrial policy. In fact, Morgan, this week they unveiled one called Superman, and it could jump 2 meters high just while standing. So they have a lot of interesting robots that people are pretty proud of.
Yeah, I mean, we just showed video of like robots doing the robot, which just tickles me here. So in light of that, I mean, especially as we do see the supply chains between the U.S. and China continue to disentangle where humanoid robots and physical AI is concerned here, how to think about where China is in this, for lack of a better term, geopolitical or global race to bring this technology to maturation. And I ask that because I've had so many conversations about the technological innovation and engineering feats that go into these things. I mean, from a connectivity standpoint, a power generation standpoint, even being able to have them grasp properly, very, very hard. And yet everything we're showing on the screen looks very sophisticated. And then I hear you say that the company's profitable.
Yeah, this one is profitable. But what has been interesting is that the net profit for the first half of the year, which came out just this week, showed that their profits had dropped by 19%. So they say that a lot of that is going to R&D. To your point, they want to be able to invest more in what they say embodied AI. They think that a key differentiator is going to be going into the models, like the brains of these humanoid robots, because the challenge for them is to be able to get these humanoid robots to just not only be like dancing around, you know, but also to be in people's homes doing certain jobs. And so I think from there, you know, Unitree wants to be dominating this, but also China wants to dominate it. So, you know, when you're talking about the geopolitics, we see that this company is viewed as an important one to kind of build the momentum over the money that goes into the IPOs. So they're like robotic IPOs, AI, DeepSeek, Moonshot, all these companies are supposed to be IPOing in the coming year or so.
All right, Eunice Yoon, great reporting. As always, wonderful to have you on the show. Well, as we head to break, let's get a check on Lazy Boy shares. Those are plunging on the back of Q1 results, swinging to a loss due to declining sales. Revenue guidance for the current quarter missing the street's estimates. The company was really touting the strength of their retail business, but Wall Street's not buying it. Shares are down 19%. Morning Call is back in a moment.
As our country celebrates its 250th anniversary, CNBC spotlights the leaders driving business and the nation forward.
If I had to choose one word to describe 250 years of incredible American enterprise, I think it would be together. I am Jason Gerzadas. I am the CEO of Deloitte in the U.S. I think Deloitte has been integral to this notion of creating togetherness, to creating collaboration, to allow disparate stakeholders to achieve great things on behalf of our incredible country. The Deloitte history is really remarkable. It's 180 years old and really goes back to the founding of American business. We're very privileged to serve 90% of the Fortune 500, probably 10,000 private organizations across all commercial sectors, universities, not-for-profits, and all facets of government, federal, state, and local. And so our client footprint speaks to the American story and the diversity, the breadth, the strength of all aspects of the American economy. If you look at the arc of American business history, all the way from the Industrial Revolution to the moon landing and everything in between, great accomplishments in American enterprise have been achieved through collaboration and the teaming of various constituencies and stakeholders to achieve great results. America's superpower today is clearly the strength of our capital markets and the innovation, passion, and capabilities that are so pervasive across many dimensions of our economy. If we continue to hone and invest in that same set of commitment and conviction around capital markets and innovation capability, the American prosperity and the American leadership role will be secured.
Abu Dhabi has now been branded as the capital of capital. There really are few places in the world where the concentration of sovereign wealth funds and smart investors.
It's a great place to work and live. I mean, living in Abu Dhabi, it's a very safe, secure city.
I love it so much, I don't think I'll ever leave.
Any company that's looking to grow and expand, really look at the Hub 71 Accelerator Program, the ADGM ecosystem. We couldn't have found a better home.
Everything is there for you to succeed here.
Be there for the opening bell.
Welcome to Squawk on the Street.
What's moving? The biggest guests, the market action.
Right here.
Squawk on the Street, CNBC.
In this CNBC Explains, we explore why Asia is leading the global IPO market.
We have a really big year for IPOs with SpaceX, OpenAI, and Anthropic, but analysts are pointing out that there's much more volume here in Asia.
And we look at how South Korea's AI chip boom is spilling into the housing market.
In Korea is a reflection of what people consider as their safety net, as well as a symbol of success.
The show that explains the why behind the headlines, only on CNBC.
Listen to CNBC on the move with the CNBC app. A lot of strong numbers this morning. Breaking news.
We got a big IPO, something for the private markets. Could it be a rate cut scenario?
Real-time market updates.
A check now on how Europe is set to open the trading day ahead.
Your favorite programs live 24 hours a day.
Welcome to Squawk Box Europe.
Welcome to the China Connection, Squawk Box Asia.
Listen wherever in the world you are. Download the CNBC app now.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
What happened today?
The market had to resort to defense.
We've got a developing story out of Washington.
What's moving in real time?
What do the numbers tell you, pro or con?
Be ready for tomorrow after the bell.
There's a wait and see about a lot of things for tomorrow, Mike.
Completely.
Melissa Lee, Mike Santoli. Closing Bell Overtime. CNBC.
Welcome back. I'm Morgan Brennan, and this is Morning Call. Let's get a check on U.S. stock futures this morning. As we see, we'll call it a little bit of stabilization here pre-market. Mixed picture, but very minimal moves. The S&P is poised to open up 2 points, so basically flat. Dow down 10 points, and the Nasdaq is poised for gains of 29 points. This is after a sell-off in the major averages to start the week, something we've seen in the wake of a big sell-off, and not just here in the U.S., but globally in the bond market. So let's get a check on what we're seeing with Treasury yields here. This morning, you could see the U.S. 10-year Treasury yielding 4.69%. So we're still elevated, we'll say, versus a week ago, but taking a bit of a breather versus some of the moves we've seen here to start this trading week. Take a look at the 30-year Treasury as well, 5.28%. That's after that topped 5.33% in yesterday's trading session, touching a new nearly two-decade high. This morning, though, as I mentioned, it's not just bonds here in the U.S. It is what we're seeing in bond markets across the world. So we'll just get a check on Germany's 30-year bonds. That touched 15-year highs yesterday. France's 30-year is trading right near an 18-year high. Britain's 30-year gilt is at a nearly 30-year high. And in Japan, you had 30-year JGBs with yields now at a record crossing above 4%, which is where we are this morning. Let's turn to energy prices as well. Iran's foreign minister rejecting the idea of a temporary truce in the ongoing conflict, stating that Tehran is seeking a permanent resolution. The comments coming after President Trump yesterday said that there is no ongoing dialogue with Iran to end the war and no discussions are scheduled. You could see energy prices continue their climb higher this morning. WTI is up about 0.8%. Trading around $85.70 a barrel. Brent is also up 0.8%, trading just below $92 a barrel. The president recently denying reports that the U.S. military is facing severe munitions shortages as the war in Iran drags on as well. And amid those questions about stockpiles, the Pentagon this week announcing a nearly $23 billion contract with RTX to accelerate production of the company's Tomahawk missiles, basically going up to 1,000 missiles in production per year over the coming years. So let's bring in Michael Duffy, the Honorable Michael Duffy, Undersecretary of Acquisition and Sustainment at the Department of War. And Secretary Duffy, it is great to have you on the show. A lot to get to here, but I am going to start right now with you with the state of missiles and munition stockpiles here in the U.S. Do we have enough?
Good morning. It's great to be with you. Thank you so much for having me on. Listen, I think President Trump, Secretary Hegseth, Chairman Kaine, they've repeatedly said the U.S. military is prepared to defeat any threat at any time, at any place of our choosing, and I think that continues to be true today.
So in light of that, I mean, we've had a flurry of headlines just in the last couple of weeks suggesting that our numbers and our levels are dangerously depleted. Do we have the ability to have maximum flexibility if this war in Iran continues, especially if the need to escalate arises?
Well, listen, I think President Trump, Secretary Hegseth are leading when it comes to ensuring that we're rebuilding the military and revitalizing the defense industrial base. Having a healthy defense industrial base can only help us when it comes to ensuring that we are prepared to defeat any adversary. That's true in today's fight and tomorrow's fight. And so this deal that we've rolled out is a great deal for America. It's an opportunity for us to rebuild the military and create multiples of production on a combat-proven missile, the Tomahawk missile, that is sought after worldwide. We've created 3,000 jobs in Tucson just for the Raytheon factory alone, let alone the entire supply chain. And we're building the workforce, we're building the supply chain, and we're building the factories that we need to ensure that we will have a military that's prepared to fight any enemy for the next generation.
Okay, I want to get into all of these deals in more detail here in just a moment, but I just have one other question, given some of the media coverage we have seen about the state of the U.S. military, because there does appear to be this narrative, or we'll say the optics appear to be that the U.S. military and the defense industrial base is perhaps a little more fragile or not modern enough to meet the demands that we're seeing of modern-day warfare, including drone warfare on the battlefield. Case in point, we're talking about missiles and munitions, but then even just conditions of the USS Lincoln, the fact that the Lincoln needs to return to be serviced, and another aircraft carrier is going to have to replace it in the Middle East. Your response?
Well, I mean, there's no question that the Biden administration neglected not only rebuilding our military, but our defense industrial base. But we've been focused since President Trump entered into office on engaging our industry, ensuring that we have the defense industrial base is a key strategic asset to the country to ensure that we can provide what we need for our warfighter, for the security of the American people. And so our focus has been on how do we engage industry, which we've done very aggressively since we came into office, and lay down the expectations of what we need from industry in order to deliver for the warfighter. Secretary Hegseth, President Trump have been doing that since we arrived in office.
All right, so let's go back to some of these big framework agreements that are now converting to contracts, whether it's RTX with the Tomahawk missiles this week. We could talk about PAC-3, THAAD, SMR-3. Could go down the list here. A number of companies that are involved in this, whether it is RTX, Lockheed Martin, Northrop Grumman, Boeing, L3Harris, etc. I want to talk about the conversion to contracts, because we're talking about 7-year contracts, multi-billion-dollar deals. The difference between undefinitized and definitized contracts and the role that Congress is going to play in appropriating all of this.
Well, first of all, these deals really are unprecedented. I mean, you've never, thanks to the cooperation of Congress, we have gotten this multi-year procurement authority, which is not a new authority, but I think we've used it in new ways. For example, this deal we rolled out with Raytheon and the deal you mentioned that we rolled out with Lockheed on the Patriot missiles from 2 weeks ago are 7-year deals. This is a duration and a volume of production that incentivizes business to invest their own capital, also unprecedented. Billions of dollars of capital coming from Raytheon, Lockheed, and their supply chain in order to build these factories, these workforces, these supply chains to supply the military for the next generation. Second, we've been able to hold unit costs steady. That's unprecedented. Typically we have year-over-year appropriations, as you'd mentioned, by leveraging the multi-year contract and taking it from the framework agreement to the undefinitized contract, we've locked in a unit price that will hold steady for the next 7 years. And finally, we've been able to introduce profit sharing, also unprecedented in terms of a deal of this size. And that means as Raytheon and Lockheed and these other companies are investing heavily in order to improve and modernize their manufacturing, a portion of their savings will return to the federal government. So I actually believe when everything is said and done, we'll have a cheaper missile than we did when we started.
Yeah. So just to be clear on this, a change in composition in Congress wouldn't necessarily change this dynamic or create a risk to this 7-year, timeline that you're engaging in with industry? What about continuing resolutions?
Well, listen, I think absolutely funding is required in order for us to fulfill this contract. A multi-year procurement still requires the funding to be made available by Congress. But we have been engaging with Congress, and we have widespread support. There's a recognition of the need for us to grow our munitions magazine, and I think that we will be successful in the end in getting that funding and delivering these missiles for the warfighter.
Yeah, the U.S. Army just announced a contract with Hanwha last night, too, that's getting some attention. Korean, aerospace and defense contractor that operates here in the U.S. as well. Whether it's that, whether it's defense tech and some of the new startups that we talk to on this show on a daily basis, how is the aperture opening in terms of how you're engaging with industry? What does it mean for competition, and what does it mean for that defense industrial base and how you're thinking about bottlenecks in the midst of all of this?
Well, Morgan, I'm glad you brought that up. You know, our direction from President Trump is to expand the defense industrial base across the board. So, yes, we're working with Lockheed and Raytheon. They have very combat-proven missiles in the Tomahawk and the Patriot. But we're also negotiating deals with Anduril and Co-Aspire and Zone 5 and Castilian, new entrants across the board. You mentioned Hanwha, the significant investment from the Korean company in the Philly shipyard and down at Pine Bluff Arsenal to expand operations here. We are all about growth in the industrial base so that we can create not only the military that we need, but a defense industrial base that's resilient to continue to protect the American people for the next generation.
All right, Secretary Duffy, appreciate it. Thank you for the time today.
It's great to be with you. Thank you so much, Morgan.
We'll be back after this.
The day's top stories driving Wall Street. Up-to-the-minute developments. Kelly Evans, Brian Sullivan, Power Lunch, streaming on CNBC+.
If you're watching CNBC, it's because you want to get an edge. You want to get ahead. It's our job to deliver that. My ambition is just to be the best that we can possibly be. More often than not, I kind of forget that the cameras are there, but when there's really a burning question, I'm thinking about what my mom would want to hear. I've been thinking about some of the investors I know who are watching. Those are the same questions we have. People always ask me what I want to do next, and I always think they're a little crazy. This is what I want to do. It's the best job you could possibly have.
I built a legacy on the court, and now is the moment to build a legacy outside of the court. My main investments are in hospitality, in education, and sports. So I believe that's the future. I see my brand as in a growing perspective, and in some way building this new chapter.
You'd been managing a very rare condition in your foot for much of your career. At what point do you think you seriously started to think about life beyond tennis?
You need to have goals. I think it's very important in this life to have goals ahead of you, because that helps you to wake up every day with motivation and passion. I knew since a long time ago that I wanted to keep doing things and learning after my tennis career. I have two small kids, and that's the most important thing of my life, without a doubt. But I like to work. That's how I understand this life.
From the markets to the courts. Kick back and relax while we serve up the highlights. Tackle your weekend. CNBC Sports, afternoons on Saturday and Sunday, only on CNBC.
Welcome back to Morning Call. Let's turn to energy and a key metric that means more to the economy, arguably, than crude oil prices. The diesel crack spread. It's a key measure of refining profitability. It's steadily climbed to new records, crossing above $100 a barrel earlier this week. The diesel crack spread, it normally runs somewhere between 15 and 25. The calculation is based on a formula that tracks the direct premium of ultra-low sulfur diesel over crude, be it WTI or Brent. Refined product prices overall, they've seen much bigger gains since the start of the Iran war than crude. They have not come down in the same way from the highs either. So why? Well, with all the attacks on refiners in the Middle East that continue and attacks in this Russia-Ukraine war, including some of those attacks by Ukraine on Russia's refining capacity, these are the two regions that make most of the diesel for the world. And you've seen that capacity come offline. So now you take that, you factor in delayed refining maintenance in places like the U.S. because the spreads have been so good and because there's been such need for supply and it's been so tight, at some point that too will come offline temporarily. So who gets hit first when you see diesel prices shoot higher? First, farmers, truckers. This is all going to ricochet from there. Remember, freight companies don't eat higher fuel costs. Shippers do, which means companies and potentially consumers will continue to see the impacts of those higher costs. Now, can the crack spread go higher? Yes, potentially. At some point, though, and this is a debate, you could start to see demand destruction. This is a supply shock that will affect inflation. The Fed and other central banks can arguably do very much about it, and it is part of the reason that we're seeing longer dated debt, which we just touched on in the last block, selling off. And it's not the biggest contributor, but it is a big contributor to the move that we've seen higher in yields overall. Well, straight ahead, the Morning Call crew teeing up the trading day ahead, and the key threshold for bonds that one member says could trigger greater pain for stocks.
Never miss a moment.
We think there is a huge opportunity for AI in the UK and Europe because it is that middle ground between the United States and China.
Andy Burnham has committed himself to the Labour manifesto, so I don't think that that's going to change in the immediate future. I think our historic destiny is to be back in the European Union.
The world is taking you at your word, sir. What happens next?
We're never going to see Iran have a nuclear weapon.
I love the story. I love the drama that is business. A great interview is when you can get the subject to tell you something that you never expected, that you never imagined. My ambition is to help the viewer connect the dots, to understand the context so that we, all of us, can actually make our own judgments. Oh, I love what I do. I can't imagine doing anything else.
Squawk Box is breakfast with the most interesting people in the world.
The ultimate pre-market morning news show. Squawk Box streaming on CNBC Plus.
The AI boom is usually told as a Silicon Valley story, but some of the biggest winners are thousands of miles away in South Korea. And their windfall is now spilling into an unexpected place, the housing market.
Before we saw this massive rally this year, people just like to invest in the housing market because there is no alternative for savings and investment.
From January to April 2026, home buyers used about 3.7 trillion won, or roughly $2.4 billion, from stocks and bond sales to fund purchases.
The government wanted to boost the stock market so that people could move away from homes into the stock market, but people are coming back to the property market with the money that they earned in the stock market, and it's also sort of this vicious cycle.
The danger is not that one stock market sell-off will immediately crash home prices, is that the same wealth channel pushing stock gains into housing depends on confidence.
One of the world's largest private climate investment vehicles, Altera, aims to mobilize $250 billion by 2030.
What we're trying to show is that we can align those objectives and we can make money doing it.
Clean energy, emerging markets, even the AI boom. The opportunities are vast, but how do you pick the right investments?
We have people who specialize in these investments, and that's what makes Altera unique. That's our secret sauce.
Find out more on the next Managing Middle East.
Sheet, where we look at the topics driving the trading day ahead. Crew members today, Bilal Little, Victoria Green, and Ed Mills. All right. It's great to have you all here. We got a lot to get through, not a lot of time to do it, but it seems to me we got three sort of tentpole topics that are going to take us into everything that's driving the markets and the economy right now. Weather, war, and a weary consumer. So if we start there, Bilal, I want to get your thoughts on all of this, especially as we've been talking about a bond market sell-off, and we've been talking, even as we have softer economic data as of late.
You know, Morgan, look, I think the story really quickly is simple. One, equities are telling a different story. Fixed income is telling a completely different story. One is a little more bullish, and I think here's a story that underlines that. The weak consumer. If you look at what's happening with jobs, I think an average person that's out here, I'm in New York City, these people are struggling to find jobs. You think about people 16 to 34, there's not a lot of opportunities. The worst summer on record for someone that's coming out of college to try to find a job. So I think the weaker consumer is a very telling sign, but for the most part, the Fed has been really lucky because they got bailed out by, obviously, the yield market.
Okay. Victoria, I want to get your thoughts on that, the weak consumer piece of this specifically as we do look to more retail earnings here in just, honestly, just a few moments, whether it's Target, which is a stock that's been on fire this year, or TJX or some of the others.
Absolutely, and we do think consumers continue to trade down. I do unfortunately think the shaped economy is alive and well. I know Bassett said, hey, that's over with now, but I think that's continuing to happen, and consumers are continuing to look for value, especially as fuel prices are coming up here. We're having gasoline sticky, oil sticky, you know, housing is still a little bit expensive, rates are relatively high, mortgage rates are higher, and so I think you are still seeing that malaise across the economy that's difficult, and that's pushing bond yields higher. I think Walmart's going to do pretty well. I'm a little worried they're going to warn again on what the consumer's doing, but they continue to pick up more and more shoppers that are trading down. The same with TJ Maxx, people that are going for a little bit of a discount. And Target, obviously, we're looking at is the turnaround story really intact or not. But I am worried on the consumer. If we're seeing wage growth slow, what is that going to do down the road, especially if inflation stays sticky?
Okay. Ed, would love to have you weigh in on all of this, especially the if inflation stays sticky part, because whether it's on the weather side, which we talked about earlier in the show, or whether it's on the war side, and we are seeing trade bottlenecks. We are seeing supply chain, supply shocks. Case in point, I just talked about we're seeing in the diesel crack spread a few moments ago. How's all of this factoring in?
Yeah, so when you look at this, this is a big weight as we go into the midterm elections, something that Republicans and President Trump are going to have a lot of headwinds for. What I'm ultimately looking for is, does this allow for the Fed to cut? Does this force a Fed Treasury accord to try to tamp down those yields? Is Treasury going to get more aggressive in buybacks of certain Treasury issuance of data? This is not what Scott Bessent promised in his confirmation hearing. And so pressure on yields coming from Treasury working with the Fed, I think, is the next policy move we need to pay attention to.
Okay. We got 90 seconds here. Let's lightning around this. Bilal, your thoughts on what is contributing here to this bond market sell-off? I mean, is the fiscal piece something that investors are waking up to in a bigger way?
100%, $40 trillion is a sticker price, let's be honest here, that the market has to get comfortable with. The second thing, and let me just land this for you, Morgan, we have to figure out, are we repricing growth and or risk? And that's what the bond market is going to tell people, and I think all investors right now should be paying attention to that.
All right, we've seen this hit momentum, stocks and tech stocks especially hard. Victoria, do you steer clear of that right now?
Yeah, look, I think long duration is really tough. The long end, I think, could go higher. I think we're on 6 years of $1 trillion plus deficits, and it's starting to kind of wear in the bond market. So you got to be a little wary on long duration if yields spike.
Okay. And Ed, I'll give you final thoughts here, especially as we do look to Fed minutes later today.
Yeah, well, if we're at 40 trillion, the debt limit is 41.1 trillion. The debt limit comes back next year. That's going to be the big fight, the only must-pass thing. That's going to be the next bond market story for 2027.
Okay. We got 15 seconds left, Ed. Can the Fed actually fix some of this issue, or is the bond market doing it for them?
No, I think they will. You look at these task force, this is all setting up for this cut next year. This is a coordinated effort, as I mentioned, to make sure that these yields stay where they need to be.
All right, that does it for us here. Thank you to our call crew, rock stars. Squawk Box starts now.
Good morning. President Trump pausing new tariffs on Canada for 3 days while he says details of a deal are being worked out. Meanwhile, another retail bellwether set to report. We're going to get Target's second quarter results this hour, and Meta's social media addiction trial kicking off in California. What a ruling could mean for the tech giant. It is Wednesday, August 19th, 2026, and Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick along with Andrew Ross Sorkin. Joe is out today. Let's take a look at how the U.S. equity futures are shaping up. Not a whole lot of movement at this hour. Dow futures off by less than 5 points. The S&P futures and the NASDAQ futures down by less than a point, or actually the NASDAQ is sitting right around the flat line right now. But we are coming off 3 days in a row of declines for all three of the major averages. And for both the S&P 500 and the NASDAQ, yesterday was their worst performance this month. However, you are talking about these major averages making some pretty major moves over the course of this year. Even since the Iran war began, you can look at the S&P up by almost 12%. The NASDAQ is up by about 16%. And if you're looking at the NASDAQ 100, it is up by more than 18%. It's kind of interesting when you look at how that shapes up against energy. WTI is up about 27% over that course of time, and yet equities markets have marched steadily higher. You're looking this morning at energy prices higher once again, up by just over 1.1% for WTI, which is trading just under $86 a barrel at $85.93. And then you've got Brent crude up by more than 1% as well. It's trading just above $92 at $92.01. Treasury yields this morning, after continuing to climb over the last several sessions, are slightly weaker. The 10-year right now is sitting at 4.69. The 2-year is at 4.16. And, of course, we've been watching that 30-year Treasury very closely, too, because of its high levels that it's been trading at, closest to the highest levels in 20 years. Right now it's trading at 5.28, which is slightly lower than where we closed yesterday.
Meantime, President Trump pausing 50% tariffs that were set to kick in at midnight last night on some products from Canada. In a post on Truth Social, the president saying he's now delaying those tariffs for 3 days, quote, based on the fact that Canada and the USA, subject to the finalization of documents, have a deal, exclamation point. The great Keystone XL pipeline, long ago killed by sleepy Joe Biden, may be awoken from the grave. Now, those tariffs would have hit imports on Canadian products, including wine and hockey sticks. That was in retaliation for what the Trump administration called Canadian trade discrimination in the motor vehicle, alcohol, and dairy industries. Many of Canada's moves in those areas came in response to earlier U.S. tariffs. So we'll see what that ultimately means.
In the meantime, progressives scoring a surprise victory in Florida's U.S. Senate primary last night. State lawmaker Angie Nixon, a member of the Democratic Socialists of America, actually beat retired Army Lieutenant Colonel Alex Vindman, despite Vindman's 16-to-1 fundraising advantage. Nixon will now face Senator Ashley Moody in a race to fill the last 2 years of Secretary of State Marco Rubio's former term. In the meantime, Florida GOP Congressman Byron Donalds won his party's nomination to be the Sunshine State's next governor. President Trump has endorsed Donalds. Donalds will face David Jolly on the Democratic side. Jolly is a former Republican who became an independent and then a Democrat. Also in Florida, Republican Representative Corey Mills lost his bid for a third term to former TV reporter Ryan Elijah. Mills has faced a series of scandals and was initially endorsed by President Trump. Interesting, though, to see Nixon and the position that she's taken in this, the socialist, and it. You know, the Republicans are pretty happy that she won this. They think that it's going to be an easier...
They think it'll help galvanize support on the other side.
To bring out support on the other side. Florida is pretty much a red state at this point. But I do think about what Mick Mulvaney said the other day and the strength of the Democratic Socialists, the surprising strength that you've seen from New York, across the country, the Midwest, in different areas, and some of these things. Mick Mulvaney was on with us earlier this week and said, you know, Democrats used to rejoice when Trump was doing very well in the polls the first time around when he was running for election because they thought he would be easier to beat.
Right.
Wasn't the case. He's proven to be very strong, coming back and winning a second term. And then you've got, you know, the progressives maybe stronger, he thinks, in that same sort of sense. Kind of interesting foreshadowing.
Oh, so that's interesting.
Yeah.
I don't know.
That's what Mick was saying.
No, I know. I don't know. I don't know about that.
I don't know if I agree with that either, but it did make me think.
I think that President Trump was and is a very unique, almost singularly as an individual. I don't know if it was as much a concept. And I think this concept is a little bit harder for people to swallow, but we'll see.
It's been surprising, the number of victories that they've had. have surprised a lot of us who sit at these tables.
A new look at OpenAI's revenue as it battles for popularity with Anthropic. According to the Wall Street Journal, OpenAI sales grew 18% between the first and the second quarter to $6.7 billion. Now, some investors were looking for a bigger jump. The Journal reporting that OpenAI's operating margin fell further into the red. A report last week said that Anthropic's revenue had jumped 14-fold to $11.5 billion in the second quarter, and that the company's run rate was, I think, on pace to be something like $65 billion. So those are some of the issues that I think people are looking at as they're trying to compare both of these companies.
Also, Anthropic making plans to grant its 7 co-founders special shares with extra voting power. The information says that the move is meant to help protect that group, which holds a relatively small position in the firm, from outside shareholder pressure as Anthropic moves toward what could be the biggest IPO in history. The CEO, Dario Amodei, said last year that Anthropic's co-founders hold roughly equal stakes in the company. A source told The Information that Amodei's position amounts to about 2%. Anthropic is also maintaining a slate of non-shareholder trustees who have the power to elect the company's board.
So one of the things that's to me fascinating about this story is the idea that there are 7 founders. You know, when you think about when Google, for example, issued its special shares, it was really about Larry and Sergey, and you only had to really depend on, in this case, two people. I don't believe that Eric Schmidt had special shares.
That's what I was wondering. Was it a trifecta?
He might have, he might have, but there'd still be 3. 7's a lot. 7 to corral is a different story. So the idea, you know, if a group splinters, all of a sudden the control idea sort of shifts quite meaningfully.
Yeah.
So it's just interesting to sort of think through the permutations of that, and that it's not, you know, Dario and his sister as the sort of lead full-on controllers.
Yeah, as you've seen in other companies like Warren Buffett with Berkshire Hathaway, or with the family with Rupert Murdoch, who's gone through some of these things, or Brian Roberts and his family.
They're typically singular things, and even in the family, things could break.
Hold things together. I was thinking about yesterday's story with the LA Lakers too. Although she may have the controlling vote.
She may have the controlling, right, and smaller piece of her puzzle on the Lakers. Meantime, we're watching shares of SK Hynix, that company, unveiling plans to buy back $29 billion worth of its stock. This as it works to try to calm worries about AI spending the stock up in the pre-market. Now, the company just raised $26.5 billion last month in its U.S. listing.
All right, when we come back this morning, second quarter results from Target are on deck. We are expecting those numbers in just a little bit. Also, a programming note for you in today's 8 a.m. hour. Don't miss our interview with Robinhood CEO Vlad Tenev. That comes ahead of a key crypto meeting at the White House. Stay tuned. You're watching Squawk Box, and this is CNBC.
From London, Paris, Munich, and Milan.
We've seen very strong demand all summer long. End users are using our AI even more frequently.
Are you heading into a record Q4? We are gearing up for the biggest IPO of the year.
Prime Minister, it's a pleasure to be back in Athens.
It's a pleasure to talk to you.
This is becoming a very competitive market in the EV space.
Parliament continues to stay very fragmented. This Bank of England decision certainly got more interesting over the last couple of months.
Here's what investors are watching this morning.
Hyrox is on track to deliver around $270 million in revenue in 2026, and the Middle East has quickly become one of its clearest expansion priorities.
Basically, our global expansion strategy always entitled having Hyrox events. Our dream was in the 150 urban metropolitan cities in the world. Abu Dhabi, Dubai, These were all cities that were part of the list. It was always clear that the Middle East are a very, very important part of our business.
But global demand creates a new problem. The race can be replicated city to city, but the experience cannot be overcrowded. The result is a business that benefits from both scarcity and repeatability.
The tickets are very hard to get. That's what keeps people coming back and keeps people looking into opportunities to maybe even fly to another city or travel to another city to participate in. This is highly relevant and important for us as well.
Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange, streaming on CNBC Plus.
All right, welcome back, everybody. Take a look at shares of Lowe's this morning. The home improvement retailer is off by about 3%. This comes after earnings came in better than expected, $4.40 a share. That does include an 11-cent benefit from tariff refunds, but the estimates were only for $4.22. So whether the analysts include those in their estimates or not, this is a beat. Revenue came in at $25.96 billion, and that was just below expectations. But the big deal here, the reason the stock is trading down this morning is because Lowe's is now cutting its guidance for the full year. It originally had been saying that it was looking for numbers somewhere between $11.75 to $12.25 a share. Now it's saying it's going to be looking at earnings at the very low end of that, $11.75, right around that range. And they are blaming this on pressures on the do-it-yourself macro environment. This is very interesting. We heard the same thing from Home Depot yesterday, that do-it-yourself was a little more complicated and a little more complex because we have not seen interest rates come down, and that has been putting pressure on homeowners who in the past might have borrowed against their mortgage, get a home equity line of credit so they could do some of those larger projects. Home Depot yesterday had the advantage of having a much stronger relationship with the pros, with the small contractors that are out there that have been using Home Depot and that Home Depot has been catering to over the last several years. Lowe's doesn't have that same relationship with contractors. Not that none use them, but Home Depot has done a much better job of working with the pros, and that's why it was able to beat expectations and not have to warn about what they were going to be doing for the rest of the full year. Home Depot stayed in line with its guidance for the full year based on what it was seeing there. The expectation is not at this point that you will see lower interest rates or any help on that mortgage front, so that's been the issue that's been really fighting it. Home Depot shares were up yesterday because they've been able to manage through what people are calling a difficult macro environment for all of this. But again, you could talk about Lowe's kind of focusing on their do-it-yourself macro pressures and that lower guidance, and that's why you are continuing to see this right now. They now are saying that same-store sales came in up 0.2% for the second quarter. Lowe's now says that they see the full year fiscal 2026 comparable sales flat. They had been looking for flat to up 2%. So that's where the guidance has changed, and we'll continue to watch that. There you see shares of Home Depot, which again were up yesterday after it reported better than expected earnings and really focused on what they're going to see with that pro and what they think they can continue to do with it.
Okay. Meantime, we got futures to show you where things stand given some of this news, at least you're looking at the Dow right now off only about 1 point. The NASDAQ down about 12 points. The S&P 500, call it unch for now. Markets lower across the board yesterday with tech specifically, those chip stocks and memory stocks getting hit hard as rising bond yields continue to weigh on the sector. Joining us right now with his take on the tech sector is Matt Ornton. He's the Chief Market Strategist and Portfolio Manager at Raymond James Investment Management. Good morning to you. Where are we in this tech story? Because so goes tech, so goes I think maybe everything, but maybe I'm wrong about that.
Hey, good morning, Andrew. And I think we're seeing more of that bifurcation. When you look at the price action that we had yesterday, it was very, very challenging in tech and specifically the semiconductor trade. But the broader market still had more upward movers than downward movers. You saw strength in the healthcare space. Financials were doing well. So there's a lot of stuff that is still working in this market despite some jitters that might exist around technology. And rising interest rates don't suddenly make technology a bad investment. I think what the market is doing is it's finally starting to suss out and ask questions more around, can these companies actually sustain the amount of debt that they're issuing? And it's looking more discreetly at who are the winners and losers going to be. And I think it increases the importance going forward of owning higher quality, high free cash flow generating assets, particularly the beneficiaries of all of that spending, as opposed to, say, the spenders themselves. So there's still opportunities in tech and outside.
Give me some names of folks you went in on, and give me some names you want to stay away from.
So I think the hyperscalers in general are areas I wouldn't not own in a portfolio, but it's not where I'd be putting my marginal dollar. So Taiwan Semiconductor is one of my favorite names right now for portfolios because it's sold off during the month of July, but all roads lead back to Taiwan Semiconductor with respect to this build out. And despite their CapEx plans, we continue to see incredibly strong revenue growth month over month. And they are the only game in town with respect to the most precise chips that are being made. Other names that I think make sense, Andrew, in a portfolio, look at a Welltower to perhaps complement your information technology exposure. It's a healthcare REIT exposed to an aging demographic that we know is growing in the U.S. and continues to increase their margins by making smart acquisitions, shedding some medical office spaces, and really catering towards full service, vertically integrated senior housing. So that's a name that I think is a great ballast to, say, information technology.
One of the questions is just how wide do you think, what kind of transition we have, not just from tech, but sort of the rotation that's taking place, and how much of a rotation you think ultimately is going to take place?
So we've seen this rotation of starts. It's had fits and starts. And I really think there is sustainability to what you're seeing with respect to strength in the financials area. You've seen really, really strong growth across the banks, in particular capital market companies. There's durability there, and there's durability on a global level to that area. I think healthcare is a more challenged space. Earnings growth for this past quarter were actually negative, and you have to be specific. Pharmaceuticals, biotechnology, healthcare REITs, those are perhaps areas that I may think make sense. HMOs, which have done well, I think there's still question marks with respect to that business going forward. So perhaps that's an area to avoid. I think rising rates might challenge utilities a little bit. We've also seen some questions with respect to data center connectivities and states pushing back. So it's selectivity is what's going to be really, really important in this market going forward. And my favorite sectors are tech, financials, and industrials, and not just AI data center industrials, Andrew, but also your more cyclicals, your railroads, your trucking companies. You've seen an inflection with respect to earnings, and financials are corroborating that with really strong commercial and industrial loan growth.
Okay, Matt, we're going to leave it there. We appreciate your time and perspective this morning. Thanks.
Thank you.
When we come back, Chinese investors going wild for a humanoid robotics stock. Those shares of that company more than quintupling today. We're going to bring you the details after the break, and you can check out the robots doing their thing right here.
Real money, real debate. Scott Wapner, live from the New York Stock Exchange. Halftime Report, weekdays streaming on CNBC+.
From the markets to the courts. Kick back and relax while we serve up the highlights. Tackle your weekend. This weekend, race to your screen. The adventure continues. Dive into the action with CNBC Sports. CNBC Sports, afternoons on Saturday and Sunday, only on CNBC.
If you're watching CNBC, it's because you want to get an edge, you want to get ahead. It's our job to deliver that. My ambition is just to be the best that we can possibly be. More often than not, I kind of forget that the cameras are there, but when there's really a burning question, I'm thinking about what my mom would want to hear. I've been thinking about some of the investors I know who are watching. Those are the same questions we have. People always ask me what I want to do next, and I always think they're a little crazy. This is what I want to do. It's the best job you could possibly have.
Fast Money is America's post-game show.
Basically, near all-time highs against the S&P.
Every single story that we pick is a tie back to the markets.
Those sort of revenue streams don't trade at a great multiple.
We want to arm people with the information to make great decisions.
Stock got whacked. I get it. People say they overpaid. I get that.
Fast Money is all about the chemistry. We've been successful for this long because we're a team.
Fast Money, CNBC, streaming on CNBC Plus.
Shares of Unitree Robotics surging more than 460% in the company's Shanghai IPO overnight. It's the first publicly traded humanoid robot maker in mainland China. The company's market value is roughly $50 billion. Unitree shipped more than 5,500 humanoid robots last year and sold more than 33,000 quadruped? Is that how we say it? It's like working on all fours like a dog, quadruped? I think that's it, the quadruped robots. DeepSeek was one of the strategic investors in the IPO, and it plans to collaborate to incorporate its AI models into Unitree's robots, but you've seen the videos yourselves. They can do pretty amazing things. This was a dance they put on, I think it was just last month, where they showed off the synchronization, the incredible acrobatics, and I will say these robots are a little different than what we've seen from places like Elon Musk. He's always wanted to make the robots a little smaller and a little less likely to be able to take us over because of what you've seen through science fiction, the worries that you can get to iRobot and the things like that.
Right.
So China doesn't seem to have some of those same concerns, and these robots have been pretty impressive.
I mean, this is, to me, this is the stuff. You know, people say what's going to happen with AI and taking jobs. Yeah. But once this really happens, it's a whole different game. Yeah. It's a whole different game. Meantime, people may need this next product even more when the robots are doing all of their work and they never get up from the couch or need to. Novo Nordisk testing the pill version of its weight loss drug Wegovy to determine the lowest possible dose that people can take and still lose weight. According to a summary on the government database, the trial involves 450 participants. It's scheduled to be completed in 2028. In the U.S., lower dosages of Wegovy cost about half as much as 2 higher dose forms. So I think they may all be interrelated, meaning AI, the robots doing all of our work, and then what kind of medicines and drugs we're going to need to, persist.
Or if you have more free time, maybe you could get up,
I can only
work
hope.
out, and go to the gym.
I can only hope. I can only hope. Some of them will hopefully still be waking up and watching us. And maybe at the gym right now. Maybe you're at the gym. And if you're at the gym this morning, bravo to you for
They're going
waking
to be
up
watching Becky
early
Quicker and
doing
Andrew
that.
Ross Sorkiner.
That may be. That may be.
The AI version.
We'll be at the gym watching them.
Right.
Coming up, we're going to be talking about what's at stake for Meta as a blockbuster social media addiction trial getting underway in California. But first, as we head to a break, a look at yesterday's S&P 500 winners and losers.
before the lights go out, success on track starts long before the race. It's in every detail, every discipline, every process. While the team prepares to race, another team is already at work. Ecolab supports critical environments, from the factory to headquarters, protecting people, operations, and performance. We push together as one team. When world-class racing meets the best in science, nothing is left to chance. This is what the best looks like. Driving innovation and building a high-performance future that's better for people, planet, and business. The best of us, winning the right way.
On Market Shaping Industries. We are watching the six little dragons, the first to be listing in the Hong Kong market, supply chains, and global momentum.
Do you feel pressure to create the next Labubu soon?
This really is a business-first pivot despite the geopolitical strains. The China Connection, weekdays.
The trade heads are gathering against the backdrop of the global energy crisis.
CNBC.com and the app anytime. Let's get to your headlines. Only on CNBC, connecting you with China.
Power Lunch, streaming on CNBC Plus.
Welcome to Closing Bell Overtime.
Get the essential post-market edge.
A very busy overtime.
After-hours action and opportunities.
The economic impact is just beginning.
What happened today?
The market had to resort to defense.
We've got a developing story out of Washington.
What's moving in real time?
What did the numbers tell you, pro or con?
Be ready for tomorrow after the bell.
There's a wait and see about a lot of things for tomorrow, Mike.
Completely.
Melissa Lee, Mike Santoli, Closing Bell Overtime, CNBC.
President Trump will tap White House policy aide Heidi Overton to be the next commissioner of the FDA. That's according to multiple reports. Overton is a doctor and currently serves as deputy director of the White House Domestic Policy Council. She previously held a position at a conservative think tank. Last week, Overton appeared at a White House event centered on shrinking the U.S. childhood vaccine schedule. When we come back, we will speak with the CEO of Rare Ventures. It's an accelerator that blends venture capital and philanthropy in the quest to find treatments for rare diseases. Also, a reminder for you, you can get the best of Squawk Box in our daily podcast. Just follow Squawk Pod on your favorite podcast app, and you can listen anytime. We'll be right back.
One hour of added insight every morning doesn't just add up, it compounds. One extra hour every morning delivers exponential value and a pure investing advantage. That's the compounding edge. The all-new Morning Call.
I'm Morgan Brennan, and this is your Morning Call.
CNBC. Breaking news, market moves. Scott Wapner from the NYSE. Closing Bell. Weekdays streaming on CNBC Plus.
I built a legacy on the court, and now it's the moment to build a legacy outside of the court. My main investments are in hospitality, in education, and sports. So I believe that's the future. I see my brand as in a growing perspective, and in some way building this new chapter.
You'd been managing a very rare condition in your foot for much of your career. At what point do you think you seriously started to think about life beyond tennis?
You need to have goals. I think it's very important in this life to have goals ahead of you, because that helps you to wake up every day with motivation and passion. I knew since a long time ago that I wanted to keep doing things and learning after my tennis career. I have 2 small kids, and that's the most important thing of my life, without a doubt. But I like to work. That's how I understand this life.
Don't miss the highlights of the PGA Tour. Catch the action from the PGA. The biggest hits and misses. Join us on the green, Saturday and Sunday afternoons, only on CNBC.
Welcome back, everybody. Earnings out from Target. And while we just heard from Lowe's lowering its guidance for the year, you are now looking at Target upgrading its guidance for the year. It now says that based on the strength that it's seen with the consumer and the strength that they've seen same-store sales, comparable store traffic, they are now looking at adjusted earnings per share of $9.90 to $10.90 for the full year. That compares to their earlier guidance of $7.50 to $8.50. Now, if you're looking through the numbers for this most recent quarter, those earnings came in at $4.11 a share. That included $1.65 a share of tariff refunds. It's not clear that that's comparable to analyst estimates, but even if you back out the refunds, it would be a beat. So you're talking about some pretty decent numbers there. Revenue came in at $26.5 billion. That beat estimates of $26.14 billion. Second quarter comp store sales were up by 3.8%, and that is above the 2.4% increase that the street had been expecting. If you strip out the tariff refund benefit, operating margin was 5.9%. That compares to estimates of 5.6%. You can see, though, that stock is off this morning in the immediate knee-jerk reaction, down from 4% to about 2.3% right now. Not sure why that is, because the numbers are stronger than expected across the board with this. This has been a pretty incredible turnaround that the new CEO, Michael Fidocchi, has put in place. Maybe, though, if you're looking at why, again, beating on every one of the expectations that I've seen so far, but over the last year, that stock is up by almost 40%. So expectations are incredibly high as you walk into any of these numbers. But again, everything I've seen here looks like it's pretty good news on this. They say that they're going to continue ongoing enhancements within apparel and home, including upcoming reinventions of kids' home and bedding. And again, they're lifting their forecasts for the full years, but we will continue to watch this. You can see right now that stock is off by 5%. When we come back, a new funding source for research into rare diseases, blending venture capital and philanthropy. We have that story next. But first, let's get the AccuWeather forecast with meteorologist Bernie Reyna.
Well, the heat continues from Texas toward the southeast, but AccuWeather says few spotty thunderstorms this afternoon, Florida Peninsula, Tampa, Orlando, Miami. Also some isolated thunderstorms across interior sections of the Northeast. We'll have some sunshine, Boston, New York City, Philadelphia. West Coast is dry, and it's relatively hot in the Southwest. If you're doing any traveling, watch Boston this morning and then Orlando and Tampa this afternoon. AccuWeather for Business delivers proven superior accuracy with often earlier site-specific warnings that reduce false alarms and costly disruptions so your business stays best prepared. Visit business.accuweather.com.
On a $100,000 US margin loan, Interactive Brokers charges just 5.14%. Do you know how much your broker charges? Fidelity and Schwab charge over 2 times as much. E-Trade is even higher. Move your account to Interactive Brokers and save at least $5,100, or much more if you're trading big bucks.
CNBC Explains, we explore why Asia is leading the global IPO market.
We have a really big year for IPOs with SpaceX, OpenAI, Anthropic, but analysts are pointing out that there's much more volume here in Asia.
And we look at how South Korea's AI chip boom is spilling into the housing market.
In Korea is a reflection of what people consider as their safety net, as well as a symbol of success.
The show that explains the why behind the headlines, only on CNBC.
One of the world's largest private climate investment vehicles, Altera, aims to mobilize $250 billion by 2030.
What we're trying to show is that we can align those objectives and we can make money doing it.
Clean energy, emerging markets, even the AI boom. The opportunities are vast, but how do you pick the right investments?
We have people who specialize in these investments, and that's what makes Altera unique. That's our secret sauce.
Find out more on the next Managing Middle East.
Halftime Report, weekdays streaming on CNBC Plus.
Disease, funding the next breakthrough may be as challenging as finding it. Venture philanthropy, though, is trying to bridge that gap. This month, the launch of Rare Ventures combines capital fundraising and philanthropy in a new $25 million fund. Joining us right now to talk about it is Michael Hunt. He is the founder and CEO of Rare Ventures. He's also the CEO of EB Research Partnership. And Michael, it's great to see you.
Well, Andrew, Becky, thank you. It's an honor to be here.
Yeah. Let's talk a little bit about this. Venture capital and philanthropy have kind of been blending together over the last several years, but you are taking this to a whole new level. Let's talk about this fund, how it came about, and how it's going to work.
Yeah, well, you know, rare disease is in fact not rare at all, and arguably it's one of the greatest unmet needs in healthcare. I mean, 1 in 10 people live with a rare disease. There's 400 million people on the planet, most of whom are children, yet 95% still don't have any approved treatment. So if you're a parent of a child with a rare disease, someday is not soon enough. And when we think about our goal and our mission, you know, rare disease families don't think about drug development in quarters. They think about it in every single day. every single day. They overcome monumental challenges that most people won't overcome collectively in their lifetime. The asset that we care about is time, and restoring that time for families living with a rare disease.
It's really hard to raise the money that's needed to come up with a therapy or potentially a cure for a rare disease. What you're doing, though, is taking venture capital and putting that to work. You're doing this and saying, okay, whatever money that we raise, you're going to fund directly some of the drug companies to do this. Whatever results and returns you get, you will plow back into trying to find therapies and cures for other diseases, so that it becomes, hopefully, a spinning wheel that doesn't need any other money put back into it.
Yeah, that's right. Traditional philanthropy says, how much good can our dollar do? Venture capital says, how much return can our dollar generate? We believe we can actually do both. And if you think of venture philanthropy as compounding interest for disease, so de-risking early stage science, helping overcome the valley of death, making that viable for commercial and partners to carry it through, hopefully, regulatory approvals, then reinvesting that capital again and again to fund the next treatment and ultimately the next cure.
You've done this already at EB, which is epidermolysis bullosa. That's a disease that makes the skin, your largest organ, really brittle and papery, can lead to a lot of blistering and cuts. It's a terrible disease that you all have been fighting, but you've done just that. Why don't you explain what you did with EB?
Yeah, so EB was founded by a group of parents that wanted to save their children's life. We were lucky to have Jill and Eddie Vedder join us and bring their platform and their energy and their passion. And we started with a concept, first of all, like many rare diseases, it was historically underfunded and overlooked. So we believed if we invested in early stage science, we took economic positions. When that was commercially successful, we could pump those returns back into funding more science. So that dollar becomes used over and again to fight disease. And
you did it with some pretty big numbers. How much did you put in? I think there were 2 investments that you made that paid off multiple times over.
That's right. We've raised $85 million. We've gone from 2 clinical trials to 50, and most importantly, 3 FDA approvals in the last 3 years alone. And 2 of those were gene therapy companies, Abeona and Crystal, and we were early investors that helped accelerate the science to a point of ultimately regulatory approval.
How much did you put in versus how much the returns were on each?
Yeah, so on Crystal Biotech, we got about a 2.5x return, and on Abeona, it was a 6x return. So you think about what we did with that dollar, we supported these companies to advance, but then also took a donor dollar and turned it into 6.
Can I ask you, this is maybe a philosophical question, because people oftentimes talk about venture on one side, sort of the for-profit universe, and the philanthropic universe on the other. And they think that the second you start to mix the two, that invariably whatever the return is for the for-profit portion of the universe is going to be lower. Do you think that is true? And even if it is, maybe in the world that you're living in, the returns, potentially the margin could be so high that maybe nobody cares if there's a lower margin on the philanthropic end. Do you see that?
I see what you're saying. And historically, economically, rare disease has been fragmented. And we believe the future is actually via collaboration. So we're necessary partners with biotech and pharma, because if philanthropy doesn't de-risk these early stage investments, nobody else will. So if we can elevate these and make them viable, not only with de-risking the early stage investment, but providing data sets, providing registries, providing resources and clinical networks, we're doing a service to biotech and pharma to quite frankly, make that research viable in a way that it wouldn't otherwise be.
But would it not make sense? Could you do it on a fully for-profit basis?
You absolutely could. I think there's a role for the players in the system. So if we look at the amount of work to get something into a phase 1 or phase 2 clinical trial, I don't think philanthropy should be playing in a phase 2 or phase 3 clinical trial. It takes so much capital and so much resources, and that's really where the market should come in to validate that clinical data and those readouts and say this is now the point that we need to
If it's
go forward.
viable enough, you will have investor dollars.
That's right. That's right.
Talk about this new $25 million fund and how that came about, what you're going to do with it, because there are a number of diseases that you brought in. What is it, 7 or 8 that
That's
you're
right.
starting with?
That's right. I mean, the basic principle was, because of the impact we've made in EB, the rising tide should lift all ships. You know, that success in one rare disease should be shared and should really think about platform economics of building the infrastructure across multiple rare diseases. So we had the vision, and thanks to the Richard King Mellon Foundation, they shared the vision, they put the philanthropic capital forward, and we brought best-in-class partners of Stanford University, University of Pittsburgh Children's, Carnegie Mellon on the AI and tech side. So, you know, this is a team sport, and it requires all of us and our energy, so we're able to put together a phenomenal team.
You mentioned AI. How does AI play a role here? What are you all doing with it?
Yeah, AI is rapidly transforming rare disease and all medicine. This is a space where data is siloed. So part of Rare Ventures is bringing data on one platform where AI can actually accelerate it. So Carnegie Mellon, we're leading experts in AI healthcare data, along with Stanford. One example is we're looking at AI to identify squamous cell carcinoma years before a clinician could. We're looking at organoids that we can run therapeutic testing on drugs before putting patients and families through those early stage clinical trials. So AI is here in healthcare.
The response from the rare disease community, this is something you all announced a week ago. What have you gotten back from people?
It's been overwhelming, and it leaves us filled with profound duty. These are deserving families. These are families that have fought alone. There's 10,000 rare diseases.
Yeah, my guess is you're starting with 7 or 8 rare diseases. My guess is you had people knocking down your door last week.
We had people knocking down our door.
Let us in.
Yeah, we had people knocking down our door, and part of building this model is to go from 7 to 25 to 50 to then hundreds. And the principle of that, the starting point, is making a data platform that everybody can use. It's an inefficient market of every rare disease investing to build data sets, investing in their own gene therapies, for example. We believe that part of the power with Rare Ventures is we can do this together and find a market efficiency.
Basically show people what you've learned, what worked with EB, and hopefully take that model and export it.
Yeah, and the compounding interest of doing that together as rare diseases actually makes downstream this more viable for industry and the market.
Michael, thank you for coming in today. It's really a pleasure talking to you and seeing this, and we hope to see some great results, so thank you.
Thank you, Andrew. Thank you, Becky. And Becky, I wanted to thank you. Your courage and your passion and your advocacy and your leadership means the world of the rare disease community. You are a hero to us. Thank you.
Thank you, Michael. We appreciate what you're doing, and we really hope that this brings some results. Folks, if you have more questions on this, if you want a deeper dive on everything that's happening in rare disease and that space, you can visit cnbc.com/cures. When you're there, you can join the thousands of people receiving the CNBC Cures newsletter. Just scan the QR code on your screen right now to sign up.
Okay, coming up, takeaways from day one of a major trial centered on Meta, Facebook, and Instagram. States charging that tech giant with fostering addictive behavior in children and teens. We're going to get into what we learned after the break. Don't go anywhere. Squawk Box coming right back after this.
Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange. Streaming on CNBC Plus.
Don't miss the highlights of the PGA Tour. Catch the action from the PGA. The biggest hits and misses. Join us on the green. Saturday and Sunday afternoons, only on CNBC.
Listen to CNBC on the move with the CNBC app.
A lot of strong numbers this morning.
Breaking news.
We got a big IPO, something for the private markets. Could it be a rate cut scenario?
Real-time market updates.
A check now on how Europe is set to open the trading day ahead.
Your favorite programs live 24 hours a day.
Welcome to Squawk Box Europe.
Welcome to the China Connection, Squawk Box Asia.
Listen wherever in the world you are. Download the CNBC app now.
I grew up a news junkie. It's really the only thing I ever wanted to do. I like holding people to account. You can't just show up and say, I like XYZ stock, because I'm going to ask you why. And then if you say you sold it, I'm going to say, well, why'd you sell? Get away from talking your book and tell me the real story. Ambition is a fuel and a fire. They call me the judge for a reason. I'm supposed to make people squirm as long as I get the goods at the end of the day. We're talking about people's money. I feel the weight of that, the responsibility, and I love it.
Never miss a moment.
We think there is a huge opportunity for AI in the UK and Europe because it is that middle ground between the United States and China.
Andy Burnham has committed himself to the Labour manifesto, so I don't think that that's going to change in the immediate future. I think our historic destiny is to be back in the European Union.
The world is taking you at your word, sir. What happens next?
We're never going to see Iran have a nuclear weapon.
Squawk, a potentially pivotal trial taking place against Meta just kicked off in California. A group of state attorney generals arguing the company's platforms are designed intentionally, they say, to hook kids. Joining us right now to talk about the legal fight, Vanderbilt Law School professor Rebecca Allensworth is here. Good morning to you. Let's lay out what's at stake, but also lay out your perspective on, in terms of, from a legal perspective, if you were going to handicap this case, Rebecca.
Yeah, so there's a ton of money at stake. There's also kind of the business model of social media, Meta and also other companies is also at stake. Handicapping it, it's really hard to say. There's a lot going on here. I think the arguments made yesterday by both sides each had some merit. I do think that the previous trials that have gone against Meta for similar issues have not gone Meta's way. And so I would say if I had to handicap it, I would say that Meta's likely to lose this trial, but it's not impossible that they could win.
And you say they could lose because what's the rationale?
Well, there's two ways. There's two ways to win, and there's only one way to lose. But the lose is sort of more likely. So they have had really struggled in their last couple trials to say that, look, social media addiction is not a thing, and we did enough to the extent that we were aware that there was, young people on the platform, young people struggling on the platform. We really did enough to protect them because there was a lot of evidence that they designed their product to be, to maximize engagement, as they phrase it, right, is like the same thing as sort of addiction. And that was sort of what was so persuasive. And they also don't do a lot to protect minors in the sense that they don't check IDs, they don't verify the identity of the people who are on the platform, and they're very clear. They know there's young people on the platform. So I think these are the reasons why they're likely to lose this trial.
If they lose the trial, I imagine there will be a long appeals process.
That's right. So when I said there's two ways to win, you could win the trial, which I think is unlikely but possible. But then you can win on appeal. Now, on appeal, there's a lot of very interesting legal questions that go beyond the facts here about, whether Section 230 applies, First Amendment defenses, and we can expect those to very much be in play in the appeals process. And as you said, it could be lengthy. It could be up to a year or more.
Could be a year or more. And then the question becomes, is this the kind of thing that could actually get to the Supreme Court or no?
Yeah, I think it's possible. I think Section 230, which is the statute that sort of shields media companies from the content that is put on. In other words, if somebody posts something damaging to a child, that is not Meta's responsibility directly. That's what 230 does. The meaning of 230 is extremely contentious. It's very important. I could see the Supreme Court being very interested in that. The Supreme Court has also shown a lot of interest in First Amendment issues, so I could see that being something they might pick up. As it stands,
do you actually think the Supreme Court could actually try to rule on 230 itself?
Well, I'm not sure about that because there's a lot of controversy about what's going to happen to 230. They're constantly trying to change it, Congress is. And so I think that, the Supreme Court may want to rule on it, or they may want to just wait to see what Congress does with it, because everyone seems to agree that it's not quite working the way it's supposed to work. So having a ruling on it may not be that useful if we're going to just change it legislatively.
Okay, so then let's maybe we'll talk business for a moment. Is there any argument to be made, and is there a possibility that somehow this case gets settled, gets negotiated away?
Well,
and what that could even look like?
I think Meta would really like that, right? So I think Meta would really, and the other social media companies for which this is kind of a bellwether, would really like to have this settled and move on. And certainly they could afford to spend a lot of money on that settlement. The problem is it would have to sort of be global. It would have to go to all the possible children who, and young adults maybe, who as children suffered consequences from this addiction. And they're not all in this suit. So you couldn't really settle this suit and also know that you wouldn't be facing more suits like this down the line. So I think settlement is unlikely in this case.
In terms of total cost, there's the economic cost, but then if they have to, I mean, do you see them fundamentally being forced to change their policies? Would you argue that actually, I mean, I think they would argue they've even changed some of their policies in advance of all of this, because then that gets at the fundamental business model underneath it.
That's right. So, you know, like I said, social media addiction and engagement are two words for the same thing. And we know that engagement is how they monetize their product. So it's hard to imagine a real solution to this, you know, problem of compulsive use without also really hitting Meta's bottom line. So I do think this is kind of, I don't want to use the word existential, but it really could dramatically change the way that social media is monetized and make it a whole lot less profitable, at least to use these infinite scroll and, you know, these things that we know kind of demand our attention.
Are you surprised? I mean, we can look at Meta stock and you could argue it's down, but I don't believe it's down for this reason today. Have you been surprised just about the way Wall Street has thought about this?
I mean, I guess I'm not somebody who thinks that Wall Street is intelligent in the way that, you know, we would use it to predict the outcomes of cases, or, you know, it's going to be a very short-term perspective on what's happening at these companies. So no, I would not say that I'm surprised by this. You know, this is a real long game. This is like, what does the future of social media look like 3, 4, 5 years down the line? So no, it doesn't really particularly surprise me. I think Meta's in a whole lot of trouble.
Rebecca, want to thank you. Appreciate it.
Of course, thanks.
I'm just looking right now to see if anybody is trading on Kalshi about the outcome of this case.
What'd you find?
I do not see anything. I'm looking right now to see if there's anybody. You'd think that would be a, but maybe nobody's looking at that. Interesting. Well, we'll see. It is a little before now, 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Becky Quick. Joe's out today. Among today's top stories, President Trump pausing 50% tariffs on some Canadian goods. This is going to be for 3 days on some products from Canada. The tariffs were set to kick in at midnight last night. That announcement following a meeting between the president and Canadian Prime Minister Mark Carney. Meantime, OpenAI sales reportedly growing 18% between the first and the second quarter to $6.7 billion. The Wall Street Journal reporting that OpenAI's operating margin fell further into the red. A report last week said that Anthropic's revenue jumped 14-fold to $11.5 billion in the second quarter. That company reported positive adjusted operating income. So, of course, there's going to be a big question just about how well either of these companies are doing and who's pulling ahead. Anthropic preparing to give CEO Dario Amodei and several other co-founders potentially super voting shares ahead of the company's expected IPO. That's according to a new report from The Information. It says the move is meant to help protect that group from outside shareholder pressure. It would give 7 different people special shares. And we were talking earlier just about the implications of trying to keep a group of 7 together versus a group of 1, 2, or 3, which has historically been, or a family, the way this
gets tougher and tougher over time. Yeah. All right, let's check the futures this morning. We have not seen a lot of movement, but right now the Dow futures are indicated up by close to 10 points. S&P futures are basically flat, and the Nasdaq is indicated off by about 25 points. Yesterday, all 3 of the major averages were down, and the S&P 500 and the Nasdaq were off by their worst levels this month. If you watch what's been happening with the Treasury market, you'll see right now that yields are slightly lower this morning. The 10-year is back below 470. It's at 469. The 2-year is at 416, and then the 30-year is at 528. Oil prices this morning are higher once again, up by about 1%, with WTI sitting right at $85.82. Brent is sitting at 91.88. Let's get over to Pippa Stevens. She's got a look at this morning's pre-market movers. Pippa, good morning.
Good morning, Becky. So let's start here with Lowe's because those shares are down some 2.5% this morning after the company posted Q2 results that missed revenue estimates and lowered its full year guidance. Now, higher mortgage rates and limited housing turnover has weighed on demand for household projects and renovations, and Lowe's expects no growth in annual comparable sales as consumers remain cautious about spending. Moving over to TJX, those shares are up marginally here ahead of the company's earnings report later this morning. Amid a busy week of retail earnings, shares are up marginally so far on the year, just slightly negative here year to date. Now, TJX's Q2 forecast included an incremental negative impact from tariff costs on merchandise it had committed to when additional tariffs were announced, but it continues to see demand for its off-price goods. And finally, shares of La-Z-Boy are tumbling 18% this morning after the company swung to a loss in Q1 and issued a Q2 sales forecast that missed Wall Street estimates. Q1 delivered sales growth in the retail segment was offset by a decline in wholesale delivered sales. La-Z-Boy's CEO says in the earnings call that consumer behavior is choppy, especially because of housing trends and overall consumer sentiment. The stock down 10% on the year. Becky?
All right, Pippa, thank you very much. All right, let's take a look at shares of Merck and Moderna. Both those companies' stocks are soaring at this point. Merck is up by about 5.8%. Moderna shares are up by 70% this morning. It's a gain of more than $43 to $107.03. This comes on positive top-line results from a large phase 3 trial of the two companies' melanoma treatment. It combines individualized mRNA-based therapy with Merck's Keytruda for patients who have had melanoma surgically removed. That trial did meet both its primary and secondary endpoints of survival without recurrence of the cancer, as well as survival without the cancer spreading to other parts of the body. Again, you're talking about some major moves. For Merck, that's a move of about $8.25. For Moderna, it is now up $50 on this news, a gain of about 81%.
Progressives scoring a surprising victory in Florida's U.S. Senate primary last night. State lawmaker Angie Nixon, a member of the Democratic Socialists of America, beating retired Army Lieutenant Colonel Alex Vindman, despite Vindman's 16-to-1 fundraising advantage. Now, Nixon will now face Senator Ashley Moody in a race to fill the last 2 years of Secretary of State Marco Rubio's former term. Now, meanwhile, Florida's GOP Congressman Byron Donalds won his party's nomination to be the Sunshine State's next governor. President Trump had endorsed Donalds. Donalds will face David Jolly on the Democratic side. Jolly is a former Republican who became an independent and then a Democrat. Also in Florida, Republican Representative Corey Mills losing his bid for a 3rd term to former TV reporter Ryan Elijah. Mills has faced a series of scandals and was initially endorsed by President Trump. And, of course, we were talking earlier about just the implications of the DSA winning and whether Republicans say that's great because it may create more turnout on one side, or the Mick Mulvaney view of the world that this is a big
bond just reached its highest level since 2007. And to a lot of people, this means everything. Inflation is coming back. Investors no longer trust the Federal Reserve. Foreign buyers are abandoning America. Government debt has finally overwhelmed the bond market. After sleeping for half a century, the legendary bond vigilantes have awakened to punish Washington. There's just one problem. The 30-year bond is not actually doing what everyone says it is. Yes, its yield reached 5.31%, but almost 3 years ago, in October 2023, the same yield moved above 5% for the first time since 2007, and everyone told the same story then. Since that supposedly historic moment, the 30-year yield has risen only about 20 basis points. 20 basis points in nearly 3 years is not a bond market revolution. It is barely a rounding error in an otherwise volatile global marketplace. More importantly, it's what the rest of the Treasury curve is doing that explains it all. While everyone spins another 30 on their dial, the long bond is long something, all right. So today we're following 2 stories. The one is the dramatic narrative that's been attached to the long bond and the 30-year yield. The other is what's actually happening on the curve specifically. And once you see what's actually happening, you'll see how the narrative, there's so much more than meets the eye, and how the highest yield since 2007 just doesn't mean what everyone says it means. The mainstream story begins with a big, intimidating number. The 30-year Treasury yield climbed to approximately 5.31% yesterday, its highest level since June 2007. The 10-year yield moved toward 4.75-ish, its highest in 19 months. And this wasn't isolated to the United States. Long-term yields rose in Europe and Japan. Germany sold 30-year debt at its highest yield in 15 years. Japanese government bonds, they came under pressure. Corporate debt supply was heavy. Foreign treasury holdings declined in June, including reported reductions by China, Japan, and the United Kingdom, which everyone gets those wrong. Add oil above $90 per barrel overseas, renewed geopolitical tensions, stubborn inflation numbers, and enormous, gigantic government deficits, and the conclusion, at first, seems obvious. Investors are demanding higher returns because lending to governments has become more dangerous. Inflation, treasury rejection, you name it. The 30-year yield in this version of events is the canary in the coal mine. Short-term rates may not see the danger yet, but the long bond, that's the one to watch. That's the one that does see it. And if 5.31% is the beginning, some strategists say 5.6 or even 5.7 could come next. And that sounds convincing until we check the last time this exact story appeared. In late October 2023, the 30-year long bond went above 5% for the first time since 2007. Yes, not a 19-year high, but a 17-year high, and the world went batshit crazy over it, especially considering the time. The explanations were identical to what we're hearing now. Excessive treasury supply, uncontrolled deficits, persistent 1970-style inflation, disappearing foreign demand, a rising term premium, which isn't a real thing, by the way, and bond vigilantes returning from the dead. The long bond was supposedly warning that the low-rate era had ended permanently. 5% was merely the first stop on a much larger move. Surely the 30s would be 6, 7, 8% in a couple years, if not double digits. Then the yield fell, and fell sharply. By late December 2023, the 30-year yield had dropped by more than a full percentage point. The permanent buyer strike disappeared almost as quickly as it had been announced. Yields later moved back up, then down again, and now up to another marginal high. But nearly 3 years after October 2023, in the panic then, the 30-year yield is only about 20 basis points above that earlier peak. Think about that. 20 basis points in 3 years is hardly the panic they were telling you it was back then. That's your first major clue. If investors have been steadily demanding radically greater compensation for inflation, deficits, or fiscal collapse, the long bond should have moved substantially higher over those 3 years. Instead, it really just went sideways in a trading range. The new high is technically real, but economically underwhelming. It's not evidence of a new regime merely because a headline can attach the phrase highest since 2007 to it. That's marketing, not analysis. And for many, it's wishful thinking rather than rational conclusions. A market can make a new high without telling a new story. From October 9th through 12th, I'm bringing together a group of roughly 40 serious investors and financial professionals, along with some special guests and friends like Hugh Hendry and Mike Green, George Gammon, Brent Johnson, and a couple of other ones, where we're going to spend 4 days asking the questions that truly matter. What happens next? Where are the biggest risks being mispriced? Where are the opportunities? What should change our minds? And how should we think about positioning around it? This is not a conference built around speeches. It's a small room built around discussion, some disagreement, and actionable advice. So if you manage some meaningful capital or you're seriously interested in all of these questions and finding answers to them in a very small, intimate setting, apply below. And there is another psychological trick that goes along with that highest since 2007. Highest in 19 years doesn't necessarily mean exceptionally high. But those are not the same statement. The comparison works only because interest rates spent most of the post-2008 period near historically unusual lows. A rate can be high relative to the last 19 years while remaining ordinary or even low across a longer period. Still, the narrative treats 5% like some devastating threshold. Every move above it becomes a referendum on America's creditworthiness, or the oil-soaked return of the 1970s. If yields can reach levels not seen since 2007, the argument goes, perhaps we're heading back toward the supposedly punishing interest rate environment that existed before the not financial crisis, except rates in 2007 weren't particularly high to begin with. A 5% long-term treasury yield sounds big, and it looks big, only if your chart begins, say, in December 2008. During much of the 1990s, the 30-year treasury yielded between roughly 6% and 8%. In the 1980s, long-term yields spent years in double digits. And think about the economic growth that happened during those decades. Rates were significantly higher, and in the 90s anyway, federal budgets were substantially better. Better growth, less fiscal insanity, higher rates. Even in the early 2000s, a yield around 5% didn't signal some fiscal emergency. By 2007, long-term rates were already low compared with those previous decades. So when someone says the 30-year yield is its highest since 2007, what they're really saying is that it's returned to a level that was considered fairly low before an extraordinary era of disinflation, financial crises, and weak growth. The real trick here is the mainstream argument quietly assumes that today's new high must be the first step toward much higher highs. And that assumption, as we just went over, already failed in 2023. And it has repeatedly failed over the past 20 years. And here's the thing, the rest of the yield curve is not currently validating that narrative. Now, the second explanation the mainstream comes up with is inflation, because it's always inflation, especially where it comes to oil. People do not understand what the 1970s great inflation was all about. They misidentify that with the oil shock. But the truth is, the great inflation was already 8 years old by the time we got to the OPEC oil embargo in October 1973. Nixon had his wage and price controls in 1971 before the oil embargo. The inflation existed before the oil. So if you don't have the inflation, oil prices do something very different to an economy. Actual inflation, the sustained kind that everyone thinks they see around every corner, has little, if anything, to do with petroleum. So oil has climbed back above $90 overseas and it's back around $85 domestically. Yes, geopolitical tensions threaten energy supplies even further. Some Fed officials, of course, are responding to it, arguing that they need to raise rates. And under this interpretation, the long bond is losing confidence in the Fed's ability to control inflation, which the Fed doesn't even have that ability to begin with. Perhaps investors believe policymakers are going to tolerate higher inflation. Maybe the elimination of clear forward guidance under the new Fed chair, Kevin Warsh, has made future policy less predictable, and therefore that uncertainty gets priced into the long bond. Or perhaps markets expect the Fed is going to just keep short-term rates elevated for years, the higher for longer argument that dominated late 2023. The 30-year yield under those circumstances would therefore represent a warning. Inflation has become structurally embedded. The Fed has lost credibility that it didn't have, and investors need protection before locking up money for 3 decades. But if that were true, we would see it in more than one isolated maturity, and it's not even showing up in that maturity. We don't see it. And as I just said, the 30-year at 5% is hardly some major shift. So look at the 2-year Treasury just as a start. You really should look at all the different maturities and especially all the different spreads, but even more than that, how these spreads change through time and how these spreads compare with other times. So the 2-year Treasury, highly sensitive to the expected path of Federal Reserve policy, while the 30-year has reached a new high, the 2 years going back lower again. That's not what a clean economy-wide inflation repricing normally looks like. This is instead bull steepening, the kind of curve reshaping that's the opposite from what everyone is shouting about. If investors suddenly expected persistent inflation and substantially more Fed rate hikes, or what they call tightening, pressure should appear near the front end of the curve, not just specifically the far out back end. The 2 year should be rising aggressively as the market prices a higher path for overnight rates. Instead, it is fluctuating in the same way that we've seen several times since the October 2023 bond rally began. Traders have backed away from some near-term rate hike bets as the economic data has softened. Retail sales last week weakened. Labor market indicators, they turned negative again, and some of them deeply negative. And the market remains uncertain about whether the Fed's going to raise rates at its next policy meetings because policymakers have no clear justification for doing so. Just look at the recent CPIs. This produces steepening. Shorter-term yields decline relative to longer-term yields. More specifically, it is consistent with the ongoing process of bull steepening. Yes, bull steepening, where the front end rallies because the market anticipates weaker conditions and eventually a central bank that gets into the Pringles can and out of the way at the front. The long end can lag or even move modestly higher for a time, especially when the Fed remains hesitant and policy uncertainty interferes with the normalization process. Normalization process. Bull steepening doesn't require every yield to fall every day. It means the decline is led by the short end, causing the curve to regain a more normal upward slope. Normalization, not inflation or vigilantism. That's why the 30s have only gained 20 basis points since the last time we had this discussion 3 years ago. Curve normalization is very different from a wholesale Treasury revolt. And that brings us to the most theatrical explanation, bond vigilantism. We are begging to have some bond vigilantism to get control of the federal government. It's understandable where this comes from. The federal government is absolutely out of control. But thinking the Treasury market is going to do something to stop it is wishful thinking, not rational analysis. The end of fiscal insanity has got to come from the ballot box, not from interest rates. The idea is that investors have finally had enough of government borrowing, if only that were true. Federal debt, enormous. No one can argue that. Deficits remain huge and they aren't going to change anytime soon. Treasury's got to issue vast quantities of securities while foreign participation seems like it's weakening. At least from the government side, nobody pays attention to the private side, but that's a different story. Therefore, buyers supposedly demand higher yields to discipline Washington. And there is that kernel of truth there. The fiscal situation is terrible. The federal government spends and borrows way too much, regardless of which political party's in power. They both do it. They're both terrible. But identifying a genuine fiscal problem is not the same as correctly interpreting the bond market. If bond vigilantism were driving the long end, we should see the market demanding a rapidly expanding premium for owning 30-year bonds instead of shorter-term securities. The premium just isn't there. Again, this idea is understandable, but you have to understand the market isn't going to solve the debt problem for us. We're led to believe that out-of-control borrowing is a problem for the Treasury market, but it's not. Just look back to the 1930s and 1940s as an example. The mistake is assuming the government's gigantic borrowing has to lead to the rejection of that borrowing by a marketplace that has very different priorities, especially in intermediate-term periods. This is why you have to look at the entire yield curve, not just focus on a single maturity and make some extrapolations and grandiose assumptions from there. Curve shapes, changes in curve shapes through time, curve shape comparisons over time. That's where you need to look for analysis. Just start with the spread between the 10-year and 30-year Treasury. If investors were uniquely rejecting a long bond because 30 years of inflation, fiscal risk, and debt supply had suddenly become intolerable, the 30-year yield should separate sharply from the 10-year. The 10s-30 spread should widen in a persistent, if not extraordinary way. But it hasn't. The 10-year, 30-year have broadly moved together, leaving the 10s-30 spread relatively flat. The 30-year is not breaking away as some special instrument of fiscal protest, and then compare the 30-year with short-term rates. Mainstream reports repeatedly say investors are demanding additional compensation to hold longer-dated government debt. The phrase appears almost automatically whenever the 30-year yield rises. But additional compared with what? If the market were demanding dramatically more compensation for lending over 30 years, the spread between the 30-year yield and short-term yield should be historically wide, or at least getting historically wide real quick. Instead, the spread remains historically low. Now, that doesn't mean long-term risk is zero. It means the market is not pricing anything remotely resembling the huge increase in long-duration compensation that's described in all the headlines. You can't infer an exploding term premium from the absolute level of one yield. A long-term yield reflects expected short-term rates, growth, inflation, and various other factors. You've got to examine its relationship with the rest of the curve. And those relationships don't show anything like that panic. So then the next argument focuses on supposed mechanics, but then gets those mechanics entirely backwards. We're talking about, of course, foreign governments selling their U.S. treasuries. Sure, some foreign holdings have declined, at least in the official sector. Several long-dated auctions attracted less enthusiastic bidding. The last 30-year long bond sale cleared its highest yield since 2001. Corporate borrowers are issuing large amounts of debt competing for investor capital, the hyperscalers. Meanwhile, higher yields in Germany and Japan make their domestic bonds more attractive, potentially reducing demand for treasuries, at least according to this view. And all these factors can affect prices, especially during thin August trading. When liquidity is lower, modest flows can produce exaggerated moves, and they're not really all that exaggerated. So perhaps you could say this seems to be the start of a treasury supply problem because the government keeps selling more debt, traditional buyers they appear to some to be purchasing less, so of course, yields have to rise until somebody steps in, and everybody thinks that's the Fed. But once again, this confuses a short-term catalyst with a durable macroeconomic signal. And then mechanically, like I said, everyone gets foreign treasury selling completely wrong. An auction yield is just the price that's needed to clear a specific auction at a specific moment in time, not some independent forecast of 30 years of fundamental factors. An auction can tail, meaning it clears at a slightly higher yield than expected. Dealers can take a larger share, foreign bidders can reduce participation, and these details may generate volatility for a couple minutes, maybe hours, a few days, but they don't determine the lasting direction of the treasury market. We've seen this repeatedly. In 2009, enormous federal borrowing inspired warnings that the world could not absorb all the new debt. The predicted buyer's strike never arrived. In August 2011, the U.S. was downgraded by S&P, and the 30-year auction was described as disaster. In many ways, it was actually disaster. It wasn't just described that way. Yet, Treasury yields ultimately fell as economic and financial risks increased. In November 2023, another supposedly horrific long bond auction helped trigger the same warnings that we hear today. Within weeks, long-term yields had plunged. Why? Because macroeconomic fundamentals eventually overwhelmed individual auction commentary. Government debt can be fiscally destructive while remaining highly desirable as a liquid financial instrument. In a weakening economy, demand for safe liquid collateral can rise even while treasury supply increases. Those ideas are not contradictory. A bad fiscal outlook doesn't mechanically produce higher treasury yields. We wish it would, but it doesn't. Growth, inflation, monetary conditions, not talking about the Fed, bank balance sheets, collateral demand, global risk, those are the factors to watch. Supply can move a market in the short run, but it can't explain the market by itself. So what evidence do we need to see to make a long bond case more consistent with the mainstream narrative? Well, for one, it can't just be the long bond doing something that we've seen in recent history. To begin with, the rise in the rate would need to become persistent, not merely a 20 basis point extension of the 2023 high spaced out over 3 years. Second, the 30-year would need to separate meaningfully from the 10-year, producing a sustained widening of the 10s-30 spread, and doing so in the bear direction. Third, the premium over short-term rates would need to become historically large, demonstrating that investors truly are demanding exceptional compensation for duration, or at least to be making a compelling move in that direction, taking the rest of the curve with it. The entire curve would need to confirm the move. The middle and front end would need to see the inflation story and then price it just as much as the long end. A falling 2-year yield is difficult to reconcile with these claims of an imminent lasting shift toward that kind of regime. Again, we've seen this before out of the 2s as well as the 30s. And finally, weak auctions would need to leave a durable mark on the secondary market instead of generating headlines that disappear within weeks, if not days, when the fundamentals of economics regain control. Until those conditions appear, the simple explanation is nothing more than yield curve normalization, because that's exactly what's going on here. The curve was deeply distorted by the Federal Reserve and its policy several years ago. As expectations change, the short end moves lower and the curve attempts to regain its natural upward slope. Because the Fed remains hesitant and keeps front end artificially elevated, some of that steepening pressure can appear through sticky, yes, I'm using that term purposefully, or even temporarily rising long-term yields. That may look strange, but it's hardly unusual. We see this time and time again. It's certainly not evidence that the entire world has rejected U.S. government debt. If anything, foreign sales of treasuries, usually a sign of tight money, tight global eurodollar money that ends up with lower bond yields down the road. That's not a paradox. It is two forms of fundamentals reinforcing each other. So yes, the 30-year treasury yield has reached its highest level since 2007. That fact is accurate. The story attached to it just isn't. A 5% yield, first of all, is not historically extreme. The same panic appeared when the long bond crossed 5% in 2023. Nearly 3 years later, the yield is only about 20 basis points higher than it was then. Somehow, we're led to believe this time it's going to be different when all the evidence from all over the place says this time is the same as all the previous times when curves normalized. The 2-year yield is moving down. The 10s-30 spread has not broken out. The 30-year premium over short-term rates remains historically low. None of that confirms runaway inflation, collapsing Fed credibility, or an army of bond vigilantes suddenly ready to punish the crap out of the politicians in Washington, if only that were true. So could the 30-year yield move higher? Absolutely. But higher doesn't automatically mean historic. A new high doesn't automatically mean a new regime. One maturity does not overrule the message of the entire curve, let alone the message of the entire eurodollar system. The loudest number in the bond market is not always the most important one. And right now, the long bond isn't predicting the end of treasuries. It's revealing how curve normalization, something ordinary like that, has become an extraordinary story that, for understandable reasons, many people simply want to hear. Negative payrolls. Here we are again. Big revisions to previous months. A clear downturn in the labor market after a very short upturn in it. Where have we seen this before? Well, not just last year, but the year before, but also what I've been writing in our deep dive analysis. We got negative payrolls, but even more important, more dropouts in the labor force. The official unemployment rate falls, but the actual unemployment rate is exploding higher. And yes, this is a perfectly consistent overall picture of the labor market and the health of the economy. The Fed continues to talk about resilient labor market just like it did last year. A lot of similarities to go over here, a lot of data to get into, and all of it points toward the same thing. By the numbers for the month of June, just briefly, we'll get into the numbers here, and I'm going to do a little bit of a detour and commentary about the background of why we're looking at what we're looking. And then we'll come back to the numbers again and understand better about what's really taking place in the economy, therefore interest rates as well as markets, and then looking ahead beyond just where we are here in the early. The yield on the 30-year U.S. Treasury bond just reached.
Japan is in deep trouble with the currency, the yen. And I'm going to explain to you what's going on. I'm not going to sugarcoat the situation. And I'm going to tell you how this affects Americans, because it does, and it's a big problem. So I want to begin this conversation by asking you this question, because I think this is going to help explain the situation. My question is, what would you do in this situation? Let's say Bank of America is giving out loans, and they're charging an interest rate of 1% to take a loan from them. And then you find out that Chase Bank is paying an interest rate on a savings account for 3.75%. So in this type of scenario, what would you do? Listen, I mean, I don't know what you would do, but here's what I would do. I would borrow as much money as I can from Bank of America, and then I would just take that money and just stick into Chase Bank's savings accounts. So Bank of America, they're going to be charging me 1% interest, and then Chase Bank, well, they're going to be paying me 3.75% interest, and that would make the difference. And I'd do that all day long. I hope that makes sense. Now, what if I told you that you can borrow money from Japan at an interest rate of 1%? Then what would you do? I would borrow as much money as I can from Japan, and I'd stick that money into U.S. Treasuries and earn 3.75% up to a little bit more than 5%, and I'd make the difference. Or maybe I'll take some of that money and I'll put it into the stock market. I'll try to earn 8%, maybe 10%, maybe 12%. So that makes sense, right? This is called the yen carry trade. But here's the thing. If you get a loan in Japan, then what currency are they going to give you? They're going to give you yen, right? Well, you can't buy U.S. stocks with yen. You can't buy U.S. treasuries with yen. Try coming to America and trying to buy some real estates with yen. It's not going to work out. So what do you have to do? You have to sell that yen. When you get the loan in yen, you sell that yen, and then you convert it to U.S. dollars. And with those dollars, you can buy your U.S. stocks, your U.S. treasuries, real estate in the U.S., whatever you want. Okay, so I have another question for you. What's going to happen to the value of something if everybody's selling like crazy? Of course, the price of that item is going to go down. It's simply supply and demand, right? All right, so this yen carry trade has been going on for years. Institutions have been borrowing money from Japan at a very low interest rate. So they're taking those loans out in Japan, they're selling the yen, and they're buying dollars. And the value of the yen is weakening. I mean, just take a look at the value of the yen compared to the dollar over the course of the last 5 years. The yen is falling hard in value. Okay, now why is this a problem for Japan? And the answer is that, well, this is a problem for Japan because Japan is a resource-poor country. I mean, it's an island, for crying out loud. So I know people are going to roast me in the comments. So, okay, if you want to be technically correct, it's an archipelago. It's an island country made up of about 14,000 islands. But yeah, I mean, it's 4 or 5 main islands, mainland Japan, depending on who you ask. But most of the islands, I mean, honestly, they're just uninhabited rocks. Anyways, it's an island, poor in resources. And the problem is that Japan needs to import the majority of their energy, about 90%. So, I mean, it wasn't always like that. Japan used to have about 30% of electricity coming from nuclear, but after the Fukushima disaster in 2011, they closed down their nuclear plants. They restarted some, but right now their nuclear is less than 10% of their energy mix. And of course, you can't restart those overnight. Additionally, Japan imports approximately half their food, and Japan imports the majority of their raw materials used in industry. And listen, I just want to say that this importing problem for Japan, it's not like a recent development. This has been an ongoing issue for many years, many years. So I just want to say that Trump loves bringing up Pearl Harbor when talking about the Japanese. But do you know why Japan attacked Pearl Harbor? It's because Japan was running out of oil. Japan was importing 90% of their oil, and in 1941, the United States of America placed an oil embargo on Japan. They're running out of oil, and that's what triggered Pearl Harbor. And then we take a look at today, 2026. The United States of America has caused problems in the Strait of Hormuz, disrupted the oil supply, and the price of oil and energy have went up. And again, Japan is suffering the consequences. So I'm telling you, Japan needs to really need to fix this issue. Okay, so Japan's currency is weakening, right? Because people are borrowing yen from Japan, and they're dumping those yen in the market for US dollars. And why is this a problem? Because Japan is a resource-poor country, and they need to import a huge chunk of their energy, their food, and raw materials for industry. And if the currency is weakening, then it's going to take more yen to buy and import those goods. Essentially, everything's going to get much more expensive as their currency weakens and devalues. And then if it takes more yen to import food, energy, and industrial inputs, then the Japanese people are going to suffer from inflation, high-level inflation. In other words, the Japanese government has to do something. All right, so let's do something. Let's think of solutions. Let's brainstorm here. And what's option number 1? Okay, so first of all, why is this yen carry trade even happening? Why is this problem even occurring? It's because the Japan Central Bank has set an interest rate so low. We're talking about 1%. And the interest rate in the US, the Fed funds interest rate, is at 3.75%. So to solve this problem, why doesn't Japan just raise their interest rate so that people stop borrowing yen and selling yen, which weakens the currency? And you want to know why they can't do this? Like, they can't raise interest rates significantly. It's because Japan's debt to GDP is at 250%. The Japanese government is in a massive amount of debts. If they raise interest rates, then it's going to be like a self-inflicted wound, because then their government's interest expense is going to skyrocket. They can't afford that. But listen, you can make the argument that the majority of Japanese debt is owned by the Japanese people. In other words, there are a few foreign lenders. But still, the government, they're going to suffer with higher interest rates, not to mention that the economy would suffer as well. Okay, so raising the interest rate by a lot is off the table. They're expected to raise interest. I just want you to know that they're actually expected to raise interest rates by a small amount in the near future, but it's my opinion that's not going to solve the problem. Now, another option is that Japan can strengthen their own currency. They can strengthen the yen by going into the market and buying more yen, like buying a lot of yen. Because if you have a ton of buyers, buy, buying like crazy, then what's going to happen to the price of that thing? It's going to go up because just supply and demand, more buyers, more buying pressure. Okay, but where are they going to get that money from to do that? Enough money to make a difference and increase the value of the yen. All right, so you know how the US government is in debt for $39.9 trillion, basically $40 trillion. Well, the US government owes $1.1 trillion to Japan. Those IOUs are called US treasuries. They're treasury bills, treasury notes, treasury bonds. And you know what Japan can do? Japan can sell their US treasuries for dollars. And with those dollars, they can buy oil, they can buy imports, they can buy yen to strengthen their currency. They have $1.1 trillion in US treasuries. So I know that the image is small, but it says that in April, Japan had 1.2 trillion in treasuries. In May, they had 1.14 trillion. In June, they had 1.12 trillion. Again, the Japanese can sell US treasuries to solve their problem. But Scott Bessent, our United States Treasury, was like, whoa, like, you guys can't do that. You can't sell your treasuries, otherwise that's going to hurt us Americans. And Japan's like, what do you want us to do? Like, we need dollars to buy oil, to buy imports. We want to sell our US treasuries, we want to get dollars, and we want to make our situation better. But US Treasury Secretary Scott Bessent was like, Well, if you sell your US Treasuries in like a fire sale type of situation, then the price of US Treasuries is going to plummet, it's going to fall, and then interest rates in America will shoot up. Because US Treasuries, which are like IOUs, they have an inverse relationship. So if the price of the bonds goes down, then the interest rate is going to go up. So this chart, it's showing the interest rate on a 30-year US Treasury bond. I mean, the yield, the interest rate's going up because the price of the bonds have been going down. And Besant is like, listen, Japan, like we're already freaking out because the value of our US Treasury bonds is falling and interest rates are going up. And that's not good for the stock market. It's not good for the housing market, the labor market, or the economy. And we have the midterm elections is creeping up. It's like right around the corner. And then Japan is like, well, you better come up with a solution. Otherwise, we're going to have no choice but to sell the US Treasuries. And then Besant was like, look, Japan, I think I have a solution. Like, here's what we can do for you. We, the United States of America, we have some euros on hand, about $10 billion worth. So what we're going to do is we're going to sell those euros and we're going to buy your Japanese yen to strengthen your currency. And I have another clever solution. So instead of selling your US Treasuries, which would really hurt us in the US, why don't we start a pawn shop type of arrangement for you? Like, you need dollars, right? So here's the plan. Send your US Treasuries to the Federal Reserve, and the Federal Reserve will print up to $60 billion for you. So you're not going to be selling your US Treasuries to the Federal Reserve. No, the Federal Reserve, they're going to give you a loan, and you're going to get dollars. Just send your US Treasuries to the Federal Reserve as collateral. So this way, you're going to get the dollars that you need, and you also don't sell your Treasuries, which would cause interest rates to go higher in the US, which scares us to death. And then Japan's Ministry of Finance, they let everyone on social media know that they have this pawn shop arrangements available to them. They're basically trying to soothe the markets. Like, oh no, don't fire sale our yen because look, we got this arrangement with the Federal Reserve. It's called FEMA by the Federal Reserve, Foreign and International Monetary Authority's repo facility. And they got 710 likes or hearts. Now, here's some key takeaways that I want to share with you. The US debt to GDP is currently at 125%. And some people make the argument, like I hear this all the time. They're like, oh, that's not a problem, 125%, because Japan's debt to GDP is at 250%. So yeah, I know the US is a debt problem, but we can kick this can down the road for much, much longer. Look at Japan. Listen, don't use Japan as an example. Japan has a debt to GDP of 250%. And how are they doing right now? Not so good. They're looking for help. They're struggling. So terrible example, folks. And we, the US, we're trying to rescue Japan. When our currency has problems, there's not going to be anyone to rescue us. I mean, that's why I'm buying gold. Like the fiat currency, this whole fiat currency system, it's just a bunch of nonsense. It's a 55-year experiment that's going bad, and it's just going to get worse. I want you to realize that no fiat currency has ever worked in the history of human civilization. And we think that we're somehow, with the US dollar, going to be the exception. Like this level of hubris is just pure comedy to me. Now, here's the second takeaway. If Japan uses the Federal Reserve's lending facility, FEMA, then essentially it's the Federal Reserve just printing money out of thin air. So that's going to mean more inflation for us Americans. Woohoo. So not only are we printing more money for our US governments because they have a spending problem, but we're now also going to be printing money for other countries as well. Like, great. And third, I just want to point out that none of this fixes Japan's problems. Like, you can play these paper games all you want. It doesn't fix the problem of Japan being a resource-poor country that can't raise interest rates because they're trapped by the enormous amount of debt that they have. And look, all these interventions, they temporarily strengthen the yen, but now look at the yen. The value's going back down. The fourth thing that I want to point out is that this yen carry trade, it's not over. It's not going to be over, not for a long time. It may shrink in activity as the spread narrows, but it's not going to go away because Japan cannot raise their interest rate from 1% to 3.75% or anywhere even close to that. So in September, the expectation is that Japan's going to raise their interest rate from 1% to 1.25%. Like, wow, that's not going to do anything. What's that going to do besides nothing? Nothing. The fifth thing that I want to point out is that this gives the Federal Reserve less incentive to raise interest rates in September. So the US government is clearly scared about the situation, otherwise they wouldn't have intervened. So why would they make the situation worse by raising interest rates in September? And I'm going to speak very plainly and honestly here. That's probably why, in my opinion, the US government doctored the most recent inflation report and the jobs report to fit the narrative on why they don't need to raise interest rates in September. Now, there's a 65.1% chance that the Federal Reserve does not raise interest rates at the September meeting, and I called BS on that a long time ago. And the sixth takeaway is that this exposes the Achilles heel for the United States of America. I want you to know that this threat, the sale of US Treasuries that they have on their books, the countries, they can use this as leverage against the United States of America. Like, oh, we'll dump your US Treasuries. Like, that's their defense, or that's their way of defending themselves. If they don't want to be pushed around by the US, if they have US Treasuries. And you have to realize that if the bond market has problems, then the stock market's going to have problems. And if the stock market has problems, then what's going to happen? The retirees are going to get screwed over. The US economy is going to suffer as well. And if the stock market goes down, then we're going to have a recession. And if we have a recession, then the government's going to collect less tax revenue, and then the debt to GDP in the US is going to explode higher, which is a bad thing. And then the only solution is going to be hyperinflation. And of course, that's not a real solution. So we're going to get a financial resets, and then it's going to be chaos. So you see where this is going? Like, do you see why we intervened? It's self-preservation. It's not about helping Japan. It's not about helping Asia. It's because the US government is freaking out about their debt problem and the consequences. And the go-to solution, of course, it's always inflation. Just kick the can down the road and print more money. And I just want to say that if you enjoy this content, then you should come join our investing community on Patreon. So we are beating the S&P 500. We crushed it last year. We make our decisions based on the US economy, US politics, geopolitics, of course, company review and analysis, but also common sense, not the media narrative. Because we know the government's playbook and what's happening with this whole financial system, it's obvious. It's just so straightforward. All right, so I'm going to leave a link for you down below. Thank you so much, and I wish you a very nice day. Take care.
Welcome to China in Focus. I'm Tiffany Meyer. Our top story, new details about a Chinese spy honey trap. Newly declassified FBI files reveal more about the relationship between former California Congressman Eric Swalwell and Chinese spy Feng Feng. 30 U.S. academic institutions' possible ties with foreign entities under the Pentagon scrutiny, especially those with China and Russia.
There is no such thing as a truly private company in China.
The technology behind a Chinese robotics giant, researchers and a former U.S. defense official accuse the company of using innovations funded by the U.S. military. China is showcasing the future of humanoid robots, but can the industry actually turn a profit? We take a closer look at what's at stake for these high-tech machines. And the Navy is taking a major step to strengthen America's long-range firepower. A new deal could push Tomahawk production above 1,000 missiles a year. Nearly declassified FBI files detail how the Chinese Communist Party is influencing U.S. politics, especially through one particular method, cultivating relationships before a politician gains an important position and waiting until he becomes influential. When this is done on a large scale, it will eventually pay off. The FBI files focus on the relationship between former California Congressman Eric Swalwell and Chinese spy Feng Feng. The FBI documents show Swalwell admitting to agents that he had a sexual relationship with Feng before he became a congressman in 2013, but Swalwell denies giving her classified information in exchange. The files say Feng later used her influence to get interns hired to work on Swalwell's campaign and in his office. She also offered to reimburse Swalwell's campaign donors, a move that violates the law. The FBI found out that Feng was connected to Beijing's intelligence service, and her connections in Democratic Party circles in California were extensive. There were also reports that Feng had sexual relationships with at least 2 Midwestern mayors whose identities haven't been made public. A Trump administration official says Chinese spies may have infiltrated other federal and state offices through planted interns. Swalwell became a congressman in 2013. He resigned earlier this year amid several allegations of sexual assault. The Pentagon has ordered 30 academic institutions to audit their ties with foreign entities. The institutions may have ties with Chinese and Russian entities. NTD's David Lamb reports.
The Pentagon has ordered 30 academic institutions in the U.S. to immediately review their collaborations with foreign entities of concern. The institutions were not publicly disclosed. The Department of War saying on Monday it notified the institutions. They risk losing future federal research funding if they don't abide. The Undersecretary of War says the Department of War has zero tolerance for academic partnerships that compromise our national security. This comes as lawmakers increasingly point out deceptive practices carried out by communist regimes targeting Americans.
The CCP's 2017 National Security Law makes clear there is no such thing as a truly private company in China. Scientific discoveries, commercial technologies, and academic partnerships are expected to serve the priorities of the CCP.
The audits would target university relationships with the 130 problematic foreign entities on the Pentagon's list, mainly entities from China, Russia, Iran, and rebranded Confucius Institutes.
Basically, that say we shouldn't be partnering with these institutions that are affiliated with the Chinese military or have sanctions or human rights violations. And there's these lists available. And unfortunately, many of our research, public dollars have gone to fund initiatives joining with people on those entity lists.
The Department of War says it's working with partners in Congress. The institutions must report back to the Pentagon by August 31st. David Lamb, NTD News.
A Chinese robotics giant is facing new scrutiny over the technology behind its machines. Researchers and a former U.S. defense official say the company based designs on innovations funded by the U.S. military. Here's a closer look.
In the race to mass-produce robot dogs, China is beating the United States. Philadelphia-based Ghost Robotics developed its Vision 60 robots from Army-funded academic research in quadruped movement. The company wasn't alone. China's Unitree Robotics, among the world's biggest producers of humanoid and canine robots, based designs for its most successful four-legged machines on the same U.S. military-funded breakthroughs. Researchers involved in the projects told Reuters.
This is technology that at its core was developed at U.S. universities, funded by U.S. taxpayer dollars.
Gavin Keneally is the CEO of Ghost Robotics, which has supplied the U.S. military with its Vision 60s for surveillance and search operations.
There were papers published, and then these papers were very closely studied by Chinese companies like Unitree, and these principles were put to work and then scaled in an exceptional way using amazing manufacturing and supply chain technology, to where now you see companies like Unitree and other companies in China are shipping way more legged robots than American companies are.
Unitree did nothing underhanded in using the research, which was openly published to stimulate progress, a common practice. But it helped propel the company to global market dominance. And the company's imminent Shanghai stock market debut has drawn frenzied demand. Unitree did not respond to requests for comment. It is said in public statements that its products are intended for civilian use. And in 2022, the firm, alongside U.S. companies, pledged not to weaponize robots. But another company's robotic wolves were displayed at a military parade in Beijing last year. And Chinese state television has shown an armed version of a Unitree robot alongside Chinese troops. Publishing U.S.-funded research presents a broader issue for American firms competing with Chinese manufacturing, which has developed at lightning pace over the past decade in industries critical to national security, backed by subsidies and a tolerance for heavy losses. Here's Hugh Grant Chapman, a fellow at the Center for Strategic and International Studies, or CSIS.
I think the biggest factor in China's advantage for developing its robotics industry is its massive industrial base, its vast ecosystem of manufacturing, factories, and things that provide both kind of demand side support for its robotics industry, as well as cheap access to all the components it needs to manufacture those. When I look at where the U.S. has fallen behind, I see that loss and hollowing out of the manufacturing sector as being a really big driver of why the kind of corresponding national security applications have fallen behind as well.
The only way to escape China's chokehold on the robotics supply chain is to work with international partners, says Keneally.
There's no way we're going to do this completely on our own as the U.S. We need to work closely with our allies. In particular, at Ghost, we work very closely with companies in Korea and Taiwan and Japan, where they have some of this manufacturing and supply chain expertise. So there's absolutely no path forward without them.
The U.S. Federal Communications Commission says it's preparing the country to, quote, deliver on President Trump's vision to lead the world on the next generation of technologies. Chinese humanoid robots face financial challenges. More than 300 companies are heading to Beijing this week to show off their latest humanoid robots. But it's raising a big question. Will these machines actually turn a profit? Here's more.
The World Robot Conference runs Wednesday through Sunday with roughly 2,000 exhibits and more than 150 new products expected. Investors are pouring money into the industry, but profits have yet to be proven. Many of these humanoid robots cost up to $70,000 each, according to Berlin-based think tank Merix. One Chinese brokerage estimates a robot would need 2 years to pay for itself. And that gap is raising concerns about whether the industry can support hundreds of competing companies. Earlier this year, several major robotics firms have reported significant losses while spending heavily on research and development. UBTech, for example, saw its humanoid robot revenue jump more than 2,200% last year, but despite that growth, the company still reported a loss of roughly $110 million. Analysts say companies that cannot prove their robots create real value for customers could eventually be pushed out. Robotics analyst Georg Stieler estimates more than half of humanoid robots produced this year could end up collecting training data instead of doing real work. So while the demonstrations may look impressive, the real test is whether these robots can eventually turn a profit.
China-made vehicles are largely absent from the U.S. market due to tariffs and restrictions. However, Waymo, a company that develops self-driving car technology, has imported some vehicles made in China despite tariffs exceeding 100%. NTD's Sean Marshall has the details on why these vehicles are so sought after.
Chinese vehicles have been effectively blocked from U.S. markets with tariffs at 127%. But that hasn't stopped Alphabet, Google's parent company, from importing Zeekr-based Ojai robotaxis into the U.S. for its Waymo fleet.
I think that's kind of the funny thing is that
while things are so cheap to be developed and built in China, producing somewhere else like in the US, it could cost more than 100% to build those cars here, even something equivalent. It's just more difficult. We have more laws with things like OSHA and things like that. We have to pay minimum wage. And in China, they can bypass a lot of these laws and they can use all sorts of different methods to make things as cheaply as possible, plus the fact that it's backed by the Chinese government, which again reduces the cost for them to produce it and also for people outside of the U.S. to buy it.
Senator Bernie Moreno of Ohio has been fighting against Chinese imports over security and supply chain issues. He says, I think if you substituted the word China with Iran today, you'd say, that's nuts. Of course, we don't want any of our auto supply chain to come out of Iran. That would be insane. Or out of North Korea or Russia. Sean Marshall, NTD News.
The U.S. Navy is spending nearly $23 billion to increase production of one of its key long-range strike weapons. A new contract with Raytheon aims to push Tomahawk production above 1,000 missiles a year. The 7-year agreement with Raytheon is worth $22.9 billion. The production is expected to rise from roughly 60 missiles a year to more than 1,000 annually. Raytheon says it has already delivered 3 times more Tomahawks in the first half of this year than during the same period last year. Hung Kao, acting secretary of the U.S. Navy, says, quote, guaranteeing our naval and joint forces have the lethal firepower they need to deter aggression and protect the homeland is paramount. The Department of War says the investment aims to speed up weapons deliveries and strengthen the U.S. munitions industrial base. Coming up, China is seeing 0 investment deals from 10 of the world's biggest private capital firms this year, compared with a dozen deals just 5 years ago. So what's driving the sharp decline in foreign private investment? And U.S.-South Korea joint drills are underway, targeting North Korea and China. Why did President Trump order a reduction in military exercises, and will it impact relations with South Korea?
This latest sort of kerfuffle between President Trump and South Korea is not something that just came out of the blue.
More on that after the break here on China in Focus. Welcome back to China in Focus. I'm Tiffany Meyer. 10 of the world's largest private capital firms have made no new equity investments in China so far this year, at least not publicly. That's according to the Financial Times. Why are foreign investments in China declining? And what does new data say about where the Chinese economy is headed? NTD's Juliet Song has the story.
A drop in foreign investments flowing into China. In just 5 years, the number of investment deals that some of the world's biggest buyout firms made in China went from a dozen down to 0 this year. Milton Israti is the chief economist at Vested, a financial communications agency. He says the deals likely dissipated for 2 reasons.
The only growth in China in these days is in the government-sponsored high-tech electric vehicles area, and that means that the government is being much stricter about investment flows than it would have been if it was the production of toys or shoes or things like that. So the government is interfering. The government in Beijing is interfering much more with the investing, and of course the investors are very concerned about that because their main object is how to get out when the time comes.
Israti noted that the trend is also a reflection of the investment environment in China not doing well.
So we've had reports recently that even private investing in China, this is quite aside from the government, private investing from private firms on capital projects is way down. And this is an indication that there just aren't that many opportunities in China the way the economy is today.
There are investment opportunities in areas like AI, but this is where the Chinese regime appears conflicted. On one hand, Beijing has restricted foreign investments in sensitive industries, forcing Meta to unwind its $2 billion acquisition of Chinese-founded AI firm Manus. But on the other hand, Israti says China also desperately needs more money to build AI and other high-tech industries, so it is looking for funds.
Beijing has allowed the issue of more panda bonds in the Hong Kong market, which is a way of channeling foreign capital into China. They've also encouraged Chinese firms to go abroad to issue bonds and not so much equities, but bonds in order to get money.
It's a difficult situation for China to be in.
They both want the money and want the control. And of course, in China, they might be able to have their way both ways. But with foreigners, no, they're just not going to put the money in if they don't think they can get it out and they don't think they can control it. So they've dried up a source of funds that they really desperately need.
Zooming out, data released Monday shows China's GDP growth slowed to a 3.5-year low in the second quarter of this year. Of the engines driving the economy forward, only exports are going strong. The rest are struggling, especially the property market.
Property values have fallen 25%. That has really hit Chinese homeowners, and that's a large part of the population. Their household net worth has shrunk, and that means they're not consuming.
He noted China's economy is distorted, and over-reliance on exports for growth presents a risk. Following the tariff war, China has been shifting its exports away from the U.S. and selling more to other countries.
Those sources are not going to last forever. The Europeans are already putting on tariffs, and countries like Indonesia, Malaysia, and Vietnam have complained that their own development is being hamstrung by China's presence. So depending on exports has a short future for China, and that's all it has now.
Though for the United States, Israti says tariffs have, in some respects, insulated the country from China's economy and made it less vulnerable to China. Juliet Song, NTD News.
President Trump reduced joint military exercises with South Korea that kicked off Monday. In a Truth Social post Sunday, the president linking his order to what he characterizes as Seoul's refusal to help with Iran. President Trump said his order was tied to South Korea's refusal to help with Iran. Take a listen.
When I called him, I said, would you like to give us a little hand? We don't need help with Iran, but if you'd like, give us a hand with Iran. He said, no, thanks. And I said, wait a minute, we have 39,000 soldiers over there guarding you from Kim Jong-un, your next door neighbor, and you're not going to help us on a very easy military operation in Iran? That's strange. No, we'd rather not get involved. I say, well, why are we involved in helping you?
The Ultra Freedom Shield drills started Monday as scheduled and are set to run for 10 days. It's not yet clear how President Trump's order could affect training already underway. To discuss the U.S.-South Korea relationship, I spoke on Tiffany Meyer Tonight on Monday with retired Marine Colonel Grant Newsham. He's also a senior fellow at the Center for Security Policy and the author of When China Attacks. Now, President Trump has again expressed frustration with South Korea's position during the Iran war. Has that deteriorated the defense alliance and the broader relationship between Washington and Seoul? If so, how serious is that situation?
Well, it has somewhat, of course, because the South Koreans, said, well, no, we don't want to help you in the Persian Gulf or with Iran, without saying, even though we get a ton of our oil from the Middle East, we're very happy to have you all take care of this. The South Koreans are not the only ones who said this. Japan said it as well. And just about every other one of America's erstwhile friends said the same thing. The South Korean ambassador ought to go tell that to the Rotary Club in Youngstown, Ohio, and see how they take it. So this has caused some friction between the two allies. But this has been long in coming. This isn't the only thing that has caused some friction in the U.S.-South Korea relationship. South Korean leftists, starting just for reference, go back to Moon Jae-in, the president of South Korea from about 2017, 16 or so to 2022. And he was a hardcore leftist. And he was not very happy that the Americans, for example, put THAAD anti-missile batteries into South Korea. He got very close to China. He sort of put on a good face sometimes, but he was a hardcore leftist. Lee Jae-myung is even worse, if you can believe that. Lee has said, well, what China does to Taiwan, we don't really care. He's referred to U.S. forces in South Korea as an occupying force since his administration took over. They've been picking a fight with the Americans over management of the DMZ, the demilitarized zone between North and South Korea. They have also got a prime minister whose older brother has immense influence, said that the Trump administration is the apex of Yankee imperialism. The prime minister himself was imprisoned as a younger man for anti-American, anti-South Korea activities, as was the head of the then head of the Democratic Party of Korea. So this administration in South Korea and the previous one before President Yoon, who was impeached and imprisoned, these were very serious leftist administrations that did not really care all that much for the United States, even though most South Koreans do. So this latest sort of kerfuffle between President Trump and South Korea is not something that just came out of the blue.
Asian media outlets, meanwhile, are reporting that South Korean officials are hoping to ease tensions with the U.S. through diplomatic efforts. Do you think this can be resolved through diplomacy, or is President Trump expecting more from Seoul?
I think he expects more. I don't know what exactly the South Koreans would say about this, particularly given that track record. And they have never explained the comments that they have made about American forces as occupiers, the apex of Yankee imperialism. They've never explained that sort of thing. And I'm not sure that sweet talk is going to do it unless the Americans are just willing to accept it and say, okay, we understand, everything's fine. But in terms of addressing that underlying issue of hardcore South Korean leftists trying to take the country where most people don't want it to go, in South Korea or in the United States, I don't think that diplomacy is going to solve the problem, but rather some really changed behavior.
That's all for today's China in Focus. I'm Tiffany Meyer. If you have any feedback on the show or have something you'd like to see us cover, send us an email at chinainfocus@tt.com. We'd love to hear from you. Round the clock, original news.
Feels like one more slow goodbye. Dust and bones blue. Heavy dust and blues. Midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the land. Cheap motel glowing beside the road, another lost town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like muddy southern water where broken dreamers go. Oh Lord, hear me tonight underneath this pale moonlight. Every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Through the southern trees, like ghosts whispering old melodies, and every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, slowly drawing near. Oh Lord, hear my cry beneath this endless sky. Every dream I lose turns into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox drumming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon Whiskey Road, take me far away, past the empty bars, memories that stay. Oh Lord, let me roam till this tired soul feels home. Every road I choose turns into these blues. Cold wind whispers through the motel screen about all the things that could have been. Train tracks shining underneath the storm like old ghosts trying to stay warm. My guitar keeps singing soft and slow, things this world will never know. And every chord beneath the southern sky feels like one more long goodbye. Neon Whiskey Road, stretching through the night like a lonely river, disappearing out of sight. Every dream I lose, every town I roam, still searching for a place this heart can call home. Rain falls gently on a Delta town tonight. Street lights flicker in the fading light. Old men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. Rain on the Delta tonight, cold against my skin, like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall, like it already knows the rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pine wood trees, carrying old forgotten melodies. And somewhere down the darkened railway line, another lonely heart is losing time. Rain on the Delta tonight, slowly washing through like muddy river water, pulling me from you. Every road I roam, every dream I chase, still leaves these old blues written on my face. Smoke hangs heavy in this old blues bar. Street lights shimmer from passing cars. Bartender pouring another round slow as old train whistles echo below. My guitar hums with a tired sound, like a lonely soul still wandering around. Every broken memory comes alive tonight, under neon glow and candlelight. Smoky Delta night, burning low and warm, like an old blues record spinning through the storm. Every lonely mile, every faded sign still brings me back to the ghosts inside my mind. Rain taps softly on the window pane, trying hard to wash away calls your name, and every midnight feels the same. Southern wind moves through the trees so slow, like secrets only lonely hearts know. And somewhere far beyond this town, another tired sun is going down. Smoky Dale tonight, hold me till the dawn, like the last old memory before it's gone. Every road I ride, every dream I chase, still leaves your shadow in this empty place. Cold wind blowing through the Dale tonight, rusty street lamp barely shining light, old six-string crying by the motel sign, like a broken prayer lost somewhere in time. River keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These crossroads after midnight keep calling out my name, through empty southern highways and neon-colored rain. Oh Lord, can you hear this old guitar and feel every road I ride leaves another scar inside. Bartender wipes the dust from empty glass, watching lonely shadows slowly pass. Jukebox humming low in smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. And every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads, late at night alone, cold wind blowing through flesh and bone, street lights trembling underneath the rain, like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul, like a dark old river, too deep to control. Oh Lord, hear my prayer floating through the southern air. Every road I choose leads into these blues. Smoke drifts slowly through the neon light, while lonely strangers drink away the night. Bartender says some wounds don't heal, and tonight I finally know how that feels. Train tracks humming underneath the storm, like tide ghosts trying to stay warm. And every note my guitar softly cries feels like one more beautiful goodbye. Crossroads, midnight blues, hold me till the dawn, like the fading echo of an old sad song. Every dream I chase, every love I lose, still leaves me standing in these midnight blues. Delta moon hanging low above the river tonight. Silver reflections dancing in the pale light. Old wooden porch creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair. Southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer floating through the night. Oh Lord, hear my soul trying hard to stay whole. Every road I choose leads back to these blues. Rain clouds gather slowly over county lines, like old regrets buried deep in time. My guitar hums with a worn-out sound, like a tired man still drifting around. Oh, radio playing from the room inside, songs about lovers who never survive. And somewhere far beyond the riverbed, another lonely night begins again. Delta moonlight blues rolling through my veins, like muddy southern water after endless rain. Every dream fades slow, like smoke beneath the moon. Still singing these blues to an old forgotten tune. softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight underneath this lonely yellow light. Dust and bones blues running through my soul, like an old black river nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts begging me to stay. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blues, heavy as the rain, like cold scars hiding deep beneath the pain. Every road I ride, every town I choose, still leaves me stranded with these dust and blues. Midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the land. around carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on, like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like very southern water where broken dreamers go. Oh Lord, hear me tonight underneath this pale moonlight. Every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Through the southern trees, like ghosts whispering old melodies. And every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, slowly drawing near. Oh Lord, hear my cry beneath this endless sky. Every dream I lose turns into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon whiskey road, take me far away, past the empty bars, memories that stay. Feels home. Every road I choose turns into these blues. Train tracks shining underneath the storm like old ghosts trying to stay warm. My guitar keeps singing soft and slow, things this world will never know. And every chord beneath the southern sky feels like one more long goodbye. Neon Whiskey Road, stretching through the night like a lonely river, disappearing out of sight. Every dream I lose, every town I roam, still searching for a place this heart can call home. Rain falls gently on a Delta town tonight. Street lights flicker in the fading light. Old men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. Rain on the Delta tonight, cold against my skin, like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall, like it already knows the rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pinewood trees, carrying old forgotten melodies. And somewhere down the darkened railway line, another lonely heart is losing written on my face. Smoke hangs heavy in this old blues bar. Street lights shimmer from passing cars. Bartender pouring another round slow as old train whistles echo below. My guitar hums with a tired sound, like a lonely soul still wandering around. Every broken memory comes alive tonight, under neon glow and candlelight. Smoky Delta night, burning low and warm, like an old blues record spinning through the storm. Every lonely mile, every faded sign still brings me back to the ghosts inside my mind. Rain taps softly on the window pane, trying hard to wash away the pain. But every melody still calls your name, and every midnight feels the same. Southern wind moves through the trees so slow, like secrets only lonely hearts know. And somewhere far beyond this town, another tired sun is going down. Smoky Delta night, hold me till the dawn, like the last old memory before it's gone. Every road I ride, every dream I chase, still leaves your shadow in this empty place. built tonight. Rusty street lamp barely shining light. Old six-string crying by the motel sign, like a broken prayer lost somewhere in time. River keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These crossroads after midnight keep calling out my name, through empty southern highways and neon-colored rain. Oh Lord, can you hear this old guitar and feel every road I ride leaves another scar inside. Bartender wipes the dust from empty glass, watching lonely shadows slowly pass. Jukebox humming low in smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. Every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside, like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads, late at night alone, cold wind blowing through flesh and bone, street lights trembling underneath the rain, like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul like a dark old river, too deep to control. Oh Lord, hear my prayer floating through the southern air. Every road I choose leads into these blues. Smoke drifts slowly through the neon light, while lonely strangers drink away the night. Bartender says some wounds don't heal, and tonight I finally know how that feels. Train tracks humming underneath the storm, like tide ghosts trying to stay warm. And every note my guitar softly cries feels like one more beautiful goodbye. Crossroads, midnight blues, hold me till the dawn, like a fading echo of an old sad song. Every dream I chase, every love I lose, still leaves me standing in these midnight blues. Delta moon hanging low above the river tonight, silver reflections dancing in the pale light. Old wooden porch creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair, southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer floating through the night. Oh Lord, hear my soul trying hard to stay whole. Every road I choose slowly over county lines, like old regrets buried deep in time. My guitar hums with a worn-out sound, like a tired man still drifting around. Oh, radio playing from the room inside, songs about lovers who never survive. And somewhere far beyond the river bend, another lonely night begins again. Delta moonlight blues rolling through my veins, like muddy southern water after endless rain. Every dream fades slow, like smoke beneath the moon. Still singing these blues to an old forgotten tune. Doves blow softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight underneath this lonely yellow light. Dust and bones blues running through my soul, like an old black river nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts stay. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blue, heavy as the rain, like old scars hiding deep beneath the pain. Every road I ride, every town I choose, still leaves me stranded with these dust and blues. Midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the land. Cheap motel glowing beside the road, another lost town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky. Feels like one more long goodbye. Lonely train blues tonight, slowly drifting on, like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like muddy southern water where broken dreamers go. Oh Lord, hear me tonight underneath this pale moonlight. Every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Through the southern trees, like ghosts whispering old melodies, and every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, the sky. Every dream I lose turns into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon whiskey road, take me far away, past the empty bars, memories that stay. Home, every road I choose turns into these blues. Cold wind whispers through the motel screen about all the things that could have been. Train tracks shining underneath the storm like old ghosts trying to stay warm. My guitar keeps singing soft and slow, things this world will never know. And every chord beneath the southern sky feels like one more long goodbye. Neon whiskey road, stretching through the night like a lonely river, disappearing out of sight. Every dream I lose, every town I roam, still searching for a place this heart can call home. Streetlights flicker in the fading light. Old men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. Rain on the Delta tonight, cold against my skin, like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall, like it already knows the rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pine wood trees, carrying old forgotten melodies. And somewhere down the darkened railway line, another lonely heart is losing time. Rain on the Delta tonight, slowly washing through like muddy river water, pulling me from you. Every road I roam, every dream I chase, still leaves these old blues written on my face. Smoke hangs heavy in this old blues bar. Streetlights shimmer from passing cars. Bartender pouring another round slow as old train whistles echo below. My guitar hums with a tired sound, like a lonely soul still wandering wandering around. Every broken memory comes alive tonight, under neon glow and candlelight. Smoky Dale tonight, burning low and warm, like an old blues record spinning through the storm. Every lonely mile, every faded sign still brings me back to the ghosts inside my mind. Rain taps softly on the window pane, trying hard to wash away the pain. But every melody still calls your name, and every midnight feels the same. Southern wind moves through the trees so slow, like secrets only lonely hearts know. And somewhere far beyond this town, another tired sun is going down. Smoky Dale tonight, hold me till the dawn, like the last old memory before it's gone. Every road I ride, every dream I chase, still leaves your shadow in this empty place. Cold wind blowing through the Dale tonight, rusty street lamp barely shining light. Old six-string crying by the motel sign, like a broken prayer lost somewhere in time. River keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These crossroads after midnight keep calling out my name, through empty southern highways and neon-colored rain. Oh Lord, can you hear this old guitar and feel every road I ride leaves another scar inside. Bartender wipes the dust from empty glass, watching lonely shadows slowly pass. Jukebox humming low in smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. And every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads late at night alone, cold wind blowing through flesh and bone, street lights trembling underneath the rain, like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul, like a dark old river, too deep to control. Oh Lord, hear my prayer floating through the southern air. Every road I choose leads into these blues. the night. Bartender says some wounds don't heal. And tonight I finally know how that feels. Train tracks humming underneath the storm, like tide ghosts trying to stay warm. And every note my guitar softly cries feels like one more beautiful goodbye. Crossroads, midnight blues, hold me till the dawn, like the fading echo of an old sad song. Every dream I chase, every love I lose, still leaves me standing in these midnight blues. Delta moon hanging low above the river tonight. Silver reflections dancing in the pale light. Old wooden porch creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair. Southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer floating through the night. Oh Lord, hear my soul trying hard to stay whole. Every road I choose leads back to these blues. Slowly over county lines, like old regrets buried deep in time. My guitar hums with a worn-out sound, like a tired man still drifting around. Oh, radio playing from the room inside, songs about lovers still singing these blues to an old forgotten tune. Dust blows softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight underneath this lonely yellow light. Dust and bones blues running through my soul, like an old black river nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts begging me to stay. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blues, heavy as the rain, like cold scars hiding midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the land. Cheap motel glowing beside the road, another lost town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on, like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like muddy southern water where broken dreamers go. Oh Lord, hear me tonight underneath this pale moonlight. Every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Through the southern trees, like ghosts whispering old melodies, and every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, slowly drawing near. Oh Lord, hear my cry beneath this endless sky. Every dream I lose turns into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon whiskey road, take me far away, past the empty bars, memories that stay. Oh Lord, lights flicker in the fading light. Old men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. Rain on the Delta tonight, cold against my skin, like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall, like it already knows the rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pinewood trees, carrying old forgotten melodies. And somewhere down the darkened railway line, another lonely heart is losing time. Rain on the Delta tonight, slowly washing through like muddy river water, pulling me from you. Every road I roam, every dream I chase, still leaves these old blues written on my face. Smoke hangs heavy in this old blues bar. Street lights shimmer from passing cars. Bartender pouring another round slow as old train whistles echo below. My guitar hums with a tired sound, like a lonely soul still wandering around. comes alive tonight under neon glow and candlelight. Smoky Delta night, burning low and warm, like an old blues record spinning through the storm. Every lonely mile, every faded sign still brings me back to the ghosts inside my mind. Rain taps softly on the window pane, trying hard to wash away the pain. But every melody still calls your name, and every midnight feels the same. Southern wind moves through the trees so slow, like secrets only lonely hearts know. And somewhere far beyond this town, another tired sun is going down. Smoky Delta night, hold me till the dawn, like the last old memory before it's gone. Every road I ride, every dream I chase, still leaves your shadow in this empty place. Cold wind blowing through the Delta night, rusty street lamp barely shining light. Old six-string crying by the motel sign, like a broken prayer lost somewhere in time. River keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These crossroads after midnight keep calling out my name, through empty southern highways and neon-colored rain. Oh Lord, can you hear the this old guitar and feel every road I ride leaves another scar inside. Bartender wipes the dust from empty glass, watching lonely shadows slowly pass. Jukebox humming low in smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. And every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads, late at night alone, cold wind blowing through flesh and bone, street lights trembling underneath the rain, like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul like a dark old river, too deep to control. Oh Lord, hear my prayer floating through the southern air. Every road I choose leads into these blues. Smoke drifts slowly through the neon light, while lonely strangers drink away the night. Bartender says some wounds don't heal, and tonight I finally know how that feels. Train tracks humming underneath the storm, like tide ghosts trying to stay warm. And every note my guitar softly cries feels like one more beautiful goodbye. Crossroads midnight blues hold me till the dawn, like a fading echo of an old sad song. Every dream I chase, every love I lose, still leaves me standing in these midnight blues. Delta moon hanging low above the river tonight, silver reflections dancing in the pale light. Old wooden porch creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair, southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer floating through the night. Oh Lord, hear my soul trying hard to stay whole. Every road I choose leads back to these blues. Gather slowly over county lines, like old regrets buried deep in time. My guitar hums with a worn-out sound, like a tired man still drifting around. Old radio playing from the room inside, songs about lovers who never survived. to moonlight blues, rolling through my veins like muddy southern water after endless rain. Every dream fades slow like smoke beneath the moon. Still singing these blues to an old forgotten tune. Dust blows softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight underneath this lonely yellow light. Dust and bones blues running through my soul like an old black river nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts begging me to stay. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blues, heavy as the rain, like old scars hiding Midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the land. Cheap motel glowing beside the road, another lost town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway, with nowhere left to go. Oh Lord, hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned, and every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on, like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like muddy southern water where broken dreamers go. Oh Lord, hear me tonight underneath this pale moonlight. Every road I choose leads back to these blues. Dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Through the southern trees, like ghosts whispering old melodies. And every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, slowly drawing near. Oh Lord, hear my cry beneath this endless sky. Every dream I lose turns into these blues. Neon signs glowing through the midnight rain. Every small town highway starts to look the same. Cheap whiskey bottle resting by the sink, while lonely hearts sit quietly and think. Old jukebox humming in the corner bar, playing songs for people carrying scars. Smoke hangs heavy underneath the light, like broken souls hiding from the night. Neon whiskey road, take me far away, past the empty bars, memories that stay. Oh Lord, let me roam till this tired soul feels home. Every road I choose turns into these blues. scream about all the things that could have been. Train tracks shining underneath the storm like old ghosts trying to stay warm. My guitar keeps singing soft and slow, things this world will never know. And every chord beneath the southern sky feels like one more long goodbye. Neon whiskey road, stretching through the night like a lonely river, disappearing out of sight. Every dream I lose, every town I roam, still searching for a place this heart can call home. Rain falls gently on a Delta town tonight. Street lights flicker in the fading light. Old men drinking slowly at the bar, talking about dreams that never got far. Smoke rises softly through the quiet room, like tired flowers trying hard to bloom. And every lonely blues song on the radio sounds like somewhere I used to know. Rain on the Delta tonight, cold against my skin, like old broken memories coming back again. Oh Lord, hear my cry underneath this southern sky. Every love I lose turns into these blues. My guitar rests heavy against the wall, like it already knows the rise and fall of every lonely soul that passes through, searching for something real and true. Wind moves softly through the pine wood trees, carrying old forgotten melodies. And somewhere down the darkened railway line, of the lonely heart is losing time. Rain on the Delta tonight, slowly washing through like muddy river water, pulling me from you. Every road I roam, every dream I chase, still leaves these old blues written on my face. Smoke hangs heavy in this old blues bar. Street lights shimmer from passing cars. Bartender pouring another round slow as old train whistles echo below. My guitar hums with a tired sound, like a lonely soul still wandering around. Every broken memory comes alive tonight, under neon glow and candlelight. Smoky Delta night, burning low and warm, like an old blues record spinning through the storm. Every lonely mile, every faded sign still brings me back to the ghosts inside my mind. Rain taps softly on the window pane, trying hard to wash away the pain. But every melody still calls your name, and every midnight feels the same. Southern wind moves through the trees so slow, like secrets only lonely hearts know. And somewhere far beyond this town, another tired sun is going down. Smoky Delta night, hold me till the dawn, like the last old memory before it's gone. Every road I ride, every dream I chase still leaves your shadow in this empty place.
Cold wind blowing through the Dale tonight. Rusty street lamp barely shining light. Old six-string crying by the motel sign, like a broken prayer lost somewhere in time. River keeps rolling dark and slow, carrying secrets only drifters know. Every heartbeat echoes through the rain, like an old freight train full of pain. These crossroads after midnight keep calling out my name, through empty southern highways and neon-colored rain. Oh Lord, can you hear this old guitar and fear? Every road I ride leaves another scar inside. Bartender wipes the dust from empty glass, watching lonely shadows slowly pass. Jukebox humming low in smoky air, playing songs for souls beyond repair. Moonlight falling on these worn-out boots, while silence hangs beneath the roof. And every chord I play tonight alone feels like searching for a place called home. Train wheels crying near the riverside, like the ghosts of dreamers left behind. Smoke keeps dancing underneath the blue, while this old world keeps breaking in two. These crossroads after midnight still pull me through the storm, like distant thunder rolling before the night is gone. Oh Lord, stay near tonight beneath this fading light. Every dream I knew turns back into the blue. Standing at the crossroads, late at night alone. Cold wind blowing through flesh and bone. Street lights trembling underneath the rain. Like tired hearts learning how to break again. Oh, black guitar hanging by my side, full of songs I've always tried to hide. Every mile behind me feels the same. Every broken town still knows my name. Crossroads, midnight blues, calling out my soul. Like a dark old river, too deep to control. Oh Lord, hear my prayer floating through the southern air. Every road I choose leads into these blues. Smoke drifts slowly through the neon light, while lonely strangers drink away the night. Bartender says some wounds don't heal, and tonight I finally know how that feels. Train tracks humming underneath the storm, like tide ghosts trying to stay warm. And every note my guitar softly cries feels like one more beautiful goodbye. Crossroads, midnight blues, hold me till the dawn. Like the fading echo of an old sad song. Every dream I chase, every love I lose, still leaves me standing in these midnight blues. Delta moon hanging low above the river tonight. Silver reflections dancing in the pale light. Old wooden porch creaking underneath my feet, while distant thunder rolls through the summer heat. My cigarette burns slow beside this rocking chair. Southern wind moving softly through the air, and every lonely cricket singing in the dark feels like another memory inside my heart. Delta moonlight blues, soft and low tonight, like an old forgotten prayer floating through the night. Oh Lord, hear my soul trying hard to stay whole. Every road I choose leads back to these blues. Rain clouds gather slowly over county lines, like old regrets buried deep in time. My guitar hums with a worn-out sound, like a tired man still drifting around. Oh, radio playing from the room inside, songs about lovers who never survive. And somewhere far beyond the river bend, another lonely night begins again. Delta moonlight blues rolling through my veins, like muddy southern water after endless rain. Every dream fades slow, like smoke beneath the moon. Still singing these blues to an old forgotten tune. Doves blow softly through this tired southern town. Old pickup trucks and faded signs breaking down. Neon buzzing outside the corner store, like memories I can't escape anymore. My boots feel heavy from these endless miles. Too many heartbreaks hidden behind smiles, and every cigarette burns slower tonight underneath this lonely yellow light. Dust and bones blues running through my soul like an old black river. Nobody can control. Oh Lord, can't you see what these old roads did to me? Every dream I lose turns into dust and blues. Old bartender says the night's still young, but these tired lungs have sung enough songs. Train whistles echo somewhere far away, like ghosts begging me to stay. My guitar strings hum with a cracked old sound, like a worn-out man still drifting around. And every note beneath this southern sky feels like one more slow goodbye. Dust and bones blues, heavy as the rain, like cold scars hiding deep beneath the pain. Every road I ride, every town I choose, still leaves me stranded with these dust and blues. Midnight train rolling through the rain, steel wheels crying like human pain. Coffee grows colder beside my hand as I watch the storm move across the land. Cheap motel glowing beside the road, another lost town carrying heavy souls. Old radio singing soft and low, songs about places I'll never know. Lonely train blues tonight, rolling through my soul like an endless highway.
Hear that sound as the rain keeps falling down. Every passing tune sings these lonely blues. Dusty suitcase lying by the door. I've seen too many towns before. Every neon light starts looking the same. Every heartbreak carries your name. My old guitar still understands the things this world never planned. And every chord beneath the moonlight sky feels like one more long goodbye. Lonely train blues tonight, slowly drifting on, like the whistle of a train just before the dawn. Every road I take, every mile I lose, still leads me back to these lonely blues. Rain keeps falling on the Mississippi road. Old guitar singing like a weary soul. Smoke from my cigarette fades into the night, while neon shadows dance beneath the pale light. Cheap whiskey burning slowly in my chest, trying to calm a heart that never rests. Every passing train sounds lonely and low, like memories from a life long ago. These midnight river blues keep pulling me down slow, like muddy southern water where broken dreamers go. Oh Lord, hear me tonight underneath this pale moonlight. Every road I choose leads back to these blues.
dusty boots walking through an empty town. Every lost soul keeps looking down. Oh, jukebox crying in the corner bar, playing songs for hearts left scarred. Wind blows softly through the southern trees, like ghosts whispering old melodies. And every note my guitar plays tonight feels like holding on to fading light. These midnight river blues run deeper every year, like thunder in the distance, slowly drawing near. Oh Lord, hear my cry beneath this endless sky. Every dream I lose turns into these blues.
So it's very exciting, and I think we'll be here for a long time. This will be here long after we're gone. No matter what happens with the world, this is not moving. This will take any kind of shot, but it's something we really needed badly for the helicopters. But we get a secondary use, and that's we can have some beautiful events here, including the greeting of people from foreign countries. They'll be very impressed. Right now, they're not impressed when they see coming in on asphalt, and they're not impressed. It was never very impressive, but they're going to go the opposite. And one of the reasons, by the way, for the last number of years, no tents have been used, because tents are very dangerous. Tents are made out of plastic or canvas, and they don't stop even the smallest of ammunition or bullets, not even the smallest. Ours will stop. You take AK-47s, you take the most powerful, it laughs at it. I was saying to one of the military guys, how does it do with an AK-47? He goes, up, meaning it can take a lot more, including drones. So I thought this would be a little different kind of a news conference, but I found out the guys were showing me this. We were going to sign this privately and just put it in. I said, this is something I think the press should see, and I hope you liked it. It's going to be finished. What do you think? What do you think? We're making the 21st. 21st? Oh, yes, sir. So we might make it for president? That would be great. If we did this by the 21st, he's coming the 20th. That'd be nice. Not imperative, but it would be very nice to have it done. It's pretty amazing to do it that quickly. Thank you all very much. Go have a good time. I think it's a great story, and these people are a big part of that. So all these workers, I've watched them from windows, and they are working at 6 in the morning till 12 o'clock in the night. Same thing with the military complex right over here. They're working from 6:30 in the morning is late. If they get at 6:30, that's like almost late, and they work till 11:30, 12 o'clock every night. That's why you see it going up so fast and so properly. But I want to give a lot of credit to the construction crews, because there's nobody like them. There's nobody like them. Great job. You've done fantastic. Thank you, everybody, very much. Thank you.
Are you exchanging written letters with Kim Jong-un?
I can't tell you that. But I get along with him. And you know what? The fact that I get along with him, that's a good thing, not a bad thing. He has 57 very powerful nuclear weapons. Should have never allowed it to happen. They should have never allowed it. If I were president, I wouldn't have allowed it. But he's got them. I get along with him very well. I can't let Iran have a nuclear weapon. And I know Kim Jong-un very well, and he's going to be fine. As long as we have a smart president, he's going to be fine. If we have a dumb president, then he's probably not going to be so fine.
Are you expecting to meet with him later this year?
Yeah, I will be.
Mr. President, today is about American production. Can you give us any update on your negotiations with Canada
Yeah, we had a very good conversation with the Prime Minister last night, and we've come to a deal with Canada. As you know, the 50% tariffs across the board were going on against Canada today, and they called yesterday and they gave us the points that we had to have. Very fair deal for both. The tariffs will be non-existent for our farmers. Our farmers were paying tremendous tariffs into Canada, and those tariffs are going to be totally eviscerated, down to zero.
Is the U.S. going to lower tariffs on Canadian autos or
We're doing certain things. We're got to give something, and we're doing certain things. They were paying a high number. We're reducing it a little bit. It's good for everybody. But our farmers are going to be thrilled. Our manufacturers are going to be thrilled. And basically, we have no tariffs going into Canada anymore. Canada was charging us tremendous tariffs. We no longer have any tariffs. And what I was able to do is we put, as you know, under the new tariff, I guess you'd call it the new tariff schedules that we came out with. They were going to get a 50% tariff on everything starting today.